Ladies and gentlemen, we will be starting in 5 minutes. If you can please take your seats. Thank you. Ladies and gentlemen, if we can please take your seats, we will be commencing. Welcome, welcome everyone. Welcome, sir. Please take your seats. The gentleman at the back, we will have a networking session at the coffee break. Good morning, everyone. All right, let us take a moment for the recitation of the Holy Quran.
Bismillahir Rahmanir Rahim. Qul ya ayyuhal kafirun. La تعبدون ولا أنتم عابدون ما أعبد ولا أنا عابد ما عبدتم ولا أنتم عابدون ما أعبد لكم دينكم ولي دين.
Ladies and gentlemen, please rise for the national anthem. Thank you very much, everyone, and good morning. Good morning. Assalamu alaikum. कैसे हैं आप सब? मेरा नाम अलेक्सांड्रा है. मुझे बहुत खुशी महसूस हो रही है कि मैं आज कराची में इस इवेंट को होस्ट करा रही हूँ. So for those of you who didn't grasp my Urdu, my name is Alexandra Topalian. I am your MC for today, your Master of Ceremonies, and it is a pleasure to be here today amongst you in Karachi for the 4th edition of the Digital Banking and Payments Summit and Expo 2023. So ladies and gentlemen, I am so happy to be here. And what a time to be in the financial and services industry, The amount of digital trends that are coming to disrupt the industry are real. The new features that are being released are regularly coming to disrupt this industry. And not only that, we have the startups and the fintechs breaking into the scene and causing a lot of havoc in the traditional financial institutions. So what a time, ladies and gentlemen. And so without further ado, I would like to call upon the CEO of TerraBiz, Mr. Hamza Wasi Hashmi.
Bismillahirrahmanirrahim. Ladies and gentlemen, Assalamu alaikum. On behalf of TerraBiz and UBL, I would like to extend a very warm welcome to all the distinguished speakers. We have a galaxy of speakers today who are going to enlighten us throughout the day on the key themes of digital banking, payments, and fintechs. And we are organizing this conference. This is the 4th edition, and we are hugely supported in this endeavor from the word go by United Bank Limited. So I would like all of you to please extend a very warm applause for the UBL Bank. So they, in the thought process, in the design and development of the theme, the sharing of the vision. So we would like to also acknowledge the support we received from various other partners, and so you can see a whole list of supporters. But before that, I would also like to first of all take a moment to express my profound thanks to Dr. Ishrat Husain, who is our chief guest. Thank you, sir, for being here. Dr. Saab has spearheaded the key reforms, fundamental reforms at the FX regulator, and the institution is one of the best regulated entities in Pakistan, thanks largely to his visionary leadership, and that has been sustained all along. As you may all be knowing that State Bank of Pakistan, after a very serious process, have issued licenses to 5 entities for the digital bank, and that is going to open a new chapter in the digital banking. Can we take that? Okay. So these are the exciting times for the industry, and we look forward to have a discourse on these topics throughout the day. I'm profoundly grateful to our international speaker, Ivan Minuki is here. Ivan, I would like you to rise from your seat and be acknowledged. So big round of applause for Ivan Minuki. He's going to enlighten us on a very important topic on which he has written a book also. He had been heading the digital banking group for Emirates NBD, and established the first digital bank, E10, in the Gulf. So Ivan, we're all very excited, and we're looking forward to your talk, and also to your workshop that you're going to hold the next day, tomorrow, for which we have a house full of eager participants. A very important session to follow, because my speech is a welcome speech as well as some intro about the conference. So Alexandra Topalian, our ACE moderator and master of ceremonies, will be conducting an engaging conversation with Mr. Shahzad Dada, one of the celebrated chief executives in digital bank leadership. The bank has earned global laurels from the likes of Asia Money as the best digital bank and the best overall bank
to your talk and also to your workshop
will be
that you're going to hold
about
the next day, tomorrow,
about his own,
for which we have
vision
a
and
house full
experiences, how the
of
unbanked
eager participants.
population of Pakistan can be
very,
included, and what
easy
banking
and,
industry is doing about it.
nice
So,
speeches,
Shazad, thank you very much for being here,
as
and we look forward to your
some intro
session.
about the conference.
Moving on, we have our keynote speaker by Mr. Nadeem Husain. Nadeem Saab has been, involved with the DigiBAP initiative from, since its first ever such summit. And
Pakistan.
I mean, his thoughts, I have noticed that have been constantly evolving and shaping the narrative.
Thank you very much for being here as we look forward to some
thought process and
moving
thought
on, we have
providing thought leadership, not only in Pakistan but also abroad. So look forward to your talk, Nadeem. Thank you for all the support also. We have a very distinguished speaker, especially who has flown in from Dubai last night, Mr. Irfan Lodi. Irfan Lodi Saab, as we have already received much traction and feedback from the communication that had been going on in the industry for this conference. We have received great feedback from the market. People are very excited to learn and gain insights as to what Mashriq Bank, which has just won the license of establishing digital retail bank in Pakistan. It's such a huge, credible entity in the Gulf. Many Pakistani diasporas are working there at senior positions, and so Irfan Saab will be a part of a high-level leaders panel where Mr. Najib Rahman will be, have an interaction with some distinguished leaders, including Irfan Saab. So welcome on board, Irfan Saab. Thank you. So, Mr. Fernando Morillo, I also, welcome you, Fernando, because as soon as Mashriq Bank, it was learned that has been issued the license. So immediately I read about, the vision of Mashriq Bank, and the statement of Mr. Fernando, had been very, visionary and I would say positive, long-term. So it's not a game where some entity comes in for a short while. Mashriq being the one of the largest banking entities, organizations, it's very, good news for the industry in Pakistan, where such a strong background holder will be in Pakistan and doing the operations without bricks and mortars. And what a credible team that they have built, and we are very excited that he is chairing a session on the CXO panel, where distinguished panelists will be sharing their thoughts. Moving on, we have a digital payment panel. As you can see, we have a galaxy of speakers, a big panel, and we look forward to an exciting discussion. Especially, I would like to mention Mr. Mohammad Yar Hiraj, because he's also especially flown in from Lahore for this. So, Hiraj Saab, thank you for being here. We all know that Suhail Jawad Saab is one of the key policymakers at State Bank. So he will be chairing a session, and then he'll also be delivering a keynote. So that is the session. So moving on. So Michael Engel, and then we have a unique session, a fireside chat. Muzaffar Saab is a prominent banker and a financial services leader, and he had this wonderful human, I would not say wonderful, but a very unique life-saving experience, and this story is worth sharing, and he will be engaged in a very candid conversation by Mr. Adnan Rizvi of KPMG. Okay. So, that panel will follow, and moving on. So, Probably people are here familiar with Mr. Robin Speculant. That will be a video talk especially recorded for fourth DigiBAP. We received it last night from Singapore. So Robin had been here at the last conference, and since many here know that he has been keenly involved with the management of DBS Bank. So with the Chief Executive Piyush Gupta, he has come out with one of the best-selling books on Amazon for the digital transformation, successful digital transformation the bank has had in Singapore and globally won the accolades for being the world's best digital bank. So the digital transformation journey has been officially covered by Robin, and he teaches a course at Harvard, and he was given access to the key policymakers of the banking transformation. So all these key insights that he has encapsulated in his book will be presented in a short 15-minute video talk, especially made for this session. So we are also distinguished to have Farhan Niaz, who is a customer experience authority, and he has served AIDB Bank for many, many years, besides holding positions at different organizations. So customers' experience is the key, which does make all the difference. After all, we are all humans, and despite whatever technology plays whatever huge role, it's ultimately it ends up at the human interaction, whether it is through technology interface or through person to person. So he's an experience. He will also dwell upon the story of how he got AIDB Bank winning this distinction of being the best customer experience bank from the rank of 23rd to being declared #1. Right. It's an interesting topic. I would like to acknowledge the role Mr. Najib Rahman has played with me in shaping of this conference. And so Generation Z is, does not need any introduction or coaching in the use of new age technologies, and how banks, who had been operating in the traditional, marketing and engagement strategies, how would they respond to the demands by this young generation, which has the power to spend and which knows its rights and has unsatiated, unlimited demands. Okay. And lastly, we have our partners, Chain Store Association of Pakistan. It is a conglomerate of about 200 of the top brands we have in Pakistan. So Mr. Asfandiyar Farooq, so Asfandai, Assalamu alaikum. So he will be enlightening us about for the retailer's perspective. The organization has members, distinguished members such as Khadi and Bonanza and Al Karam and whatnot. So Mr. Asfandiyar Farooq is the co-founder of Chain Store Association of Pakistan. We also produce a big-time retail summit with them, and he will be giving the perspective of retail business owners, because retailers now only sell from the bricks and mortar store, but also increasingly online and through e-commerce. And banking and fintech is a core, enabler for that. So he will be, his talk also will be of much interest to our banking fraternity and our fintech and payment professionals. So he will be representing the organization comprising of the top 200 brands of Pakistan. So as you can see, we have a full agenda, fully packed agenda. I will not take much of your time. The names of the sponsors and the partners are here for all of you to appreciate, because without their support, this event would not have been possible. And particularly in the end, though I have been repeatedly asked not to do that, but I think it's my moral responsibility to at least take the name of one individual who has always been, at the back of my call to support this initiative. And his name is Mr. Sharjeel Shahid of UBL, the Group Executive of Digital Banking. Sharjeel Sahab, I would request you to please rise from your seat at least once so that people could know. Big round of applause. Thank you. So with this, I would like to, thank you everyone once again, all the distinguished speakers and partners, and all the distinguished delegates. We will ensure that the learnings today. I mean, you are provided all the learnings unhindered, and we facilitate that day for you, and we look forward to an exciting day ahead. Thank you. Thanks a lot.
Thank you, Hamza, for your very warm welcome and for putting this very important platform together. Thank you. All right, moving on. Before we begin, just a few housekeeping issues. We have here a hashtag DigiBAP23. So if you take photos, if you would like to comment on social media, we do have giveaways for those who post. And so please feel free to do that on social media, whether it's LinkedIn or Twitter. Next up is our first inaugural keynote speaker on the top trends shaping fintech and banking in Pakistan. So please put your hands together for Mr. Nadeem Husain of Rakami and Planet Group. And he will share with us his global insights in the local context, offering a unique glimpse into the future and making sense of the trends that are shaping our industry. Mr. Nadeem, please join me.
Assalamualaikum, Khawateen Hazrat. Good morning, ladies and gentlemen. It's indeed my pleasure to be here. This is the first conference after the award of the digital bank licenses. And I think it's a very opportune time, given the galaxy of speakers we have. Especially, I look forward to hearing from our international partners and Dr. Ishrat Husain. Dr. Ishrat Husain has been instrumental in creating regulations which have moved the needle. We started off with the regulations for the microfinance banks. Pakistan is one of the few countries which had separate regulations for the microfinance banking segment, and we have close to 8.5 million active loan customers as part of that regulation. About half of that, half were MFIs from the SECP. This followed by the branchless banking regulations. Those again helped create the biggest impetus in creating companies like Easy Paisa, Jazz, and subsequently the other players who have come into this. And those entities together move around 8 to 12% of Pakistan's GDP through this enabling environment that was created. This followed by the PSO, PSP licenses, which were not as successful because immediately after that you got the EMI licenses, and we are seeing some success in the EMI license framework, participants, especially from the customer journey perspective. And now, the latest licenses that have been awarded are the digital bank licenses. And very early days, 5 licenses, but the hope is that these 5 licenses will help move the needle. And why do I say that? Because as far as financial inclusion is concerned, as far as digitalization is concerned compared to a cash economy, and have no doubt we are a cash economy, we have 3.5 to 3.4 trillion rupees circulating in a system which don't see the light of any bank account. And it's not easy making that transformation, making that behavior change from a cash economy to a digital economy. So what I've been asked to do is talk about what I see are local trends, some of which are influenced by global trends. Some are based because of what we are. We are fairly unique in a developing country. No developing country has as much cash in circulation as a percentage of money printed like we do. We remain a cash economy. We remain an economy which the bulk of the transactions are not captured by any tax framework. We remain an economy where the SME sector, while employing a large percentage of population, receives less than now 6% of total lending stock If I compare the total lending stock, SME is less than 6%, used to be 17%. But things are changing. And things are changing not from the conventional banking sector. And, I am most popular with my friends who are CEOs of conventional banks because of the acute, what I call positive or constructive criticism, I lay on them because I believe commercial banks also have the ability to move the needle, but have had singularly failed to do so. But the opportunity still exists. The first trend I see, and it's already started to happen, is embedded finance. Embedded finance globally has taken off, it is huge. In Pakistan, we're just seeing the tip of the iceberg. But the opportunity is huge. Why? Because the entire commercial banking industry, the 34 commercial banks, the 8 Islamic banks, put together have less than 2 million active loan customers in a country of 220 million people. Less than, if I'm being generous, it's about 1.2, 1.3 active loan customers. So clearly an opportunity for players who want to be able to start with the lending process. This embedded finance, we're already seeing elements of it in entities regulated by the SECP, where buy now, pay later loans are becoming much more popular. There are entities which are doing 30,000 loans a day disbursement with a revised customer journey. So we know the opportunity exists. Unfortunately, the buy now, pay later and the nano lending business, although regulated, has a large swath of players outside the regulated framework with predatory lending rates. So that's a challenge right now. The total number of active loan customers in Pakistan, again, is about 10 million. Again, so, financial institutions who really want to move the needle, have to look at the lens of the lending framework. Now, the counter argument could be, look at where we are in our economic cycle, potential default rate, reduction in purchasing power. But my sense is, out of the 220 million people, even if eligible customers are probably about 50, 70, 80 million. And we are sitting at active loan customers of 10 million, 8.5 in the world of microfinance. And out of that 8.5, probably around 3 million now are nano lenders, nano borrowers, loans of less than 5,000 rupees for a week or 1 month. As e-commerce started taking off, we're probably around $4 to $5 billion, dollars of the e-commerce. The the introduction of new companies which are capturing data of the Kiryana store, the superstore, the pharmacies from the FMCG providers. Providers who are capturing data for input providers to the agriculture sector, from major providers of fertilizer, DAP and seeds. So this embedded finance we're seeing globally is a function of data capture. And the ability to lend based on data points, starting off with closed loop lending and then moving on to obviously beyond that. My sense is, this number of 10 million active loan customers between the digital banks, like 5, the commercial banks, which will now, my sense is, wake up and be major competitors for potential lending, because they are the people with the lowest cost of funds. And they are the people with tons and tons of existing data. And the new lenders which are being financed, the NBFCs, the NBFIs by the ACCP, this number can potentially go to 30 million over the next 5 years. Now, you could say it should go much higher, but if you look at our history, we've been singularly slow in the lending piece of the business. We've been singularly unsuccessful in actually capturing the data that already exists. But this global trend of actually database lending, and it's been around for a long time, but we haven't been able to really exploit it to get to the numbers that we want. I think the State Bank, and this is my speculation, State Bank's reason for giving licenses to the 5 successful applicants was they're actually going to be in lending, because if you want to be a payments bank, state bank viewers, go and get an EMI license. Why do you need a license? There are only 5 licenses. So they're expecting, they have huge expectations from people who've been awarded the license, and they want to see the lending piece. And if you look at our segmentation, then we see SMEs, agriculture, women, students, blue-collar workers, all not represented on the lending side and to a larger extent on the saving side. So the first trend, ladies and gentlemen, is embedded finance, the use of data to provide small ticket loans, typically on a closed loop basis, and for a relatively shorter tenor as the order cycle goes. So I see that, and as I said, I see a number raising from 10, and if you're looking at formal commercial banking from 1.2 to probably around 10 million in a short period of time, and I see commercial banks actually waking up and providing a serious challenge to the digital bank. Digital banks have one particular advantage in the sense that they're not stuck with the legacy system. They're not stuck with the existing DNA, which hampers this transformation. Globally, banks have transformed and transformed successfully, but if you have an existing system and you have existing DNA, the challenge is 10 times as more. But you're starting from scratch, you have a better opportunity to work on the customer lens. The second trend which is happening globally, but we are very far behind, but I see again happening, is fractionalization and tokenization. So on the fractionalization, tokenization part, the regulations for fractional real estate has already been provided by the ACCP. The license, is not a significant capital requirement. Real estate is a major asset class in Pakistan. So my sense is the last chairman talked about awarding 5 licenses as well. And we will see players coming in who will provide fractional real estate. And then obviously it's up to the existing players how you coordinate or how you collaborate with them, because everything doesn't need to be made within the bank itself. Fractionalization of asset classes is going to be, in my view, a major trend or major asset class in Pakistan, and the 3 major asset classes that I see happening, real estate for sure. Fractionalization real estate is just reducing the amount that you can invest in a property to a level which is available to the common man. The other big trend, I've been talking about this for a while, but it's difficult to get it into execution, but will now happen, is fractionalization of gold. You should have an app where you can get on there, and if you have 100 rupees, 200 rupees, you should be able to buy virtual gold, backed by physical gold or a PMX contract. Because people in Pakistan don't save in bank accounts. If you look at the saving ratio versus GDP, it's one of the lowest. And the reason it's one of the lowest is you're typically getting a negative rate of return from the bank. Every time you put money in the bank, if inflation is sitting at 30% and you're getting 15%, you're losing money. The journey to open a bank account has been significantly improved, again by the enabling environment. One of the few countries in the world where you can open a level 0 bank account in under 1 minute. Already exists. New regulations have finally come out, which are going to allow you to onboard a AOP, private limited company, digitally. Right now, if you are a really good bank, you probably take 1 month to open a company account. And if you're the average bank, you take 2 months. 2 months to open a private limited company account or account for a startup. Major opportunity for disruption over there. So Pakistanis save largely in gold. So why have we not come up with a solution for digitizing, tokenization, reducing the amount and making it liquid for the average person to save in gold? Real estate, because the average ticket size is so high, we can't, average person cannot invest. So also, the money that's in circulation, 30% of that is actually saved through the ROSCA's committee system. We still don't have a digital committee which has obtained scale. So the lens that we still continue to use is our internal lens of products we develop as opposed to the lens of what the customer wants. Everybody talks about we're customer-centric, customer centricity, but why don't we have solutions which the customer is looking for? And we haven't done this. Okay? And I think that's where the people who are going to be winners are the people who develop these products, which are right in front of us, and for the last 5 years, we haven't done anything about it. So fractionalization, tokenization is going to be the next big event. Big trend, I say. Third, I see consolidation and some blood on the street. Consolidation and collaboration, what I'm seeing is all the people who have data and all the people who have deep pockets in terms of risk appetite, balance sheet and funding. Now, we've talked about this, that banks are long on capital, short on idea, and fintechs are long on ideas, short on capital. But this marriage is yet to take place and scale. And this trend I see happening, that with the number of fintechs which are coming up, and non-fintechs also. And my thesis is that any company with a large customer database will eventually get in the fintech business. You will become a lender at some time, and the lenders have to figure out how to be part of that ecosystem, because if one stage, one of these entities wakes up and says, let me get my NBFI license myself and go into the market and fund myself, then you're going to have a problem with being, if you're just a partner and not embedded in that. I see Alexandra moving closely up, so I need to go faster. Okay. So third thing is you're going to see collaboration. And the people who are willing to collaborate, open APIs are the people who are going to succeed. And certainly, that's part of what Macroeconomic Bank is going to do, but I'm sure the other digital banks and the existing banks will wake up and benefit from all that's happening in the ecosystem, rather than believe that they're the fountains of all knowledge and all product services. The fourth thing that is happening already there, and we are considered top 5 or top 6 in the world, is the use of investment in cryptocurrency in Pakistan. If you look at Coinbase, if you look at Binance numbers, they're saying, based on geofencing, they can tell the location of the account holder. 10 to 15 million active crypto wallet holders in Pakistan, with a holding estimated between $8 and $12 billion, totally outside any purview of the regulator in Pakistan. The view was that crypto is a speculative asset, and as such, the people in Pakistan don't know how to handle this. However, the reality is, I agree it's a speculative asset, not used as a medium of exchange in Pakistan. But if you have 10 to 15 million active crypto wallet customers, which is pretty much not very far from your active wallet customers for fiat, why can't we work on figuring out how to bring this into the net? Right now, all I have to do is go to an exchange company, say I want to open an account. I can open an account on Binance, or other, platforms. I'll give the local exchange company rupees, and using his network, he'll buy the coin for me. And subsequently, if it's the Pakistani sale taking place, it'll happen over the IBFT or Rast in Pakistan. This is happening. So we must figure out how to bring this formally back. And that, as I said, 10 million customers, 10 to 15 million active wallet customers is a significant activity which is not being captured. And in my previous point, I missed collaboration, I think is the key, but I also see blood on the street. I see some EMIs closing down, because if your only option is payments, the way our payment is structured with IBFT and RAS under 25,000 being for free, there being a cash and charge by the agents, and if you're not going to have a partnership in selling, you're probably not going to make money for a while. And with the global lens now that we want to see a path to profitability, and if you're burning money, you're going to run out of cash. So that is something that we're going to see. on the people who are just focused on payments and haven't worked out the unit economics. Ladies and gentlemen, I think it's a great time, despite the problems we have to be in Pakistan, to be a player and be an investor in Pakistan, because when there's blood in the street, there's opportunity. There's opportunity for collaboration. There's opportunity for, if you look at the customer's lens, you will succeed. I thank you for your time, and I look forward to an eventful day. Thank you.
Thank you, Nadeem, for all the insight you've shared with us. Definitely lots of opportunities ahead. All right, let us now move on to our coffee and conversation. I don't know if you have coffee with you, but there's definitely going to be conversation. And so our next speaker is Mr. Shahzad Dada and myself. And we will be discussing how UBL became the favorite bank of Pakistan's tech-savvy customers. Please put your hands together for the President and CEO of UBL, Shahzad Dada. I believe you can grab a seat in the center.
Enter the world of disruptive banking. The evolution that took place over the years, the innovation that made it to the modern world, the legacy that stayed alive throughout, the spirit that served our vision and core values. For thousands of people, we are more than a skyscraper in banking. We see ourselves through the eyes of the people we serve, the individuals, the businesses, and the communities we work with. For them, it's not just about what we do, but who we are. We digitize at scale, energize for growth. Being a dynamic, inclusive place to work, we're bringing together the people, ideas, capital, and technology that nurture progress, growth, and innovation, helping to create a better and progressive world. We are UBL.
Testing. All right. Mr. Dada, welcome.
Thank you. Good morning.
Good morning. And so you are the president and CEO of UBL, correct?
That's what I believe I am.
Yes? Good. So tell me, how did UBL, the digital transformation of UBL, make it the favorite bank of Pakistan?
Bismillahirrahmanirrahim. First of all, thank you, Hamza and TerraBiz, for having us over. Zandra, thank you for having me here. Delightful to be here. But I need some coffee because I need to wake up.
We need
because
coffee, please.
According to my dear friend, Nadeem Husain, we commercial bankers are sleeping, so I need some coffee to wake myself up.
But we must highlight the opportunities. That's what Nadeem was doing.
But I also would like to highlight and counter a bit. We are doing over 200 trillion. If you look at the number of transactions we have done, 200 million payments, and there's been a lot of activity that the bank is doing, which I'll talk about. But alhamdulillah, it's been a great journey so far, but I think there's a lot going on, and I'm really looking forward on learning from the colleagues that are presenting today, Nadeem, and obviously I can't not acknowledge the architect of this whole digital transformation that Pakistan is going through, and that's Dr. Ishrat, my mentor and somebody I've looked up all my life. And I'm really delighted that he's here as a keynote speaker, and he will be telling us how he sees things, because he's also been very engaged with the reform agenda that Pakistan is going through, which will play a very pivotal role in our future journey thus far.
Perfect. So tell us a bit about your digital transformation journey.
So look, we started almost 5 years ago, 2008, and I would say, yes, we have been the choice bank for many of our customers, and I can't thank them enough. It's been a long and a difficult journey, but we can't take the laurels and say we are there and everything is, as Nadeem also highlighted, there are lots of opportunities, lots of trends. I'll share some of the trends that I know that are developing and evolving, and also we'll learn from others. But in our journey, what we put, and again, these are not just words that we are talking about. It's about putting the customer at the center of everything. And literally what we did right at the onset, we put up a innovation lab, design thinking. So anything that we do, any solution, any product, first of all, we need to try to solve those, understanding the customer's need. And rather than doing it without engaging with that customer or understanding that journey, it would be, I think, not a fruitful exercise. And therefore, we, in our Innovation Lab, and I welcome everybody in this room, literally, though I think Zohair will kill me, I invite everybody to come and share with us their issues and see what we are doing. Shajil, who runs our digital bank, can also share with all of you later on. But the whole idea is design thinking, innovation, and what we do. And it's become part of our DNA. And I think there's a lot going on where we are trying to, what are we trying to do? There's a whole pyramid lives of customers, from the really, really high net worth and large corporates to all the way to your, lower middle class and lower class. And we want to touch each and every one of them using different solutions, different answers to them. And it could be on the payment side, or it could be on the asset lending side. And I think in that, there are lots of solutions we are doing. For example, only understanding one of the things. And we want to be the digital bank with a human touch. With a large cash economy, you cannot ignore the fact that you will need to have phygital. You can't be all digital. You need to have that. We are very blessed to have a customer base of 11 million customers who have trusted us year and year again. And we are also very blessed to have 3 million active digital customers that we have been servicing their needs, doing over 200 billion transactions for them, which has grown 50%. So that's a big number. Bill payments, we're doing 30 million bill payments, one of the highest in the industry. So it's not like we are not doing things, we are up and away. We are also trying to solve the issues of the customer now, right now, rather than talking about the future, this will happen, that will happen. You can't progress. Change is constant, and change is law, as John F. Kennedy said. And I think we really believe in that. We are really making sure that we address that. And while we are doing that, I think the word challenge that I have, because I'm sure you're going to ask me that, is the cultural change in the organization. And that cultural transformation where it's digital is in your DNA, and I'm very proud to say of my 14,000 employees, we really think digital. We don't think of a solution or a product or service without bringing the whole digital journey into play, and then take it through our digital lab and innovation and design thinking to ensure that that's there. And I think that mindset change was something that took a while, but I'm very happy that that's there, and we want to continue with that lead to continue to be the best digital bank in Pakistan and in the region. And alhamdulillah, we have been blessed with that, with the trust of our customers.
Fantastic. It's definitely been a challenge. I'm not going to rehash the pandemic, but this definitely accelerated the whole digitalization process. And looking at your strategies, what were some of the hurdles that you've encountered over the past couple of years, let's say?
So I touched upon a little bit of that. I think, first of all, COVID, and with every crisis there are opportunities. I think what COVID did to digital banking and to the digitization of Pakistan economy, I think what we saw in the 2 years, we did not see the last 20 years. And in an odd way, it forced the customers to really go towards the digital channels. And we saw that. Our volumes are up 50%. Payments, bill payments, lending, any volume you look at, 50 to 100%. And that's because of the need of the hour. A lot of customers could not go to the branches. Therefore, they had to onboard. A lot of our corporate customers who are very reluctant to get into the digital portals and make payments, bulk payments, did not want to do that. The good thing for us was as I said, we started our journey in 2008. We had seen that this was a trend that's coming, and therefore were ready. to really deploy that, and therefore we saw a very high level of adoption. But like I said, one of the biggest challenges was how do we get our people mindset both internally and externally. But once they cross that bridge, and once they do their first bill payment or first check payment, and they see how easy, how simple, and how safe it is, then they just go wild. Honestly, and that's what we've seen. So what we see is once they have experienced this whole digital journey, and therefore we need to constantly be mindful of what their needs are, and what your needs are will not necessarily be my needs, and more importantly, they won't be the need of the farmer in rural Pakistan, in Sargodha, for example, and they won't be the need of a guy, a trader sitting in Chodia Bazaar. So we have to be very, very flexible, agile, and be able to adapt to that. And sometimes I think the other hurdle is our mentality that we have, one size fits all. We have come up with this thing, now let's push it through. Let's put targets and because that's how we have been doing banking historically. And that's what we have been trying to address.
So definitely going digital is way simpler. It's easier to do your banking online. But what is UBL doing to access the underbanked, to become more financially inclusive?
So what we have done is, first of all, I think what we have realized, we can't do everything ourselves. And I think Nadeem also touched upon it. A lot of other speakers are also going to touch upon it. I think the whole digital journey, it's all about collaboration. And it's all about finding the right fintech partners or the right service providers who can really help you. And you need to have, you're providing the platform. It's an open platform that you have. So what we have been doing is working with a number of key players. So on the agri-tech, for example, we are working with a number of companies that are dealing with these farmers and providing them with asset lending products. And that's already underway. Using a number of tools that mitigate the risk, whether it's through insurance, whether it's through weather forecasting, whether it's using technology to that needs. We are also have been blessed with branchless banking and another regulation or another initiative taken by Dr. Ishrat Husain. And we have this Omni platform where we are dealing with over 15,000 retailers that are on agents for us and using them to really help distribute the assets. But again, I think what we also blessed with and cannot not use that competitive advantage is our presence in those markets. We are one of the most rural banks in Pakistan. So we are in parts of Pakistan where no other bank is there. And I think the human knowledge or intelligence that you get from that presence can be cultivated into digital lending for them. And I think this, again, digital bank with a human touch is something that we really are honing in on and doing that. I'm not saying you can't do it without physical presence, and I think these 5 digital banking license will show us how that's done in a manner, but we are going to also play to our competitive advantage and further augment on it.
Very good, very good. And how are you staying aligned with new technologies?
Well, that's a challenge. It's seminars like this supporting the ecosystem. I think what people like TerraBiz are doing here or what we are doing, there's so much out there to learn. And I think with media, that the way media plays its role, I think we can all, if nothing else, go on YouTube, if you have time after you come to work, and spend and see what's happening. There's lots going on. So there's a lot of learning. We are engaging with some of the best service providers out there. We have, in our digital transformation, we work with some of the best players globally, engaged with them, hired them, and they helped us with this whole transformation and target operating model. Again, I can take the name here. IBM was our partner there, and we work with them very closely, and I think they played an important role in our journey. We have been using this other case studies. We've been talking to other banks who are in one shape or form been our supporters, or we have relationship with them, whether it's on the financial institution side. I mean, my friends are sitting here from Standard Chartered. We have worked with them very closely now. They're at Mashriq. We have, again, enjoy a very good relationship with them. So again, the fact that we are in the market, that's one. But then there are tons of technology companies, Kamran, Nishad is sitting there, who has also got a digital bank license, again, a very long-standing client of ours. So, we can work with, with Naeem is there, again, somebody I've been working on a number of initiatives. So I think the uniqueness is that we have been collaborating and working with our customers who are also our biggest supporter. And I think collaborating with them, they have something we don't, or we have something they don't, and I think the real win is when you take 1 + 1 and make it 5. And that's been, honestly, what's helped us succeed so far. But I keep on repeating to my team and myself, don't take the success or laurels of it and say we are. And again, take the nudges and the criticism positively, as Nadeem is saying, and wherever we think we are not doing enough,
Nadeem, he's not going to let that go.
No, he and I have this thing. We are friends. He's been my senior. So.
Very good, very good. Collaboration is definitely important, and the collaboration and onboarding of fintech technology as well is also very important. How do you collaborate with new fintechs and new startups that come and knock at your door and propose their new solutions to you?
The digital team is constantly engaging with them. There's no bad idea. And we, are constantly looking at how, through an open API platform, we can embrace them. Clearly, I think we have to be selective on who we want to work with. And there are multiple providers out there, or solutions out there, and then we work with them. We make sure that from a data governance point of view, from a cyber security point of view, they integrate well with us. We have comfort. We also understand what their ethos is, what their value system is. To me, that also plays a very important role in the digital journey. We don't want to work with any and everyone. We want to work with banks or with digital partners or fintechs or any other service provider that share our shared vision. Really, and what is that? That is indeed impacting and having an impact on society. Really addressing, as I again go through that value chain, the entire customer base. Have we done that right now? No. We have 3 million customers, but we are slicing every day. The aim is, how do we do it? How do we make that 3 million, 30 million? And some will need payments platforms, some will need asset platforms, some will require a different thing. Understanding what they need today and finding a solution. I'll give you an example. It's not an asset product, but a lot of customers, in the West, again, we all travel a lot, and, I used to live there. I mean, this whole checks, depositing a check. Why do you have to come to a branch and deposit a check? Today, open my app, and you can deposit a check instantaneously, in seconds, if not in minutes. And I think that whole experience, no other bank in Pakistan is offering that. It required engaging with the state bank, making sure that there are enough checks and balances, so they, because from a fraud point of view, and that again has made and saved this customer the hassle of going into a branch and depositing a check. Also from law and order point of view and safety point of view. So these are things that are need of the hour and what we have. Same thing about bill payments. Like I said, over 30 million bills get paid. Whether it's your school bill, your electricity bill, and let's face it, in the high inflationary environment where the cost of cost of living is going up, for us to serve a customer in a branch is 10 times more than serving them on an alternate channel, whether it's an app, whether it's a call center, whether it's a ATM. And that's how we are trying to take traffic out. So when a customer comes to a branch, when he or she comes, they really get served for the purpose they've come, and things that they cannot, that can be done remotely are done remotely. And they are applauding that because it's saving them tons of time, making them efficient. And again, it's also addressing the different stratas of society and different communities and different genders. What we launched this Uruj digital account, which is an all-women's account, and it's been a roaring success because what we tried to do and understand first what the needs are, and did not try to come up with the same level of solutions or loan products and things that were applied uniformly, but we really catered to what the needs of the women generation, society needs, and also sort of sliced it and diced it based on their their age groups. And what we found was they really applauded that. And we are constantly being agile enough to customize and tailor that.
So do you use behavioral insights to
Absolutely,
remain competitive?
absolutely. That's something, I think that's the behavioral insight. And there again, we are partnering with some of the best companies out there that are providing us those services on a very, very timely basis. And that's also helping me, especially on my lending side, because behavioral insights, not the traditional ones, the 5 C's that we were given in credit, they'll always remain there. But the person who has changed their address 5 times, for example, through the data that we get through behavioral science is a higher risk customer than somebody who's been living in their place for the last 5 years. Now that kind of data we can get from our data providers. Or for example, if somebody is topping up their, have late payments and they've been sending reminders by their mobile operator that, look, you haven't paid your bill, I think that makes me more nervous in lending to him or her rather than somebody who's been making the bills. And as you know, we have a high tele-density, over 80%, if not 90. And I think what we find is a lot of them are prepaid rather than postpaid. That data is held by the 5 or 4 rather telco players, and we collaborate with them, we work with them, and we use that behavioral data. Then there's other data available from different other sources, which is where I think the collaboration is, and I'll touch upon that in the end.
So to wrap up, what does the digital bank of the future look like in your eyes?
Well, I wish if I had the answer to that, I wouldn't be sitting here. I would be sitting probably somewhere in...
You're going to make it happen, Mr.
I'm going to make it happen. And I think I can just tell you, we're sitting today and what me and my team are discussing, first of all, I'm very blessed to have a great team, and a lot of them are here. And I think the digital bank of the future, first of all, I think entities or people who are in the financial services business, if they think digital is not here, or it's not real, or it's not coming, I think they need to really wake up. It's real, it's here, and it's of the future. I think you have to be smart. By smart, what do I mean? I think if you look at the digital banks, first of all, the S in the smart is be simple. Customers' needs are, they need simpler, better, faster. They don't want to get complicated or too complex in how we do things. So really provide solutions that really, one, understand what the customer needs, try to not fit one size fits all, and be very smart about it. The A in the smart, the M in the smart is modular. We touched upon that. Open APIs, work with different suppliers, and really be, bogged down that I want to do everything myself. I think there are lots of partnerships. That's the model, whether it's on collaboration on the customer side, whether we talked about, Nadeem talked about embedded finance. That's something that's absolutely the future. And I think embedded finance partners are a number of them. You can become a partner to a number of players. In Pakistan, for example, TerraBiz, Ant Financial, what Ant is doing in the east or west. So I think the modular part in the M is that. A is for agile. I think you have to be nimble. You can't even take months. You have to take weeks and days to be able to, internally and externally. If you don't do it, somebody else will do it. So you really need to be agile in that. And the R in that is really be somebody that people can rely on and be resilient. And I think that is something that requires, a very what you would call it, ability to be, provide the right frameworks on that.
It's definitely
And be the relevant, and be relevant to the whole thing. You can't be a small player. You have to have the relevance in that marketplace, in that subject matter, and be relevant to that. And then the T is something that I think we don't talk much about, but I think it's very important, and that is transparency. You have to be, your core values, ESG compliant. zero emission. I think these are nice buzzwords, but really at UBL we take it to heart. We don't want to work with somebody who's not propagating diversity and inclusion. We don't want to have vendors or suppliers who have lower standard of governance or weak governance. We do all of that in the onboarding stage. And I think with that, what we are finding that the partners we have in a modular setup that I talked about are really giving us that unique position and really putting us right at the forefront of this whole digital change that's happening. So again, I go with this whole smart approach. And I think the digital bank is really the one that's invisible. You don't have to see it. It's ubiquitous. It's a bank that nobody can see, but it's doing everything for you. And that's what a digital bank should be, rather than putting yourself at everything and then slowing down the call. So you're at the center, you're the most relevant, but you are also invisible to the customer.
Thank you, Mr. Dada. You have quite a challenge ahead of you, but it is the time and place to be in your
In conclusion, I would just say we are very excited.
Yes, it is exciting.
We think, even though we are going through some challenging times, I think the way State Bank is really taking the digital agenda forward, and we are welcoming the 5 digital banks because hopefully we learn a lot from them. We may collaborate with them. We like to see what they have to offer. You know, there's no harm in plagiarizing as long as you declare it. So we are looking forward on learning from the best and the brightest. At the same time, we are not going to sit still. We keep on going to be running because this is a place where a lot's going on, and there are lots of global models, and there are lots of learning. One last point I would just say in that is data governance and data protection. Look, banks historically have been the custodians and what we call Sadiq and Amin for the depositors. Banks, if you look at our model, it's 10% our equity, 90% is depositors' money, and protecting that deposit and being the safe custodians of that has been the second and the more important thing that's also coming with us for a very long time. We have been there for 60 plus years and many other banks, is the data. Very rich data, which a lot of our competitors want. And suppliers and vendors want. And that data, how do we protect it both for the customer and from a cyber security, because you know that cybercrime is on the rise, and how we manage that will also be a very important challenge that we need to do it. And alhamdulillah, we have had a very good track record on that, but again, we're not going to sit still. You can't look at the past or the present and take you really have to prepare yourself, and we are spending a lot of money, time, and energy in ensuring that we are protecting the data the same way we have protected other people's deposit. And I can assure you, if you're not a UBL, so I'm going to do some branding here, right? There's no free lunch.
That's right. There is a free lunch.
There is a free lunch, yeah. No, trust me, Hamza is going to find a way to get back to them. But if you haven't become a UBL customer, please go visit our booth outside, onboard yourself, become a customer, because I can promise you, and this is my promise to you, you will not be disappointed. It's an amazing, amazing app, and it's an amazing journey, and we'll ensure if there's something that's missing and you think it's missing, let us know, and we'll make sure we incorporate that. Thank you once again.
Thank you very much, Mr. Dada, for sharing your experience with us and your insight. Everyone, thank you, UBL. Your exhibition booth is just outside in the foyer, so please take the time to visit during the break. Okay, and now let us move on to our keynote address by our chief guest, Dr. Ishrat Husain, former governor, State Bank of Pakistan. Welcome, Dr. Ishrat.
Bismillah ar-Rahman ar-Rahim. Distinguished ladies and gentlemen, it's a great pleasure for me to be here, and I want to thank the organizers of this conference for providing this opportunity, which is very timely because we are starting a new chapter in the banking reforms. So what I want to do this morning is to place these recent developments and the future evolution of digital banking in the larger context of Digital Pakistan strategy and the financial sector reforms. This is an ongoing process. It doesn't end. While digital banking and e-commerce are ingredients of the overall digital strategy, this morning, looking at the audience, I would like to limit my remarks on the financial sector reforms and how the digital banking fits into that. We should not forget the purpose for which the SPP is promoting digital banking, and that is an effective tool for strengthening financial intermediation and financial inclusion in the country, in the pursuit of a larger, equitable, and sustainable development of Pakistan. So we should not really focus on the small piece, but contextualize this in what is the purpose of the digital banking. Banking, I would add a caveat, given the present situation, the banking sector performance cannot be isolated from the overall macroeconomic environment. When the environment is stable and the track record in management and governance is favorable, banking sector does well. Under the present fragile, fluid, and uncertain environment, it would be unfair to expect that the banks and other financial sector institutions would do well. But that is the context for the present. But we are talking about the future, and I don't think the present situation would persist. The first generation of reforms, and because there are a lot of youngsters, some of them may not have been born, or some of them were in schools, I would like to remind them as to how this financial sector reforms started, which is an ongoing process. It started in 1990s, but got an accelerated momentum in early 2000s. And what did it focus on? Liberalization of the financial system, privatization of nationalized commercial banks, autonomy and capacity building of the state bank, which is the regulator, decontrol of pricing and financial products, abolition of direct credit ceilings, and reliance on market mechanism for allocation of credit. Recovery of non-performing loans was stepped up by forming a corporate and industrial restructuring corporation, which also helped in the revival of SIC units. A code of corporate governance was enacted and enforced through a 3- or 4-tier structure. Appointments and chairmen of the COs were made on a set of predefined fit and proper criteria. So the charlatans cannot come and occupy that space. A number of banks were either asked to wind up businesses or merge, and delinquent boards were suspended or dismissed, creating a deterrent effect against malpractices. Minimum paid-up capital requirements were doubled, and capital adequacy was related to risk-weighted assets. Continuous off-site monitoring of the banks and the DFIs ensured that they operated in a safe and sound manner and complied with the parameters which are acceptable under the risk management framework. Timely and effective enforcement actions were taken against those who were found in contravention. Disclosure of financial conditions were aligned with international financial accounting standards, and external auditors were pre-qualified and divided into 2 categories to audit the banks according to their paid-up capital. Credit ratings by independent certified agencies were made mandatory for the banks and disclosed to the public. As a result of these first-generation reforms, the banking sector ownership structure shifted from 80% under the nationalized commercial banks or the public-owned to 80% under the private banking assets. Instead of subsidies from the exchequer, the banks have become profitable, and they contribute, last year they contributed 200 billion rupees in form of corporate taxes. Customer service standards improved, quality of human resources inducted was quite high, and technology started to seep up in the operations. Financial soundness indicators surged upwards to meet the Basel Convention, and non-performing loans shrunk to single digit. Despite these achievements, ladies and gentlemen, I am not very much satisfied with the progress. And I believe that what Nadeem Husain was telling has a lot of validity as far as the banking sector is concerned. A large number of issues and problems have surfaced since the completion of the first generation reforms, and that need to be resolved. The outreach of newly privatized banks, duly recapitalized and earning huge profits, remains limited to corporates, big name and high net worth individuals, trade financing, and fee-based activities. They did not make any efforts to extend credit to underserved sectors such as SMEs, small and medium farmers, low-cost housing, personal and consumer finance. Their network in underdeveloped areas was confined to deposit mobilization rather than lending. Prudential regulations were amended to enable the banks to lend to these sectors. To broaden the access, two new modes of banking institutions were introduced. One was those who shunned the banking due to their faith were given the opportunity to choose Islamic banking, which offered Sharia-compliant products. The other set of institutions, which Nadeem pointed out, was the microfinance banks, and we took the pride in becoming the first central bank in the world to regulate the microfinance banks against the advice of my mentor, Professor Yunus, who is a Nobel Prize winner and a Grameen Bank. He said, Ishrat, you are making a mistake. You will stifle the microfinance banks. Lo and behold, today, most of the central banks in developing countries are now regulating microfinance banks. So that was what we had done in order to cater to the people at the lower end of the spectrum who never had access to the finance. Despite this, we are sorry to say that we wanted the microfinance to serve the women entrepreneurs, but the progress has not been great, and they are still confined to the big cities and not gone into the smaller towns or the rural areas. To meet the needs of the project finance, we established these joint venture DFI companies with the assistance of the foreign partners. An upsurge in all the activities was noticed in the earlier years in broadening the access, and as was pointed out, the SME actually went up to 17% of the total private sector credit. But unfortunately, the momentum has slowed down once the government became the dominant borrower, and the results 20 years later today are really disappointing. The size of the banking system is small relative to the economy and to its peers. The advanced deposit ratios have tumbled below 50%, and most of those assets are invested in government securities. The share of SMEs in private sector, as I pointed out, has come down to 7% from 17%. Agriculture credit has remained stagnant in relation to demand. The number of accounts in the banking system are still quite low compared to our neighboring countries. In comparison to our peers, Pakistan lags behind in terms of financial market development, financial access, depth of financial institutions, credit to private sector, insurance penetration, and development of capital markets. And let me give you some numbers. Private sector credit as percentage of GDP in Pakistan is only 15%, while it is 55% in India and 39% in Bangladesh. Firms and individuals have very limited financing avenues available to cater to their savings and investment needs. Pakistan's stock market has only 250,000 retail investors compared to 12 million in Dhaka Stock Exchange and 69 million in Mumbai Stock Exchange. No doubt that the above outcomes arising from dismal performance of financial formal sector industry are to a large extent responsible for recurring macroeconomic balances, frequent balance of payment crisis, in addition to the government's role as a borrower in the banking system. But I would be remiss if I don't say that the role of the banks cannot remain unscathed. The latest data shows that only 21% of the adult population has a bank account, compared to 78% in India and 53% in Bangladesh. As a consequence of the low deposit GDP ratio, Pakistan's national saving rate has never exceeded 15%, and that we should thank our workers abroad who are remitting 5 to 6%, this year maybe 7%, of the GDP as the savings, which are now part of our national savings. Domestic savings are below 10%. And how can you have an investment of 20%, which is required for growth, if your savings rates are low? And that's why you have to resort to borrowing both from the banking sector as well as from the external borrowers. And we are up here as far as our indebtedness is concerned. So this is for you to think as to how you can mobilize the savings, which, as you all know, are intangible, illiquid assets, and they have to be liquefied and brought into the formal financial sector. Now, we have to realize that today, the external debt servicing takes away 85% of your export earnings. And this is not a sustainable situation. So we have a responsibility in the formal financial sector to mobilize savings and for the government to curtail its fiscal deficit. Unless we do that, we will be going to the IMF and to the external borrowers every now and then. Now I come back to my vision, and I'm grateful to Nadeem and Shahzad Dada for pointing out. Back in February 2001, 22 years, in my address to the Institute of Bankers, I made the following plea. I quote, "We have to consider e-banking not only as a technological issue, but also as a Journey started in early 2000s because this was a vision, but you are very good in vision in Pakistan, but execution of that vision is a problem. We had to start the journey when the State Bank decided to mandate all the banks to join one of the either two ATM switches, which were not talking to each other. And that was one link, which played a critical role. But still, after 2 decades, the number of ATMs remains only 17,000. And only 1 million transactions are taking place every month, mainly for cash withdrawal. 96% of the withdrawals are cash from ATMs. The Electronic Transaction Ordinance was promulgated in 2000, providing legal recognition to digital signature and documentation, reducing the risks associated with the use of electronic medium of business. Commercial banks were allowed to open and operate internet merchant accounts 22 years ago. SBP acquired SWIFT connection and made it mandatory for the banks to acquire SWIFT connectivity for settlement of cross-border financial transactions. The other major initiative the SBP took was to complete the largest single project of computerization worth $30 million to fully automate the state bank operations, set up a data warehousing, and establish electronic links with the banks. At the same time, real-time gross settlement system, now called PRISM, was set up to provide a platform for wholesale transfer and settlement of funds. By 2002, almost 40% of the bank branches had been automated with phenomenal growth rate. The number of online branches jumped to 1,356 in 3 years' time, an increase of 376,000. During the last 5 years, progress in e-banking has been impressive, and I want to commend the State Bank of Pakistan and its leadership for that progress. Its share in the total value of retail payments has risen from 24 to 42%. But, as everybody pointed out, the paper-based transactions still dominate with 190 trillion rupees. This is the slice of the pie the digital banks have to nibble forcefully, not on the edges, but go into the deep dive and raise the share of e-banking to at least 80 to 90% in the next 5 years. Currency in circulation has doubled in last 10 years and is boosting informalization of the economy. The number of internet banker user is only 8 million, and that of the mobile banking is 12 millions. So even we add this up, this accounts for only 20% of the unique mobile phone users. So you 5 banks have a substantial market, which is 80% of the mobile phone users. And the number of smartphones with 3G, 4G is actually rising, and broadband penetration rate is also rising very rapidly. So here is your chance. I now turn to the policies which the digital banks should pursue to advance the goal of financial inclusion. I think the granting of these 5 licenses by the State Bank is only a first step in a long journey. And I consider this as the right step in the right direction. I want to congratulate the winners, but let me also say that the hard work begins now, as the expectations from them, both by the regulator as well as the public at large, are quite high. First, they have to demonstrate that their transaction costs are lower than the existing providers. The customers enjoy much greater convenience as they save effort, time, and hassle. The fees and service charges are lower while the speed of transactions is faster. Accuracy of reporting is better, payments are secure, and cybersecurity is assured. In other words, this new breed of banks should display high level of efficiency at lower cost. Second, they have to diversify their asset base functionally, sectorally, geographically, by size and gender. Commercial banks are earning fairly reasonable margins by investing in risk-free government paper. With the idea today is 70%, which is not what the banks should be actually doing. This is stifling private sector growth, particularly in those sectors and geographies which have the potential for absorption of credit. These are the areas where financial sector as a whole, but particularly the banks and Islamic banks, have been unable to make forays so far. Because, very naturally, the alternatives for them are fairly attractive, and reaching out to these underserved segments is both risky as well as costly. Why? Commercial banks do not have access to a lot of relevant parameters and data to properly assess prospective borrowers. Small borrowers, particularly females, are also unable to meet the documentation and collateral requirements of the banks. The administrative cost of processing thousands of small loans impairs the profitability of these banks. By using machine learning and data capture and data analytics for discerning the patterns, the digital banks can develop credit scoring models for on-lending to the clients who do not have to go through extensive documentation or are able to offer securities, collaterals, or guarantees. The CRM platform can track customer history and provide quick feedback and online communication. I do realize that there would be upfront costs in research and development by these banks to develop these models, but let me also say these costs should be considered as investment in acquisition of customers, expansion of network, robust screening of credit risk, establishing competitive advantage, and increase in volume of business in the future. They should be considered as investment rather than cost expenditure. This would take a few years, and you would have to be patient, as perseverance would ultimately pay off. My advice, those who are looking for instant gratification and quick returns would be disappointed, as this is a long-haul journey. Third, the digital banks have to develop a portfolio for investment, as I earlier pointed out, in sectors such as SMEs, small and medium farming, low-cost housing, but also in non-traditional economic and social activities such as human development by providing loans or qarz-e-hasna to students from poor families who are talented but do not have financial means to study. And my experience with IBA, where we had a National Talent Hunt program, really reinforces my belief that there's a lot of talent which is being neglected today because they are not given the opportunity to go for advanced studies. So please try to tap this talent of the country. Program lending and cash flow lending in SMEs and agribusiness would become easy for the DBs to handle as compared to the commercial banks. They should also provide financing for educational and health facilities and agribusinesses to private entrepreneurs in areas outside the metropolitan cities where the rising middle class has demand for quality services. China's industrial success owes a great deal to their town and village enterprises. And you'd be surprised that how rapidly urbanization is taking place. I started my career as a civil servant at the age of 21. And now I go around the country and I see all those villages have now been transformed into vibrant cities. But the formal sector and the government are not paying attention in order to provide them the kind of services which they need in order to become, a viable urban center. Fourth, collaboration with fintechs should be incentivized to help the usage by coming up with APIs so that the banks can enhance business efficiencies, accelerate innovation, integrate disparate systems without customization, and improve customer experience. They can extend the functionality of their products while saving time and money and thus stay agile in the marketplace. Fintechs can help in digitization of supply chain, invoice-based payments, and payments at merchant-based locations. This should enable the digital banks to offer end-to-end solutions to their customers. Fifth, the digital banks would have to maintain financial strength and the capacity to absorb unanticipated shocks and stress. Human resources who are capable of solving problems rather than shuffling the papers around, as is the case with the commercial banks now, would have to be inducted and trained. A balance between tech-savvy and business-savvy professionals would have to be maintained, as a tilt towards either extreme can be deleterious to the bank. A new culture is to be nurtured by the digital banks that is markedly different from what we have today and is customer-centric, and I was very happy to hear Shahzad saying that what his pride is, that he is able to transform 13 or 14,000 of his employees in a different cultural environment. Unless you do that, the digital banks, as I tell the Islamic banks, that you have taken people from the conventional banks, but their mindset is still the same, and their cultural traits are the same. So you have to make a departure from the traditional way and unlearn what you have done and learn new things. That is what is critical for your success. Sixth, with rapid advances taking place in technology space, the banks would have to constantly strive to catch up with new innovations and practices. Partnerships with foreign technology service providers would enable continuous upgrade, enhancement, refinement of the systems and software applications to tailor-make them to keep the competitive edge and customer satisfaction. Let me conclude by a word of caution. The risks arising from adoption of technology as a delivery vehicle are in addition to the credit risk, market risk, and other bundle of risks which are associated with financial intermediation. Ensuring cybersecurity, preventing fraud, guarding against identity theft, hacking of the databases, poor customer interface up front, frequent breakdown of back-office systems, congestion of traffic that keeps a customer waiting for a long period would require close vigilance and attentions by the chief executives and the managing directors of the banks. They cannot just delegate this to one of their subordinates and sleep in slumber. Thank you very much for it here.
Thank you, Dr. Ishrat. That was very thought-provoking. And most of all, thank you for the recommendations. I will ask you to please stay on stage to present the tokens of appreciation. So if you can stand in the center stage. All right. So we have a few tokens of appreciation to present to our first esteemed speakers, our partners really that have supported us and helped us throughout this event. So if I can please have our first recipient, Mr. Nadeem Husain of Rakami Planet and Group. Next, I would like to call upon Mr. Shahzad Dada, President and CEO of UBL. Thank you, Mr. Dada. Next up, our digital technology partner, Euronet. Okay, we shall move on to our platinum partner, BPC. Ah, there he is. Come on down, sir. It's a long walk, I know. Welcome. Thank you. Our transformation partner, Innovative Private Limited. Right there, to the left. Welcome. Our gold partner, Mashreq Bank. Yes, you can both come up. Thank you, gentlemen. Yes, let us center that photo. Our innovation partner, TPS. Welcome. Our knowledge partner, KPMG. Going once, going twice. Yes. Welcome, sir. Our silver partner, Wave Tech. Congratulations. Please don't go out. I will be calling you for a group photo to all recipients. Stay in the room. Wave Tech, welcome. AutoSoft, our bronze partner. AutoSoft. Ah, there she is. Welcome, miss. Bronze partner, JBS. Anyone from JBS? Bronze partner, NBP Funds. Bronze partner, Tasdeeq. And he is here. Welcome, sir. Congratulations. Bronze partner, Kiss Pay. Our travel partner, Holiday Express. All right, let's pose for a photo. Travel partner, Holiday Express. Welcome. We have a few more to go, ladies and gentlemen. I know you want that coffee. Our knowledge partner, ACCA. Anyone from ACCA here? Yes. No. Oh, I thought you were waving at me. All right. Strategic partner, Pakistan FinTech Association. Pakistan FinTech Association. Our strategic partner, Chain Store Association of Pakistan. Welcome, sir. Our academic partner, IOBM. Thank you. IOBM, welcome, sir. Our official network partner, Pasha. Thank you, sir. Our supporting association, IFMP. Anyone from the IFMP here? Yes, there he is. Sitting all the way at the back. Our supporting association, CFA Society. Welcome. The CFA Society. Next up, our supporting association, the ICMA. Anyone from the ICMA? Yes. Welcome, Miss. Our supporting association, the ISACA, ISACA. Welcome, sir. We're almost done, Dr. Ishrat. 6 more. Our supporting association, the Marketing Association of Pakistan, to be received by Mr. Azfar Ahsan, former Chairman, Board of Investment. Welcome, sir. Ahsan. Supporting association, the Communications Association of Pakistan. Okay. Our supporting partner, Befiller. Befiller. Anyone from Befiller? Out for coffee already. Okay. Supporting partner, Symmetry Group. Next up, our digital media partner, Pro Pakistani. No? Okay. International media partner, Insight Middle East. Okay. Our print media partner, Business Recorder. Our business magazine partner, Profit. And our supporting partner, Consumers Bureau. Ladies and gentlemen, if you have received a token of appreciation, please join us on stage for a group photo. Everyone up. Sorry? So if you have received a token of appreciation, if you can please join us on stage. Come on, don't be shy. Okay. Euronet also receiving. Okay, so the taller people at the back. Everyone who has received a memento, if you can please join us on stage. Yes, sir, I see your hand is up. Do you have a question? Should I bring a microphone to you? Hi. All right. Is everyone up here? I'm going in this photo. Is everyone ready? Okay, everybody say cheese. Or what do you say in Karachi? Cheese. Okay. Thank you. Thank you very much, everyone, for supporting this platform. All right, we will now break out for a 15-minute coffee break. Let's make it 20 minutes. 20 minutes coffee break. We shall reconvene here in 20 minutes. Thank you. Ladies and gentlemen, don't forget to hashtag. We have prizes to give away. So the hashtag is right here. Hashtag, hashtag, take photos, make comments, put it up on social media. Ladies and gentlemen, welcome back. Please take your seats. How is everyone doing? Yes? Coffee was good? We're running a bit behind schedule, so I don't know, in Dubai we ring a bell and everyone comes in, like at school. Right? Evans? We ring the bell. So who has posted on social media? Very good, very good. Who is posting as we speak? Very good. This is the hashtag to use, where the lovely ladies are going to be posting as well, yes? Welcome, welcome everyone. Nahian, how are we doing to get everyone in? We need a bell next year, Nahian. Who has followed the FIFA? Who is surprised of the results? Who is not surprised that Argentina won? Yeah. I have to say, I was very surprised when Saudi made it a little further than expected, right? They did really well. Just goes to show. It goes to show what money can buy. Any Saudis here? No. If you taped that, delete it. And who is surprised that, what are their names? Ronaldo and who? Messi are now playing for Saudi. Who is not surprised? I am surprised because these guys have already tons of money. Isn't lifestyle something they should be looking towards? Anyway. Okay, I'm going to stop judging. Does that say DigiBAP23 or 2023? Just 23? Oh, I have here DigiBAP 2023. So, which one is the correct one? Where are the organizers? Organizers? TerraBiz. Okay, we shall ask them when they get here. I think it should be this one, because this is the one I've been announcing. All right. Gentlemen, at the back, please take your seats. Welcome, welcome everyone. Whoever can get the most people in wins a prize. Oh, someone is smiling. Hello. Does Pakistan have a soccer team, a football team? Yes? Yes. Good? Good. Medium? 50-50. I think you're better at cricket. Yes? Yes. No? No. Do you play cricket? Yes. Yes. Rugby? Hockey? Hockey. Field hockey. Ah. You're talking to a Canadian here. I think ice hockey. When you say hockey, I think ice. Who here follows ice hockey? Anyone follow ice hockey? No. All right. Shall we begin? Yes, please. Okay, ladies and gentlemen, welcome back to part 2 of the day. And we have our international keynote session on building a digital bank and the lessons learned while this speaker has built 4 digital banks. So please join me in welcoming Mr. Evans Munyuki, ex-group CDO of Emirates NDB and CEO of Problem X. Evans will be discussing how banks must completely retool their business strategy and change their internal culture because the future of banking will be dominated by data and digital channels. Welcome, Evans.
Thank you so much. Thank you, Alexandria. Okay, how's everybody doing? I'm counting my steps, so I try to walk 10,000 steps per day because I've heard that it's really, really good to do a lot of walking. It's good for you, it's good for your heart, it's good for your body. So that's why I'm using a handheld microphone, because I don't want to stand for the next 15 minutes. I'd like to walk a little bit. So it's really good to be here. My name is Evans Munyuki. I've had the opportunity to work in various organizations which have done some very interesting things when it comes to digital transformation, whether it's the time I spent in IBM, the time I spent in the Kelly Group, the time I spent at ABSA in South Africa. And I've also worked for a fintech, a listed fintech, and I've worked for Emirates NBD as the Group Chief Digital Officer at Emirates NBD. And during that time, we did a lot of work, specifically focusing on data, focusing on customer experience, focusing on really driving digital to get good results for customers. And during that time, I did notice that we had a certain need, which was an unmet need. And you've heard people talk today about financial inclusion. You've heard people talk about women. You've heard people talk about agriculture. And people have talked about specifically SMEs. And I saw there was a need specifically in the UAE, specifically in Dubai and in the UAE Emirates, where SMEs are completely underserved. In fact, some banks, including the bank I was working for at the time, had a certain segment where they just said, it's too complicated. There's so many expats in the country, the flight risk is high when you look at lending and so on, and they just exited the whole SME kind of certain segments of that space. And so we decided, hey, let's go after the small businesses. They represent more than 80% of the economy in terms of SMEs. And so I looked at some potential partnerships with fintechs, and we saw that if we tried to kind of band-aid things together, it would be a bit of a clunky experience. So we decided, hey, let's just go out and build a digital business bank, specifically which targets SMEs and targets small businesses. So we called it E20, and we built it and we launched it in 2019, specifically focusing on opening a bank account for SMEs in minutes. And that's one of the things that we did. Another thing that we did is we saw a need around millennials and lifestyle banking for millennials. And through the leadership of my colleague, Mr. Jayesh Patel, we went out and we built Live, which is a digital lifestyle bank, which became, at that time, the fastest acquiring bank in the UAE, getting customers on board. So these are some examples of things that we did specifically within Emirates and BD, both digitizing the mother bank and launching two distinct brands of digital banks, which went out after two specific segments. Now, even though Live was for millennials, everybody wanted to get onto it because it was so easy to open an account, and we started adding more and more products to it. And with E20, we started off with a focus on the Dubai Economic Department licensed businesses, because the UAE is very fragmented when it comes to the number of business registries that are in the country. So what we did is we focused on those first, and we moved forward. Now, when you look at active online banking users worldwide, in 2020, there were about 1.9 billion active online banking users worldwide, and that's projected to grow by 2024 to 2.55 billion. And really interesting fact, specifically for this conference that we're in, is the market size of digital banks worldwide as of 2021 was at $47.4 billion US dollars, which is a high number. But what's really interesting is when you take a look at what the projections are by 2030, they're expected to soar to $2.05 trillion US dollars by 2030, which shows that there is a big growth, and the market size of digital banking as well expected to grow. I think it's really interesting to look at Nubank out of Brazil. They're at the top of the pack for digital banks, both in terms of their valuation and in terms of their number of users. They had, as of 2021, 48.1 million users. Neobank, no branches, 48.1 million users. And they were in the top three in terms of valuation, at 45 billion in valuation, with Revolut coming next with about 18 million users, with a valuation of 33 billion, and Chime with a valuation of 25 billion. Now, what makes Nubank quite interesting is, unlike Revolut, which has 18 million users across multiple countries, Nubank has basically achieved 48 million users, basically with a massive presence in Brazil, a little bit in Colombia and one other country, but they basically haven't done massive geographical expansion. So there are some lessons that I thought we can learn from both our execution in Emirates and BD, at E20, and also at Live, and banks like Nubank, where we can draw some lessons. First of all, there is a growing demand for digital banks and digital banking services worldwide, including Pakistan, right? Especially with the new 5 licenses that have just been issued. And specifically for you personally, digital banking is a great base from which to build your career. Because quite honestly, you are either digital or you are dead. As a bank, you are either digital or you're dead. You cannot compete with organizations whose cost-to-income ratios are south of 30% and 28% unless you go digital. You have to go digital, or else you're dead. Now, when we say digital bank, don't just think of a traditional retail bank. Open your mind up to the types of possibilities. In fact, we've heard some speakers, in fact, Nadine spoke this morning, and based on what he spoke about, it's interesting to see what types of banks are out there. So you've got banks like Nubank, which represent digital retail banks. But look at that. On their website, they say, banking for you, and banking for your business. So they're looking at both digital retail banking, but also looking at digital SME banking and digital business banking, which is important to think about. Because many times when people hear the words digital banking, the instinctive thought is a traditional retail bank just put onto digital. But there's so many niches that we can go after. Look at companies like Coconut, which brands and tags itself as an accounting and tax app, which goes out and provides data and insights and value for organizations, specifically for small businesses. I've talked about Live, which is a digital lifestyle bank. Look at companies like Tide out of the UK, and they specifically say, no, we are not a bank. We are a business financial platform and a leading provider of digital business banking services in the UK. But they allow you to open bank accounts, and they work with a bank at the back, and they make things happen. Companies like Expense, looking at what Expense is doing, they're now live in Bahrain, and I believe that they also are starting to have representation here in Pakistan as well. E20 I've talked about. Alpian, interesting bank, digital business bank specifically for private banking. And they're just now about to launch. So I've shown you examples of digital retail banks, digital business banks, digital SME banks, digital lifestyle banks, digital private banks, so many niches that are possible. What about digital remittance banks? For example, TransferWise, which now became Wise. So what do we learn as we look at this? I think one key lesson is very important to capture. Banking as a service versus banking as a platform. And I think this is important to note because in this world we're in, we all talk about super apps. And I'll mention a little bit about super apps in just a minute. But let's talk about banking as a service. So what is banking as a service? I think the best way to explain what banking as a service is to actually use an example. So I'm going to use Emirates Airlines, since I like them so much. They give great service. Think of Emirates Airlines. They pay a fee to a banking as a service provider. Now that provider is Deutsche Bank. And what Deutsche Bank does is because they're so smart, like you guys, they're so smart that they've made their architecture API ready. They've made it easy for externals to connect with their internal world. So what they do is they say, we are going to grant you access to our APIs, Emirates Airlines, for a fee. And then Emirates Airlines takes those APIs and they start offering financial products on their websites and their apps. So the customer is Emirates Airlines customers. They're able to enjoy banking services, but Emirates Airlines did not become a bank. They're still an airline, but using APIs, they are bringing banking services from a bank into their customer base. That's banking as a service. So what's banking as a platform? As you think about banking as a platform, we start on the left, right? So on the left, you have your customer base. Whether they're traditional customers, Gen X customers, millennials, etc. They come to your app because you guys are smart. It's your app. But when they get there, they don't only get your banking services, they also get services from fintechs. They get services from other organizations. But why is this possible? It's possible because you've changed, you've made modern your architecture, you've made modern your ways of work, so your loans could come from Upstart, payments from Venmo, you have investing and trading from Acorns, wealth management from other companies. Basically, you are becoming an ecosystems player. In other words, a super app, right? So banking as a platform starts taking us towards the super app space. And I believe that all the serious organizations, they will become super apps. You have to. You have to. You know, your customer comes to you and says, I want the jackets that you're selling. Oh, by the way, I also want a glass of water. Can I buy it from you? Are you going to say no? You won't say no. You'll say, yes, I'll do it for you for a fee. And you have revenue streams. So that's what banking as a platform is, which is why it's an important thing to be thinking about. So as you think about digital banking, banking as a service, very important, and banking as a platform, very important. So key learnings, focus on solving real problems for customers. As you think about the services that you provide within the digital bank, do they resonate with the customers? Are there things that customers want that you don't have, that you should provide through partnerships? Be design-led, right? So being design-led is all about thinking about the world, not from the inside out, but thinking about the world from the outside in. And thinking about how your customers consume. Now, remember that in banking, we all loved our relationship managers. We said, hey, my relationship manager is so-and-so, and she knows me, or he knows me. When I go to see him or her, they understand me, which is different from the digital world, right, where people often say, even if you're banking with a certain bank, and you want to apply for a product, they treat you like a complete stranger. And they start asking you questions all over again. What's your name? What's your ID number? What's your address? You're my bank, you should know these things. You know, so how do you become design-led so that the digital experience is as amazing as the in-person experience, both from a user interface perspective, UI, from a user experience perspective, UX, from a customer experience perspective, be design-led. Be lean in your processes. You know, don't show a beautiful user interface. Somebody clicks on the button on the digital bank, and then the clunky old banking processes start getting executed in the back. Be agile in your execution. Do things, make changes, show them to customers, get customer feedback, update them, and be innovative in your use of technology. Understand the tech architecture, how things are done, and how you can leverage new tech to deliver great services. But importantly, as was mentioned this morning, don't go the journey alone. Short-circuit years of work through fintech partnerships. Now, they could be fintech partnerships. They could be partnerships with some of the tech colleagues that we have outside. The whole point is, in collaboration, there is the ability to have speed to market. Think ecosystems. So as you build the digital bank, as you make your bank digital, as you partner with people that want to make their banks digital, ecosystems are important. And marketplaces become an obvious thing that follows as a result of having these ecosystem plays that are readily available. And the new frontier, and watch this, the new frontier in financial services is niche. It's niche. And what niche means is, if I come to the bank, to your bank, and I am a man, I want to feel like you are the bank for men. If I come to your bank and I'm a woman, I want to feel like you are the bank for women. If I come to your bank and I'm a pregnant woman, I want to feel like you are the bank for pregnant women. If I come to your bank and I'm an SME, I want to feel like you're the bank for SMEs, etc., etc. Become niche. But you can't go and launch 20 different unique digital banks, but you can use data and you can use AI to provide a niche personalized service. Personally, I hate chatbots. I don't like them. The customer experience through chatbots, I don't enjoy them. I'm a digital person, but I don't like them. But for some reason, I love ChatGPT. It's interesting, because it's like it knows me. I start a conversation with it, and when I continue the conversation, it keeps the context of the conversation we just had. It's all about becoming niche so that the customer feels like it's proper KYC. Not banking KYC, but really knowing your customer. and having the insights about your customer. Leverage APIs to do partnerships. Be data informed, because data is the new oil. Now, ladies and gentlemen, drum roll. I would like to introduce you to somebody. Meet the multi-armed bandit algorithm. I love this algorithm. The multi-armed bandit algorithm is a type of reinforcement learning algorithm that is used to balance exploration and exploitation, right? So it explores, then it exploits. It explores, then it exploits. I'll give you an example. In the UAE, there is a telecom company that I shall not name, but I got service with them like many years ago, and they offered video service. And I, by accident, chose that I want horror movies to watch them as well. And then for the next few years, I never watched a horror movie. But they kept serving me horror movies as part of my experience, because they never exploited what I was really doing. Now, the multi-armed bandit addresses that. What it does is it literally watches what are you doing, what do you want, and it serves you more of what you want and less of what you don't want. Hey guys, that's what Instagram does. That's what Netflix does. That's what they use. In fact, don't just hire bankers, don't just be bankers. Be tech people who understand these kinds of things so that you can make a difference. On that note, I'd like to introduce you to Mr. Ashok Chandrasekhar from India. Young Ashok graduated from the RV College of Engineering and the Dartmouth College, went to Hawaii, Microsoft for a few months, then he joined Netflix, and he had his big break. He used the multi-armed bandit algorithm at Netflix and completely rethought and redid how Netflix serves content, and customers love it. He did so well, he left, he's now with Warner Brothers doing the same thing there. In fact, he didn't do it by himself. He had these guys working with him. Out of all of them, only Justin is still left at Netflix. The rest of them have left. Some have gone to Spotify. Why? Because they have leveraged the multi-armed bandit. What it does is it serves you content. Did you know that Netflix actually says when it serves content, as I close here, Good Will Hunting is a movie. If you like love stories, what Netflix does is they show you a graphic image of Good Will Hunting with two people about to kiss. If you like comedy, they show it to you with Robin Williams. If you like techie guys, they show you a different image. But they actually found that it makes a difference to use the multi-armed bandit as a recommendation engine into your customer's experience and how your customers choose. And they saw that people who like certain things will choose more based on not just the genre, but also the imagery that's used, and that's based on the multi-armed bandit algorithm. Think about this. How can you leverage this kind of thinking in banking? Now, we're talking about banking, right? We're talking about financial services. How do you make an experience personalized using algorithms like the multi-armed bandit, for example, so your customers really understand that you understand them? Let's learn from the work of others. As I close, digital banks fail because of poor user experiences, because of insufficient funding, because of limited customer acquisition. Regulatory hurdles are reasons why digital banks fail. Security and privacy concerns, those are things that you just have to get right. Technology challenges, just making sure that tech really does work. Lack of scalability, being able to scale. And this is where cloud is so interesting, right? As demand grows, you scale and you increase your provisioning. Integration challenges, lack of... Talk about more of these tomorrow, but you don't have to be the first to succeed. You can follow up and be successful learning from what other people have done. There are three types of people. People who make things happen, people who watch things happen, and people who wonder what just happened. Be one of those who make things happen. Leveraging data, lean processes, understanding customers, and really providing a niche customer experience so that the digital bank feels personal to every single one of your customers. Thank you for your time.
testing. Thank you, Evans Manyuki. Great to see you again. I have heard Evans speaking in previous conferences, pre-pandemic, post, during pandemic. All right, ladies and gentlemen, we shall now move on to our first panel discussion of the day. And it will be on digital banks and digital payments panel. Basically, discussion is on the whole transformation journey. And so the panelists for this discussion, let us begin with Ms. Halima Iqbal, founder and CEO of Oran. Please join me on stage, Ms. Halima. All right. Next up, we have Mr. Muhammad Yar Hiraj, CEO of OneLoad. Yes? He is coming. Perfect. Welcome, Muhammad. Welcome, sir. Our third panelist is Tural Amir Turab Ali, Head Digital Money and Financial Inclusion for the United Bank Limited. Welcome. Next up, Yasser Khan, CEO of QuistPay. Mr. Naeem Zamindar, founder of Neem. Welcome, sir. Mr. Saad Niazi, CEO of Keynote. And last but not least, Mr. Furuq Ali Beg, Managing Director of BPC Banking Technologies for Pakistan. And I would like to welcome our moderator for this panel, Mr. Mir Najib Rahman, CEO of Expense Pakistan. Welcome, Mir. So one last call for Ms. Halima Iqbal. Are you? She had to leave. All right. So gentlemen, the timer will be set for you. Please pay close attention. And if you'd like, we can leave the last 5 to 10 minutes for questions from the audience. Thank you.
Thank you very much. The topic is quite interesting for this panel, and we have some very illustrious leaders from our industry today, all from quite diversified areas of the ecosystem, I should say. And so we'll get to learn from them in terms of what's going on in the digital space, especially in terms to looking at how do we exploit more revenues and add on more customers within our ambit of digital banking, because as we all know, we still have a long way to go in terms of financial inclusion. So I will start my first question with Turab. Since you are looking after financial inclusion at UBL. One of the key, I think, gaps in the industry is the gender gap, of course, where the female, gender is not really onboarded as much as the males are. I think there's a huge gap there. So I was just wondering how UBL is looking at financial inclusion for women. Are there any particular use cases? Because, each person has their own need. And how are those needs being addressed? So are there any new use cases being developed to get that segment on board? Thank you.
Thank you very much, Najib Saab. So, Assalamu alaikum and good afternoon, everyone. I think it's a great question to start off with, because I think this is something that the industry I think the digital financial services industry, at least in Pakistan, was set up with the ambition of financial inclusion. And how much progress we've made in the last 10, 12 years is open for debate. I think the problem really starts when we say that we know what people at the bottom of the pyramid or that particular socioeconomic class that we're trying to address need. And I would like to flip that question because a lot of us who are financially included have known banks pretty much all our lives, and we've known banking services. We apply that same thinking to the unbanked, and we assume that by reducing the size of the transaction or by slicing up the product a little bit, now we are putting forward a service which should have demand. And obviously it doesn't, because it's not contextualized. So one of the things that we want to work on is making that banking piece invisible, because if we lead as a bank and we go to our customers as a bank, well, there's a brilliant book by Kentaro which talks about, it's called Geek Mythology. And the premise of that book is that technology does not change customer behavior. It only accelerates existing behavior. So what we need to do is figure out what is the customer behavior that is present in that market that we want to address. I'll give you an example. When I was living in Nairobi, I had a maid who would come in thrice a week to clean up my apartment. And I'd figured out with her that the way I would pay her would be that every day that she comes, I would give her what her daily remuneration was. After a few weeks of this, she one day came to me and she said, do you mind if you don't pay me daily? And in fact, hold that salary back and pay me at the end of the month. And I was a little surprised by that because I was paying her daily because I thought it would ease her income, smooth out her income. So I asked her, I said, are you expecting me to pay you more if I hold back your salary and pay you at the end of the month? And she said, no, I want the same amount. So then I was even more surprised and I said, why do you want me to do it? And she explained. She said she had a daughter who she was putting through school. And if I paid her on a daily basis, she was afraid that she would end up spending that money that she was otherwise saving for her education. So she would pay the school fee with that money. And that was an epiphany for me because I realized the way that people look at money is very different depending on context, and especially where you've got scarcity at play. The more scarce your resources are, the more of the tunnel visioning that starts happening around how you manage your expenses. So effectively, she was willing to pay me a fee. She wasn't charging me more to hold her money back. Has that sort of behavior been digitized? I don't think so. I mean, we know that people do mental accounting, but have we brought that into our design yet? I don't think so. So to answer the question, Najib bhai, what I'd like to, what we're working on is trying to map the customer behavior in this segment, trying to understand what is that ecosystem that they're existing in, what are the drivers and motivators that drive their decisions on how they spend money, and then work backwards from there. And like Evans was saying, I really liked what he said. He talked about not trying to do all of this alone. The second biggest mistake we make, I think, is when we try to do this entire thing on our own, and we end up failing because it's just so complicated an issue. You can't solve this with one magic product or one magic service. So we look for collaborations and partnerships. We know that there are niche players who are experts in their particular areas. We want to do handshakes with them. We want to empower them to serve these customers. We don't need to do it ourselves at the last mile. But through these handshakes, we find the niche segments where there are already fintechs working, there are agri-techs working, there are insurtechs working, and we empower them with our banking services, our APIs, and we let them do what they're good at, and we do what we can for them. So it's not an easy problem to solve. It will require, I think, iterations. But the bottom line is get close to the customer, figure out their life journey, figure out what they need, and they will tell us. And then build backwards from there.
Najib, if you want, if I may interject, add to this. I think it was a great response from Nogul. Just based on my own experience, I can tell you the use cases that has worked for us in the past. BNPL being the primary use case, 40%, almost touching 40% of our customers are women. So, just giving them a wallet without any use case around it, it's just doing it for the sake of doing it. We need to build use cases. I think it's difficult for women to get credit cards. It's easy for women to open their accounts, have debit cards associated with those accounts. We have built a use case where now these women are able to go on any website, use their debit card, and buy something that they want to buy on installments. And this becomes a segue into a credit card play for the banks. Because banks, if traditionally, if you look at it from a traditional lens, banks will not be able to, or any financial institution will not be able to assess or evaluate that customer because there's no income, there's no history of banking relationships. So use cases like BNPL, I think, is a good segue into opening up the population for more and better services from the banks and other financial institutions.
Right. And Laurel, you had mentioned about customer behavior, which leads me to the next panelist. Mohammad Yar Sahab, agar aap pehle apna ek brief introduction kar dein, and then we can go on to the question.
Thank you. I founded a company called OneLoad, which manages a retailer network, about 40,000 shops, micro retailers across the country. And these shopkeepers function as financial agents as well as providers of payment services and top-up services for telecoms, as well as utility bills, etc. And we typically provide around 12 million or so walk-in customers and settlement transactions every month.
So basically we are talking about a very huge segment of our country, which is the micro or the small enterprises, which are your the Khokas and the small retail shops. And I think mostly it's all cash, in our country. So we have right now close to 7.6 trillion rupees currency in circulation, which is part of, I think they are part of that particular economy. So one of the reasons which is normally cited is that, one of the problems or one of the road bumps for this segment is that they avoid paying tax. So that's the reason they don't want to get on board. How do you see that customer behavior changing, or how are you addressing that? So if you can give us some insight into that segment, please.
Sure. I think just to maybe give a little bit of context and profile of the micro retailer along with it. So our sales team is spread around 700 towns and cities across the country. And about 80% of the retailers that our sales team visits or our call center calls do not wish to be spoken to in Urdu, and certainly not at all in English. However, interestingly, they use our app, which is in English. And if you give them an Urdu app to get confused, we tried it. It's icons and English numbers that actually work really well for them. So we've tried many UI user experience exercises, and they're sort of okay with what they have so far. At the same time, it's also very interesting that most of them, about half of them, actually accept inbound payments digitally from EasyPaisa and JazzCash from walk-in customers. So they are not averse to digitization. Each one of those transactions is being documented at one level or the other. They're not averse to that. When they function as financial agents, they're typically transacting on every weekday. They're transacting close to 100,000 rupees per retailer per day. And there is significant withholding taxes on some of the commissions they get. So if they ever paid or filed a tax return, they should technically be getting a reimbursement of the tax that's been withheld. So, and they're not averse to documentation of any kind. The SIM they use is biometrically verified. When they sign up as an agent, cash deposit agent for any of our partners such as EasyPaisa or JazzCash, they go through a full documentation exercise. We have never heard from them that that is a problem. What is a problem for them is when they are accepting a digital payment, very simply, if looking at their life, they need to get money on a daily basis. So if we tell them that you do a transaction today, you get, somebody pays you today and you'll get the money 3 days from then, and from 3 working days from now, and it will be at a 3% MDR, merchant discount rate, that transaction is not going to happen. So if you actually ask the consumer to pay for it, the consumer would be willing to pay for it. Because consumers actually want, even in these sort of low-income neighborhoods where we operate, we actually see an insatiable demand for digitization. And there's an insatiable demand for cash collection. So we collect a few 100 million rupees of cash deposits for 2 telecom wallets every day. And we are not able to keep up with the demand. And every one of those transactions is documented and passing through the balance sheets of our partner banks. So, and it's taken us a while to figure that workflow and comply with the state bank guidelines and all that. So we've done all that. But I think to us, it seems like a bit of a myth that people don't want to be documented because of taxation. We haven't seen that. What we do see is that people are very conscious of value erosion. So if they are officially, cooking oil is one of the, these are small convenience stores, they function as convenience stores, your neighborhood corner shops, etc. One of the most sold items is cooking oil, and that has an approximate margin of 2% distribution margin. So you tell that retailer that if you sell this cooking oil at a 3% merchant discount rate, he's not an idiot, he's not going to accept that transaction. Even if he marks up, and typically as convenience stores operate, the prices are higher than the same water bottle this water bottle that you get from a supermarket is going to cost you less than what you would get at a convenience store. But if it's a cash transaction, they can build and increase their margin. And that is how they do it. They charge for the convenience to the consumer. But if you say, digitize this transaction, it's a 2% discount rate and you have a 2% distribution margin, it doesn't work. Now, how do we make it viable? Why is it that 20,000 or 22,000 active base of our retailers growing monthly is actually accepting digital payments as a preference to cash for buying eggs and bread and whatnot? Very simply, we do real-time settlement. We factor and we do real-time settlement. At the same time, so they get the money immediately, they're able to pay their suppliers immediately, and any money they get into the system in one load, they actually make money from it. So if you can show them a good economic value, we do not see any problem to digitization, whether it's English language or smartphones. I'll pause here.
So that's very interesting and insightful, especially because I think, like you just mentioned, and especially when you're working in 700 cities, that tax is really not the big problem. It's what you had just commented upon. Now this leads me to the next area, which is, like you mentioned, insatiable demand for credit and loans. But unfortunately, that's fine for people who have some sort of a credit history, and there's a huge number of citizens who do not have a credit history. So which leads me to the next panelist, Mr. Naeem Zamindar. He needs no introduction, but I would still like him to give a bit of introduction about Neem Exponential, and then we can take on the question.
Sure. Assalamu alaikum, everyone. Great to see this room packed with energy. Neem is basic. We founded Neem about 3 years ago, and the team that founded it has a deep experience in telecoms, in fintech globally, right? Having invested in over 80 fintechs around the world, some of the leading names in the world. And we saw that the real opportunity in Pakistan, where we talk about financial inclusion, we thought we wanted to change the paradigm. We wanted to change the paradigm to financial wellness, right? We want to build a business that enables people's wellness. So we said, let's design the business around that. Second thing we decided was that it needs to be embedded, right? Because the use cases come when you are doing your business, when you're part of a value chain, when your lifestyle is being enabled a certain way, it needs further enablement through financial services. So we said, let's build it around embedded financial services. So the goal of what we're trying to achieve is the financial wellness of the underbanked, right? And that is a huge segment in Pakistan. And how do we do it? We do it by plugging into different communities or value chains or digital channels to be able to capture the context of what they're doing, who they are, the insights that we get from there enable us to enable the financial wellness, right? So we have our own, is what's called the NEEM account, which can plug into any digital ecosystem. We can easily plug it. It's open API architecture. It's in UAT right now in 3 different communities. And once you plug in an account, you can issue debit cards, you can later on credit cards, and we'll plug in anything, like I said, it's context specific. Whether it needs an RDA account or a dollar account or a saving account, we can have plugins that allow you to enable that for any digital platform, right? So that's very powerful. And then once you're in that value chain, using the insights of that value chain, you are able to understand what the needs are. If it needs, for example, when we're working with farmers, in that value chain, we know a lot about the farmer. We know where his land records, right? Because we're working with a company called Khabar Kisan, which has insight into the land records. It has satellite imagery of the thing. They've got a field force. Using all that data, you're able to then, and because this company is starting to recommend now the right fertilizer, the right seeds, and the right pesticide, to not only enable the payment of it, but to also then finance it as well, right? And then hopefully when he gets a bumper crop, he has a lot of surplus to have the saving products ready for him. So the whole life cycle can be enabled. It's the use case. That's what Hiraj said beautifully, right? When there is a use case, adoption starts happening. That's how we believe the massive adoption, right? From 21% to nearly everyone using it is going to happen when you are able to enable their uses, their lives in a meaningful way. And it's a very exciting time in Pakistan. I think, this is the one thing that's going to be, financial empowerment and education are the 2 driving forces for this country to move forward. So happy to be part of that.
Just leading on, because, our country is quite diversified in terms of languages, the culture, the traditions, and of course all our digital apps or the, interaction is mostly in English, even though in some areas or some apps, I think it's more icon-based. And then also, I think almost 40 to 50% of the mobiles in this country are feature phones and not smartphones. How do you address the language and that aspect as well when you are reaching out to a larger population, given the diversification?
So like we said, we're a B to B2C player, right? So we enable other businesses. For example, in the case of Khabar Kisan, they have 6 languages through which they communicate, right? So for them, it becomes very easy. We also partner with OneLoad, by the way, right? And OneLoad, through all the retail outlets, we use the insights of their value chain, of their customers, which they've done beautifully. I mean, this is a great example of collaboration, to be able to provide overnight credit, right? And then term loans as well, right? And in their community, they're okay with, with English. That's fantastic. So we believe that that value chain or the other digital partner knows his customer better than we do, right? And we just enable them to do their job more effectively, to provide financial services, whether it's payment or whether it's lending, savings, or insurance, through those channels, for those use cases, right, specifically.
Okay, thank you. So talking of use cases, Yasir, you're running Kispe, so why don't you just give a little introduction about yourself for the people who may not know you, and then we can come to the question.
Yasir, I'm CEO of Kispe. Before joining Kispe, I was with Deloitte in San Francisco for about 2.5 years. And before that, I was in the Middle East with Al Hayl and in Mashriq. I'm a Mashriq alumni. I started my career with HSBC, project-based career as a management trainee. I was posted in Singapore, Middle East. So throughout my career, I've worked as a banker, but mostly it was my tasks were project-based. So I was, building, scaling businesses, and at a very early stage in my career, I started, kind of switching towards the digital side. So, we were talking before this panel, we were talking on coffee. I was saying that I want to see the day when, banks would have a non-digital department rather than a digital department. This is what, the idea is going forward, because digital for us should be native. It shouldn't be a separate department to take care of digital. KISPE, what KISPE does is we start with the, in fact, one more thing I want to make a reference to. I was very happy to, hear the speeches from Mr. Nadeem and Mr. Ishrat. I think Nadeem hit the nail on its head in terms of identifying the use cases and the opportunities in Pakistan. So we came to Pakistan about 2 years back. We came with a BNPL only play. Despite the challenges that we're facing these days in Pakistan, we still feel that this is an excellent opportunity. All emerging markets have their challenges. You see Egypt, you see even Middle East have their own challenges, Egypt, Philippines. Every emerging market has their own challenges. We feel that this brings to the table a lot of opportunities. So during these difficult times, we're able to transform our business from a BNPL-only business into an embedded finance play. And we're building more and more use cases. We're trying to become an embedded fintech play for banks as well. So far, alhamdulillah, we're a profitable company. Recently, we turned profitable. Sustainability is not an issue. We're trying to, so one more thing I want to address also, we talked about unbanked and, digitization and bringing these, individuals and companies into the foray of financial services. I feel that it has to be a top-down approach, not a bottom-up approach. We've seen that happen in multiple countries. They've issued wallets like crazy. Everybody has a wallet, but there are no use cases built around those wallets. If you pick up any organization and see the wallets that they have and inactive wallets that they have, this will be a huge percentage. So I feel that we need to be better at servicing the customers who are ready to be served, give them better access, easier access, make it less cumbersome for them, make it less pricey for them, and then this will trickle down to the masses. That's how KISPE is building its business forward in Pakistan, Philippines, and hopefully very soon in US as well.
If I can just ask you, because we're talking about use cases a lot, and we've been talking about financial inclusion in our industry for the past 10, 15 years. And always use case is the question mark. यार use cases नहीं है, use cases नहीं है, तो क्यों नहीं है use cases? 15 साल तो हो गए सबको, they've jumped into this, financial inclusion part. I mean, of course, partly it's through the social protection, BISP and SAS के through जो payments हो रही हैं. They're also trying to, get people on board. But वो तो चलो एक specific segment है. But what about, so why don't we have the right use cases? What is it that's missing? Are we not doing on-ground research? Are we just sitting in our offices and, having coffee and deciding कि यार use case क्या होना चाहिए? What do you think, in your opinion, is missing from this?
As I said, this will be my opinion, and it's not qualified. And let's pick up from what Tughal said. I think Tughal is on the right track when it comes about, when he talks about getting customer feedback, starting from there. I think this is critical. In any country which is dominated by banks and few fintechs, everybody gets into a comfort zone, right? It took Dubai about more than a decade to come up with their own wallet. They started talking about this like in the early 2000s, and took them about 15 years to come up with their own wallet. It's just that the banks or financial institution, or it's not just the financial space, in any organization, name any industry, textiles, manufacturing, when they become too comfortable, sometimes this is a natural phenomenon that some innovator will come and jolt them up. I think this is something that was missing in Pakistan, and I'm very happy that in the last 3-4 years, now fintechs are coming up, even not just fintechs in the financial space, but across other industries, these new players are coming up with more and more ideas. And the good part about Pakistan is that we can always catch up. We know what is happening in the West. We know what's happening in the US. We can always replicate it and do it better in Pakistan. So I feel that once we get into a comfort zone, I think that's a natural phenomenon. Somebody has to come, wake them up, build those use cases for them, and things will go forward. And it's just not a Pakistan problem. This is everywhere. No big deal.
I think everyone is trying to crack that, especially in the developing and emerging markets.
But I'm very happy to see how UBL is taking this. I talk to a lot of banks these days. Most of the banks I've met, they're very progressive. They want to make a difference. They know, they realize the market sentiment. That's very encouraging. 3 years ago, that was not the case. Even in Pakistan, I've seen it in the Middle East, that wasn't the case. A lot has changed in 3 years, and I'm very happy that the banks in Pakistan are, aggressively pursuing it.
Talking of changes, SECB just recently introduced new regulations for the NBFC. So since you fall in the NBFC segment, obviously there's something more around, the customer complaints and all these other issues, and then only allowing one master app and all the secondary apps to be, to be seized within 90 days and so on and so forth. So how do you find the new regulations? How are you coping with them? And do you have any feedback on that?
Interesting. I don't know. Can I speak my mind?
Absolutely. No one's going to stop you.
Yeah. Okay. So मैं सिर्फ एक analogy दे देता हूँ without saying a lot. जब आप trade खेलते हैं तो जब bowler जो होता है वो wide करा देता है on the off side, तो जब कप्तान उसे डांटता है तो next जो होता है वो bowler जो अगली गेंद कराता है उसको over compensate करने की कोशिश करता है और leg पे करा देता है और चौका खा लेता है. So वो अपनी गलती तो दूर कर दी उसने वहाँ से, लेकिन एक दूसरी गलती कर ली. So I feel कुछ चीजें मिलती जुलती हैं हमारे साथ पाकिस्तान में ऐसा हो रहा है. But I feel that we have very good relationship with SECB, and they have played a very important part in terms of bringing the ecosystem to where it is right now. Without SECB support, things would have been very different. And I think they're doing a phenomenal job. It's a learning process for everybody. It's a learning process for us. It's a learning process for these regulators, especially those who are involved in the innovation space. It's a learning phase for the country as a whole. So from that point of view, it's great. I think the regulations are a step in the right direction. Obviously, there were some things that we're not too, happy about. For example, we don't want the regulator to be meddling in our operations. For example, we don't want to be told that how to run our business. Jazz के पास 25 apps हैं. Every bank has more than one app. So it's not that, I understand where they're coming from. There could have been better ways of implementing it, but I understand this is how to safeguard the consumers. And we appreciate the intention. It's just that sometimes it's a little overbearing on the business model. Why do we want to? Why are they forcing us to become a super app? We don't want to become a super app.
Like in the banking segment, you have the Pakistan Bankers Association, which deals with the regulator taking into account all the feedback and from all the banks. On the NBFC front, do you have some sort of an association, something similar, which can talk to the SECP also?
Yeah. So just remember, these are very nascent organizations. 3 years, 4 years, 5 years. Compared to banks, these are like kids, babies, right? So we're not very mature when it comes to, having a united front when it comes to the regulator. To be honest, the regulator never had that kind of approach that would motivate us to have that kind of unified approach, because they have been superb. They have been very, friendly towards innovation and new companies. So we never felt the need to do this. Now I think I've seen people, coordinating better, these unions, kind of a union coming up, and these are forums coming up to present a unified front for the SCP. I think which is a great step. This is, as I said, part of the evolution. So
it's more in the collaborative perspective that, how can you,
not a pressure group, but just this collaboration, just to understand, because we need to understand that these are diversified institutions, small diversified businesses. Most of these are like 3 years old, 4 years old. They're babies in terms of, if you compare it to banks. So they're also on their own evolutionary path. I think that, the way SCCP is approached it, I think it's been great. We love coordinating with SCCP. I think we collaborate on multiple fronts to take this ecosystem forward and enhance it and enrich it. But because of the diversified backgrounds of these small companies, this difficult to come on a single page every time. But coming back to your question of, SSCP's regulation, I think it's a right step in the right direction. It does safeguard the consumer's interest. I think it's a great step from that point of view. I think the biggest issue that we've missed out here is basically the loan sharks who are out of the system. अभी जिस तरह जो टैक्स पेयर्स नेट में हैं उन्हीं के ऊपर टैक्स दिए जा रहे हैं ना, it's something similar to a extent. The biggest problem I feel the consumers, the problem or the danger the consumer has is basically being loan sharked by these organizations or firms who are out of the system, who are operating out of the system, out of the radar. That's the biggest concern that we have. We want to be, with a regulated entity, and we want to safeguard the consumer interest at the same time, protect our own. But I feel that this is an area that we have missed out yet, and we need to do more work on that from a regulator's point of view.
Okay, thank you so much. Moving on, since we are talking about, the larger discussion is on the digital side. Our next panelist, Mr. Saad Niazi. Before I ask the question, Saad, can you give a brief introduction about yourself and about your company?
Thank you, Mir Saab. Assalamu alaikum, everybody. My name is Saad Niazi. I'm one of the co-founders of Keynote and also the Chief Operating Officer. Keynote happens to be one of the prominent fintechs in the country. In fact, I would rather say, other than Easy Paisa and Jazz Cash, put them in that category. Keynote happens to be the first one when the name fintech, the terminology fintech even was not coined back in the day. In terms of payments, we are in the non-bank. Our market share is approximately close to 30%, and that way, struggle is still going on. We just started, so let's see where it goes.
Now, your biggest enemy is cash, and cash continues to grow. If I was just looking at last year's transactions as compared to the current transactions, this number of transactions at the ATMs and over-the-counter cash is grown by 90 million transactions. So we see the branches which are, I think on average, I think there's a 5% growth of branches. Similarly, ATMs are obviously growing, along with that as a vehicle for cash dispensing. Recently, we have seen the terminalization, grow up from maybe a few years ago. I think it was around 40,000 or so, and now it's past 100,000. So there's a slow, I think, increase in the terminalization. And even if you look at the plastic, if you look at debit cards, total plastic is around 40 million, but debit card is, I think, around 30 million. And 83% of debit card transactions are conducted on ATMs for cash. So the POS side or the terminal side or the retail transactions are, obviously they're growing, but at a very slow pace. So how are you addressing that, and where do you think, are the pain points for your growth, for digital to, come into play and take over?
To start with, there's a dilemma which I would like to highlight actually. A year and a half ago, in fact, we celebrated that we have hit $100 million a month mark in terms of processing. And unfortunately, because of the situation and environment, we are at the same level again, right? So even after 1.5 years of hard work. So the principal issue comes down to companies like us all around the world, they have to seek investments to expand. It cannot happen simply through your own pockets or through your own business model. That's true to every non-banking entity. Although when we compare banks with non-banking entities, fintechs per se, EMIs, PSOs, or who are out of the regulatory bit as well, it's a very unfair comparison from both sides. To start with, banks have their own compliances to meet. We say banks are slow moving. I working in a bank along with you, and a lot of other friends over here. It used to be tough day at work. Every day you turn up and it was a fight out there, and when you leave the bank, you say the fight has changed. but still continues. So banks are doing a fantastic job. We need to realize that the scope of every institution is different. I mean, one way to judge whether a bank is doing good or not is to, simply we have to start the approach of carving out digital entities out of the bank. That is where the real innovation comes in. When the times are desperate, when there's uncertainty of success, that is probably my experience of 10 years says that, we were very hardworking in the bank, but we were very innovative because of desperate times. So that is one, I think, there is an approach-related issue as well. In terms of cash, I can probably give you the best answer from the position that we are sitting in, because we took up a challenge back in the day when discussions used to happen, and there were actually 32,000 machines back in the day. And the total volume, I clearly remember, that was processed processed by cards on POS terminals was 84 billion rupees. Now we do more than 3 times that amount per year. That's one entity which has about 30% of the market share. So in terms of that business situation, it has improved drastically. But cash, as I ask you, what is your prediction? What will be the cash in circulation next year? Or rather, next to next year, if we keep on doing everything the same way? I think we all know the answer. You'll simply add up the percentage by which it has been increasing. So there's something clearly wrong that we have not been able to address. I believe in use cases, but that is at a probably third level. That is when you have an environment, that is where you have a captive, or you have a potential market. I believe Pakistan has a lot of potential for digitization, but the potential market still does not exist, because we haven't enabled an environment which creates use cases. There are a few that exist, as Mr. Mohammed Yar mentioned and Naeem Saab mentioned. We are tapping those. The growth in a fintech or digitization, if you look around the world, happens at an exponential level. E-commerce growing by 84%, should we pat our backs on that, or it should have grown by 2,000%, right? That is the question we need to first address. So means there's something fundamentally wrong. Those fundamentals, we need to understand, cannot be fixed by virtue of regulatory interventions only. We are blessed, as Yasser was saying, with very good regulators who are ambitious, who work hard. In fact, at times they're thinking better than the players themselves, and surprising them by this can be done, this has happened. They do a lot of research for us as well at times. So the terminals grew from 40,000, the exact number, to 110,000 because of one small intervention that was very daring by central bank 3 years ago. Else you won't see 3 players in the market which exist right now. It's a competition for us, but overall it is better when more players are there. At times they do the hard work for you, and you go on and take advantage and place your terminals over there. So it's always good, Point is, where is the layer of what we call government? Unfortunately, it is actually absent. Last 15 years, you can see individual efforts, when I say individual, I say companies, efforts made by companies, Easy Paisa, Jazz Cash, they really brought about a revolution. What has happened? Where is the bottom line? Now the age of valuation is kind of gone, it's pretty hazy, nobody's sure what value to pursue. The age of sustainable business is now here, and it's not going away probably for the next 2 to 3 years. That is the time where we all realize around the world the government intervention, not the revenue authority or the regulator. Government is the layer above, the fiscal policy, the 10-year plan, the 20-year plan, and the catalyst. You see, anywhere you see around the world in your neighboring countries, don't go to the West, go to the Middle East, go to your neighbors. It's been very solid, one-point agenda that digitization happens to be as important as wheat, as important as, any crop in the country. We haven't come to that level. I'll just give one example. For example, if government issues a statement right now and they pledge on anything that is biased to all of us that, after 3 years, no payment whatsoever will be based on cash or check, it will be through digital means. You will see, you will have to invite 15 more people in the panel and they all will be very happy. Innovation will happen, money will flow in. What about the guarantees for the businesses who are here trying to raise funds, setting up holdcos outside, keeping money over there? This has become a trend and we've all accepted it. We are not concerned about it. So, our ambition was when we started 10 years ago that we will become the best and one day the biggest. So I can, mashallah, say that we became the best about 3 years ago, but when we reached there, we said it's pretty lonely at the top. And you know what next? There is no peak to climb because the potential market has not been nourished. I mean, talking about numbers, in Pakistan, we say 220 million people. Now, how many of them, even if we put money in education, will be motivated to do it? Whereas my banking experience and my experience at Keynote clearly says if you give a discount of 70% at barbecue tonight or any other restaurant, people download the app, they learn how to use it, and they fight for each penny, they know calculation. It beats my imagination. How would people do it when they're not educated? It means the motivation. Absolutely, but it has to come from the very top, which is absolutely missing. Unfortunately, I don't see any engagement of that sort happening right now. It will take time. That's the scary part, unfortunately.
But there has been some movement in the past, a few years perhaps, on the MDR. So how what kind of I mean, is MDR a big issue? Is it something tweaking around makes a big difference? In your opinion?
I mean, I have data to back it up as well, by the way. These are misconceptions. Right? Three big misconceptions. Number one, this business is hampered by the tax-related issue. People don't want to get tax next. People avoid tax net till the time they believe that paying tax or staying out of the digital realm, which one is more advantageous. So I've seen a lot of entities getting converted and started accepting digital instruments because they simply couldn't deny it. It was a 24%, losing 24% of the business, right? That's the average. Then comes the part religious element. I think it's more overblown than anything. It's very much overblown. You have answers to all that questions. I'm not going to go into details. Third part, businesses are very happy to pay the MDR. What they say is that why should I pay it when the other person besides me is not paying it? So it's that. All when it is fixed, when you see that three people in a market, they do it, the rest always follow. And we are a prime example. We entered into this market with 4 banks doing it already. People like you have also worked on those businesses. But we were able to carve out our own space and doing well, mashallah. But what I think needs to be done over here, other than the policy intervention of central bank around MDR, we need to realize what actually happened was they made the business sustainable. As soon as State Bank did that, the interest came in and we see 2 international very big players coming in, showing interest, putting in money. So, I mean, it has to be holistic. It has to be, the revenue authorities have to chip in at the same time with the same motive of digitization. You do that and you will see the results that we have seen in India. With 1 year of discomfort in terms of demonetization, now you see it as having an impact on the discount rate as well. More liquidity available with the banks, the lending has become cheaper, and now this impacts everybody down the spiral.
Right. Thank you. So, since we have in our panel pretty much all the parts of our ecosystem, so one of the key parts is the solution providers for the banks primarily. Farokh Ali Beg Saab, आप अपना एक brief introduction करा दें and BPC, and then we'll go on to the questions.
Thank you, Najib Saab. Thanks a lot. So my name is Farokh Ali Beg. I'm the managing director for Pakistan. I've been in the industry from last 15 years. I've been with the company for somewhere around 7 years. So we have been, we have established BPC around 6 years back in Pakistan. And BPC is actually a Swiss-based organization which is actually serving 300 plus international customers in 100 plus countries. We do have a good clientele now in Pakistan, serving one of the major banks in the industry. And I think that's a quick introduction about the company itself altogether.
Okay. So How do you find, I mean, obviously, over the last, I think, 5-10 years, especially in the banking sector, the legacy systems have now, slowly and gradually, but I think more rapidly in the last 5 years, they are, upgrading and I think moving with the world in terms of, turning around, products and of course, being part of the digital landscape as well. Now, most of the, platforms, or core banking platforms or other solutions are obviously, they're coming from abroad, right? But, so how do you manage the in-country, changes in terms of regulations or, things of that nature? Because you can't have a system for each country, right? So how do you manage that part when you're deploying it, let's say, in Pakistan?
Okay, so that goes in hand actually from the product side if you talk about BPC. So usually those international products, they are more configurable and they have, they have been deployed in many countries. So what the, what the global standards are and how they are, how they are going to be deployed in any country. Then the second part is not only about a product that is going to a certain region, but actually the R&D teams which are actually, working at the back before bringing that product into the market altogether. I would especially like to thank the regulators over here who has a very clear framework in terms of the technology provider. And the second part goes to the industry as well because they are already been compliant with the global standards altogether. So in terms of the solution providers, they are very much flexible in coming to these markets. Number one, if they have the right product, if they have the right configurations, and if they know what the regulations are. And this is why one of the reasons that we have, BPC has established its office in Pakistan, and we have the local people over here who are actually, beefing them up that how the things will work on ground and how the regulation has to be complied when you have to implement any product altogether over here.
Okay.
Mr. Mir, we are all out of time. I hate to do this to you, but yes. We can take one or two questions from the audience. Who has a yes over there? Ladies, if you can bring the microphone to the speaker.
मेरा नाम आमिर शौकत हुसैन है और मेरा सवाल टुवर्ड्स साद नियाजी है कि we discussed कि regulation is not the problem, regulator is working in the right direction, language is not the barrier, platform is not the barrier, बहुत सारे हमारे पास जो है वो EMIs हैं, and the fundamental problem जो आपने identify किया वो है government. ये problem पहले भी था, आज भी है, future में भी रहेगा. So what is the solution for it?
ये पहले भी था, आज भी है, कल भी रहेगा, तो आपको यही लोग दिख रहे होंगे यहाँ पे. कुछ चेंज खास नहीं होगा. हम ग्रो जो कर रहे हैं, देखें ग्रोथ हम जरूर करेंगे. There will be lot of new customers in the regulatory ambit, but pace यही रहेगी. अब प्रॉब्लम क्या है जो हमें इस वक्त नहीं समझ आता because हम उस लेवल पे नहीं पहुंचे. Without pace, it is actually a disservice. We are taking 2 steps backwards because of the pace. जब आप किसी फिनटेक को या किसी नॉन बैंकिंग एंटिटी को ये टास्क देते हैं कि वो निम्बल है, वो तेज ग्रो करे, तो उसका इम्पैक्ट क्रिएट होता है. वो इम्पैक्ट एनवायरनमेंट के बगैर क्रिएट नहीं हो सकता. बहुत सारे लोगों के लिए आज बहुत बड़ा पोटेंशियल है. फॉर अ कंपनी लाइक आवर्स, हम उस पोटेंशियल हम इस वक्त एक तरह से वी आर द कर्व which is leading the space, right? Don't need to market ourselves too much because people know what Keynote is. This is the problem. मैं जिन कैटलिस्ट की बात कर रहा था, मैं वो इन शॉर्ट बता देता हूँ. Demonetization was one in Saudi. हर किसी को आजकल buzzword है Saudi because the PIF is the biggest catalyst. PIF ने बड़े clearly ऐलान किया हुआ है कि infrastructure projects हो गए या digital projects हो गए, approximately $300 billion उन्होंने खर्च करने 8 साल के अंदर. Now there will be companies over there, 100 में से 90 फेल होंगी, लेकिन वो सब स्ट्राइव कर रही होंगी एक सर्टेन ऑब्जेक्टिव के लिए. यहाँ ये एनवायरनमेंट टोटली एब्सेंट है. प्लस सपोर्ट उस वक्त प्रोवाइड की जाती है. मैं एग्जांपल दे रहा हूँ. अगर फर्ज करें बाहर से डेलीगेशन आता है इन्वेस्टर्स का, उससे मुलाकात गवर्नमेंट के साथ कौन कर रहा होता है? मैन्युफैक्चरिंग सेगमेंट कर रहा होता है, किसी और किस्म की बैंकिंग सेक्टर कर रहा होता है. Where are your tech companies out there? फिर अगर हम बात करते हैं कि हम बड़े 20 लोगों को मिलाएंगे तो उन 20 लोगों में कौन होता है? हम एक किसी बड़ी आउटसोर्सिंग कंपनी को उठा के ले जाएंगे, वहाँ मीटिंग कराएंगे. सो द प्रॉब्लम इज कैटलिस्ट क्रिएट हमने आज तक नहीं किया. एक छोटा सा कैटलिस्ट हो सकता है, बेनजीर इनकम सपोर्ट प्रोग्राम की कोई डिसबर्समेंट सिवाय डिजिटल के हो ही नहीं सकती. डिजिटल से मुराद है उसकी स्पेंडिंग भी डिजिटल से होगी. मे बी इट्स अ रॉन्ग थिंग, आई एम नॉट द एक्सपर्ट, बट आई एम सेइंग जब तक ये नहीं ढूंढेंगे तब तक वो मैग्नीट्यूड बिल्ड नहीं होगा. These guys are supposed to sell their systems. कि उसको बेचेंगे ना जब मैग्नीट्यूड बड़ा होगा, ये भी उसी वक्त कमा रहे होंगे पे एज यू गो में. लैंडिंग भी उसी वक्त हो रही होगी जब वो पोटेंशियल एग्जिस्ट कर रहा होगा. दैट इज द इशू. रेगुलेटर में अगर आप मैच कर लें, रेगुलेटरी फ्रेमवर्क पाकिस्तान का बहुत सारे मुल्कों से बेहतर है. हम IBFD सर्विस हमारे पास जो वन लिंक की है और जो अब रास्त पे हम जा रहे हैं, ये बहुत सारे मुल्कों में है ही नहीं आज तक. आप पेमेंट ट्रांसफर करें 3 दिन में मिलती है तरक्की याफ्ता मुल्कों में. तो लेकिन लेट्स नॉट बी हार्ड ऑन आवरसेल्व्स एंड द रोल हर एक को प्ले करना है, क्योंकि हम पाकिस्तान की बात कर रहे हैं, दुनिया की तो बात नहीं कर रहे हैं.
Okay, we have one last question over there.
Yeah. Thank you so much. My name is Husain Malik. I am from Steek, the trade bureau, the first state bank licensed trade bureau. And I have a question for Mr. Naeem. You talked about alternative data, right? So it's a very interesting kind of setup that we are actually working on, because we are the repository of conventional trade data collection, right? And currently, as we see it, like there are about 22 to 23 million customers that have already, availed credit, and their credit histories are available. But obviously, the rest of the, let's say, the adult population of 60 to 70% are unbanked, or maybe they don't have access to formal credit. So you mentioned one of the areas which is specifically very interesting, and we're also working on that, like using satellite imagery for agri sector. As well as drone footages and geofencing and other activities. What other alternative data as you see? So I would like to, if you can comment on those. Like one is obviously open banking regulation, deposit data relation. The others are related to obviously the application level data that is being shared with us, or to be shared with a centralized repository, right? And from there it is provided to other institutions. We can take the example of India Stack in India and Pakistan. I think SCP and Karandas are working on that. So what are your thoughts on that? I mean, on alternative data, and where should it reside actually? From where it could be sent and shared with all the players to use, specifically for the new to bank and new to industry customers. Thank you very much.
Sure. I'll give the example of OneNote, which is sitting right here. What we've done with OneNote is, based on their data, they have 70,000 plus retailers that they work with, where they have the whole transaction history. They're transacting with them. They also have payment trails with them, right? So what we've done is we've partnered with them to be able to then credit score them, right? And then provide financing through their channel. So we don't even come in front. Using their insights of their customer, their needs, we jointly develop products. One of the initiatives is overnight lending, so that the retailer can do more sales, then term loans, and many more products in the future, right? Every value, and we're finding out that this is the case in nearly every value chain, right? Where, for example, people like Food Panda, right, who got 70,000 bike riders, they also have credit limits. So based on their transaction history, we can easily start providing credit to them, and then later on to even maybe finance their motorbike, etc., right? Once you start getting insight into what that customer's needs are, or dynamics are, or value chain performances, you can easily start financing them based on the data. And then again, if we can converge the data that you guys have, right? Like you said, most of them are unbanked. The people that we're talking to, unbanked or very underbanked, right? They've never taken a loan before, and therefore we need to be able to use the insights of their value chain wherever they're operating to be able to provide financial services. And there are thousands of use cases like that, right? Starting with even inventory financing. A lot of these B2B e-commerce companies are now wanting to finance inventory and sales within that value chain. Again, based on their transaction history, you can easily provide that kind of the right kind of financing for that market segment. And financing is only in road, and we work with thin margins. So also our model is very different, right? For example, in the case of one loan, from the margins that we make, we share most of that with one loan, right? They make money. We're more infrastructure oriented. We are basically providing them the credit scoring capability and working with them to enable the lending performance, right? But is their customer, is their relationship, so they should be able to make a significant amount of revenue. So in each of the value chain, the value chains are incentivized to first of all increase the value to their customers, right? Number two is to also create a new revenue stream for themselves. So this is a win-win situation. We truly believe that the lending space in Pakistan is going to grow at least 10x over the next few years when embedded finance really rolls out at scale, right? And it's a graduation process. When you take a first loan, we start working with you, right? And start providing you data. And these millions and millions of people who start coming into the credit culture, environment, and then we can build histories with them to progress their financing needs through the life cycle.
If I just add two sentences to that. So part of this exercise with the NEEM and what some of the other loan products that we have is that we try and build behavior profiles of retailers based on time, location, day of the week, day of the month. So a credit bureau would say this retailer is worthy of getting this much credit. Whereas when one load issues loans, we have a different markup rate for a Saturday to Sunday loan versus what we have for a Monday to a Wednesday loan. So the same retailer has different credit worthiness because that retailer's behavior changes based on the day. So it's behavior-based lending, which is very important, and understanding the business of the customer, that's very important. Thank you.
Thank you very much, gentlemen. Panelists, let's give them a warm hand of applause. Mr. Moderator, you did a good job. Gentlemen, if you can please stay on stage. We have a little token of appreciation for you. So I'd like to call upon Mr. Hamza of TerraBiz to present, starting with Mr. Mohammed Hiraj, CEO of OneLoad. Thank you for your support, sir. Perhaps the rest of you can come on this side so that you're not in the photograph, unless you want to be. You want to be in the photo? Okay, Mr. Husain. We will also take the group photo. Next up, Mr. Tural Amir Turab Ali. Mr. Yasser Khan, CEO of KissPay. Yasser. Mr. Naeem Zamindar, founder of NEEM. Next up, we have Saad Niazi, CEO of Keynote. Thank you, Saad. And Mr. Furuq Ali Beg, Managing Director, Pakistan for BPC Banking Technologies. Thank you, and we cannot forget our wonderful moderator, Mr. Mir Najib Rahman, CEO of Expense Pakistan.
photo of this lovely panel on digital payments. The panel photo. All right, gentlemen, the floor is yours. For one last time. Let's make it quick. We are running late. People are hungry, yes? Me too? Okay. Right, thank you very much, gentlemen. There's so many cameras, I don't know where to look, to be honest. Thank you, Mr. Hamza, for the distribution of these tokens. All right, and now we have a very important fireside chat with Born Again. So, I don't know if you remember, but in May of 2020, a Karachi-bound flight carrying 200 passengers crashed into a densely populated area during its landing approach. One of two miraculous survivors was Zafar Masood. We feel privileged to have Mr. Zafar Masood, who is also the president and CEO of the Bank of Punjab, among us today for this fireside chat. So please join me in welcoming Zafar Masood, president and CEO of the Bank of Punjab. And this interview or fireside chat will be led by our interviewer, Mr. Adnan Rizvi, partner and head of advisory for KPMG, Pakistan. Welcome, gentlemen. Please take note of the timer that will be set here for you. Mr. Interviewer. Thank you.
Assalamu alaikum and a very good afternoon to all of you ladies and gentlemen. Thank you Hamza and TerraBiz for providing this great opportunity to have a chat with not only a local but now an international celebrity, Zafar Masood. So big round of applause. So I know Zafar Bhai for almost 2 decades now, and just to clarify to all of you, if you were expecting anything about that difficult incident, so that is not going to be mentioned in today's discussion at all, because while he is extremely strong, I am not that strong, and I was with him during that period, so I don't want to have any recollection of that. So I consider Zafar Masood to be a financial expert and also a great leader. So the questions I framed are in these two contexts. So Zafar bhai, first of all, you have been not only mentioned but highlighted. You are the first one to be mentioned in that Master Mentors, which is a very famous now book of Scott Jeffrey Miller. And in that, I think the one key message which he has ascribed to your style of leadership is management by empathy. So just share with our audience briefly as to what exactly is meant by that, and practically how do you put that into effect?
Thank you, Adnan. Thank you, Hamza. Thank you to the DigiBAP team. I'm really honored and privileged to be here today and given this opportunity to share certain thoughts with you all. And I'm particularly honored that I've been sort of interviewed by none other than Adnan Rizvi, who is one of the best professionals that we have in the industry. So I'm expecting certain hard questions from him. He's not an easy guy, as most of you know him. And he started out with a very tricky one as well. Management by empathy is something which I always sort of try and adopt in my management style. But I've been tentative about it. Tentative in the sense, is that the real way of managing people, or is there a better way of managing people? But post my my experiences of May 2020, that was kind of reinforced. And now I've come to this conclusion that this is the best way to go. Management by empathy is at times misconstrued as something where you tend to be too soft on your management style. Not true at all. It's reinforcing the merit-oriented culture. It reinforces the fact that you have to give people chances, you have to give people opportunities to perform and deliver. My experience, and I've been talking about it a lot lately, the people are inherently good people. You need to give them opportunity, you give them leeway, a platform, and then they come around and they deliver. And the idea is that you give them the training, you give them the exposure, and if they don't deliver, then perhaps you have to take certain difficult decisions, because if you don't do that, you are actually not being empathetic with those people who are delivering, because you will be giving the benefit of these people at the expense of those who are actually delivering. And this has been my motto now as far as the management of people is concerned. And it's delivering, to be honest.
Indeed, we can all see that. So you spent your formative years in Citibank, and then you moved to DIB and Borgen, the private sector primarily. And then you directly stepped into national savings, which can be the most extreme of the government organizations. And after that, Bank of Punjab. So what was your motivation of going towards these organizations, which I don't think any private sector professional even considers?
Yes, after working for, and I call it 360-degree experience. So it was already 270 degrees, then I decided to go for national savings. I worked for Citi, Barclays, DIB, as you said, and American Express in Pakistan, Middle East, and Africa. And learned a lot in terms of how the governance takes place, how the management is supposed to be done, systems, processes, and everything. Almost 25 years. And then I became an entrepreneur. I set up my own company called Butch Capital, which was successful in its own right. And then I did the consultancy as well. I've been on the board of State Bank of Pakistan for 2 terms. So got the flavor of how the regulator works, what are their constraints, what are their priorities. So given all of that, I thought this is about time for me to pay back, to deliver to these institutions. These institutions are our institutions. These institutions are owned by us. They are not owned by any political party. They are not owned by any government. They are not owned by any politician. These are our institutions, and we have to work towards improvement of these institutions. We have to make that difficult route to get there, and then make sure that you will deploy all your learnings in these institutions for the betterment of these institutions for the country in 2 ways. One, in terms of contributing to the exchequer or reducing the burden on the exchequer. But two, in terms of public delivery, which is a critical aspect of these very purpose and critical aspect of these institutions. And since it's a digital, I'm not saying this because it's the digital conference that I'm sitting in, but digitization remains the cornerstone in both these organizations. And the government is still very averse and not being exposed to the digitization as such. And national savings, my biggest success, if you ask me, Adnan, has been the completion of automation when I was there, and then initiation of the digitization, which took the organization to the next level. And I'm really very proud of it, where national savings stand today. And related to this digitization is also, I was listening to the previous panel, and there was a talk about documentation of economy, and there was talk about cash economy. I'm also take a lot of pride in the fact that, when I was in national savings, we had introduced the registered price bonds, which was the major step towards documentation. We also introduced we also made national savings as part of the clearing system of banking, through which now it became much more efficient to check for check clearance, for coupon clearance of national saving customers. And also, the framework for Islamic banking, as well as the framework for what we see now is Naya Pakistan certificate, was designed while I was there as Overseas Pakistani Savings Certificate.
Great. So you come from a renowned literary family, and with Nana, Sayyid Taqi, John Elia and all. So you've been brought up, your illustrious father, your mother, and all the family members. So how does that background reflects in your management style, and what would you recommend to the younger generation in terms of having some flavor of literature in their lives?
So Adnan, I have a thesis. In fact, I intend to write a book on that as well. It's called Literature and Economy. I believe that literature and economy are one and the same thing. They join from the hip. And, in this competitive world that we are operating in, and especially I'm sitting in a room which is full of these creative people. Digitization can't take place. Automation can't take place if you're not inherently a creative person. And, I think you have to have something more than your professional exposure to then make a difference from the others. And that difference will only come if you are exposed to art and culture and literature in a certain way. Art and culture and literature gives you a sense and connection with people. So you make economic policies in isolation, but if you do not have the exposure and connection with people, the impact disappears. Same goes for any product that you are developing in digitization. If you do not have that connection with people, that would tend to fail. Therefore, these connections are very important, and these relationships are very important that you create through literature, art, and culture. If you look at globally, we have seen how the literature has played a role in terms of bringing in revolution, political and economic both. Look at, Russian Revolution. Look at French Revolution. Look at industrial revolution of UK, where, the likes of Charles Dickens, Hard Times, and Daniel Defoe's, Robinson Crusoe made a major role. China, for that matter. Mao's little red book. All these things played a major role in giving people exposure and connecting each other, which then results into an economic development which is much more sustainable and long-term, and this is what we was lacking in Pakistan. I think we need to connect the two, otherwise, we will hit the brick wall at some point in time.
And Bank of Punjab is doing an excellent job in promoting literature and culture. Now, finally, coming towards the macro picture, and you are a prolific writer. I think you are one of those who write pretty regularly on various economic issues, and having been at the helm of affairs of national saving, where you're seeing the entire sort of monetary and fiscal policy and all. So I think if just for the benefit of the audience, if you were to take charge of the economy, what are the three key steps you will take, or you would suggest the incumbent to take?
Adnan, I always considered you as a well-wisher and a friend. But you certainly not the one asking me this question, putting me on the spot. The problem is that our problems our issues are mammoth. They're enormous, and confining them to three would be an even bigger task and a half, to be honest. But since you've already put me on the spot, let me try and figure out what those three areas could be. So if I were to think and start, then and I've always advocated it, is the fact that, I think we need to make our institutions more independent, and I'm particularly referring to our regulators. Our regulators currently are, for example, under line management. We have to get the best talent from the market to run these organizations. Until and unless we do that, we will have a problem at hand. And there are certain entities which are ripe for privatization. And if I look at the entities, top 10 entities which are a drain on public sector, on public exchequer, 8 of them are definitely a right candidate for privatization. These are the Pakistan Steels of the world and the Discos. The two remaining behind are PIA and National Highway Authority. Both of them could be, could also be prepared for privatization, but I personally think there is a viability gap fund which is required for this. The kind of business they're involved in, they can't be privatized right away until unless you have a viability gap fund at the government level already.
Restructured initially.
Absolutely. That's the given point. Then on the second one, I would tend to take a crack on our existing fiscal policy. On the fiscal policy side, there's a social contract needs to be rewritten. I will, because of paucity of time, I will not get into the details of it. But on the fiscal policy side, we need to see and critically evaluate our subsidies structure. And those subsidies have to be routed towards primarily two areas. One, to the vulnerable sector, and two, for those sectors where you can generate export liquidity, whether that's a bigger problem for us. And therefore, and we also need to look at, while at the fiscal element, of our existing arrangement with the provinces and their capacity building. The problem is that the provinces has the most critical, in my mind, the control on education, but they don't have the capacity. Even if you increase which I believe we should, increase the budget on the education side, let's say double it from where it is today, the problem is on the capacity side. So it's a chicken and egg situation, and we have to work on both of them. Last but not the least, yes, and in fact it's coming from, I came across this article this morning from Shahid Kardar Sahab, is trimming on the government size. I think the size of the government with the use of technology can be reduced substantially. And it's not just that, we also need to look at the existing compensation structures and HR and accountability. Let me repeat, accountability policies. They should not be unreasonable. Making a regulator independent, let them run with the accountability rather than somebody else who does not understand these businesses and dynamics of these businesses. So therefore, you need to reduce the government, use of technology there, reduce the size of the government, use of technology there, bringing in change the HR policies, accountability policies, procedures, and you need to get certain technicians in the technical ministries like power, like energy, which is petroleum, and that's where
subject matter experts.
And that's that you have to respect their opinion also. So lastly, in nutshell, the public-private partnership, both in terms of collaboration at the policy level, as well as at the HR level, is the most essential of these are the three I could think of.
Thank you very much. I think it's very comprehensive, and thank you for your overall sort of comments, and I'm sure the audience must have benefited from that. I don't think we have time for any questions from the audience. And
does anybody have a question for?
I think so many people would have.
Yes, of course. And it shows that you are well acquainted.
So
synergy is quite
you
good.
can ask the questions after the session.
Yeah, so that's a good idea. Thank you very much, gentlemen. Mr. Zafar, Mr. Adnan. Please stay on stage. We have a little token of appreciation for you. Mr. Hamza will be presenting. So our first one for Mr. Zafar Masood.
So I take this opportunity to invite my dear friend Asfar Hassan also on the stage, the former chairman board of investment, to help me giving away these flags. Thank you.
Mr. Adnan Rizvi of KPMG. Thank you. We also have a token of appreciation for Mr. Evans Manyuki. Come on up here, Mr. Manyuki. I think it's the tables that are making us white, but see, I wore white, so it doesn't show. Thank you, Evans. And we would like to call upon Ahson Saeed for FinTech Association to come and claim his token of appreciation. Ahson? No? All right, Mr. Kashish Gaya, CEO of Euronet. Come on up. Congratulations. All right, ladies and gentlemen, this is a lunchtime, I believe, so we shall reconvene here at 2:30. We will also have some feedback forms to give out, so please do come back on time at 2:30. Thank you.
So all the speakers are requested to assemble at the Nargis Hall for lunch. And so the lunch otherwise is served at the foyer area. Thank you.
while ensuring a more compelling user experience is the key for the financial industry today. The creation of customer journeys that are easy to consume and are seamless in function across various channels plays a big role here. To deliver that coherent customer experience, it is important to create integrated solutions. Hardware and software is optimized, really using data-driven technology to create that holistic view on the customer and therefore the experience across all touch points. With ever-changing customer expectations and also regulatory impact, we see that the agility has never been more important. The more important to not only use modern technology, but also leveraging standards in achieving that speed and adoption. Standards to deliver user interface changes, standards to integrate, but also standards to develop and deploy those new customer journeys. This will allow banks not only to start a transformation, but also to continuously live it. Transformation is a constant evolution, and in Pakistan we have seen how innovation has always been at the core and in the DNA of the industry. The transformation with the outcome of an improved customer service, as well as improved operational efficiencies, requires to take a look at the entire ecosystem involved. So, together with banks, we look at all the systems, their contribution in a transaction, but also their today's limitation. It starts with the terminal hardware, the terminal software, the communication protocols used, and it goes all the way to the terminal handling, the switching, and the authorization system. Transformation also requires rethinking and bridging the gap between the physical and the digital customer engagement. For example, embracing technology such as data analytics and AI to further personalize the interaction and the integration between mobile and self-service functions utilizing multifunctional systems such as ATMs and kiosks and much more. In order to bridge that digital with physical touch points of consumers, the self-service channel represents a tangible opportunities for banks and other service providers to evolve their offerings to deliver way more flexible services to their consumer where hardware and software and the digital channels are required. With DN Series and dynamic software, we are delivering these optimized and agile and easy-to-consume customer journeys to deliver the best self-service experience for your customers. For this, we have created a couple of very short but sweet presentation and demos, and two of them I would like to show you right now. In step number one, we will show you that data-driven, intelligent decision-making that we are tying to the consumer token, for instance a card, can totally change the consumer experience. So in step number one, I will use a normal consumer card and show you that based on the data that we have on this consumer, we give a full-fledged end-to-end consumer experience with all functionality and all options. But we also can show you that if we would deliver software side, just by the capabilities that modern technologies and that data-driven approach gives to us right there on the spot. And this will be the first example, and the second example is to show you how we integrate digital consumer channels like mobile banking into the physical delivery of cash at the self-service device. But have a view yourself and enjoy. Yes. As said, we wanted to give you two very short demos on how data
that is coming from a central payment server can really change consumer experience and behavior. And just make two very simple examples. So I have here with me two cards. One card that is designed for a normal customer, let's say the parent, the father of the family. And as you can see, if I put in this card here into the machine, I have the usual behavior of being asked for the PIN. Once I've entered the PIN, I will get into the full main menu, and as you can see here, I have the full range of capabilities being available to that card holder, and that is data that is linked to the card. We know exactly who the user is, and based on that user profile that we have stored on the server side, we get this rich functionality. So let me cancel this, take out the card, and now I'm using the card for one of the kids. And we have limited, together with the customers, with the parents, the functionality to just pick up the weekly or monthly pocket money. So based on that information that we have stored on the server without changing anything here on the client side, if I now enter this card into the system, entering, and you can see already I have a changed look and feel that is a little bit more kids-like. And if I put in now my PIN and confirm, you can see that the user interface has changed to just one button, so the kid can take the pocket money up from the system, but that's the only thing that young customer can do and can perform here at the machine. So all of that is really driven by just the data that we are storing based on the consumer preferences, based on the customer profiles on the server side, and automatically will adjust the experience that we're delivering to the customer. What we have in the background is we're using HTML5 on the screen based on the cascading style sheets that are driving that customer experience and the parameters that we are retrieving from the preference settings. These kind of adoptions can be made on the fly. No software changes required. No big new installs, no new downloads needed. That is one example of the power utilizing new technology in a self-service context. The other example that I would like to give you, and maybe we can switch now over to my mobile phone so you can see here the screen of my mobile phone next to the machine, is to show how we integrate the digital channels into self-server customer experience. So instead of really using the capabilities that the machine would dictate, I can use all the functionality that I have here on the mobile phone. The way how do I authenticate myself? So I authenticate here with a dedicated token and login. On the mobile application, I don't need necessarily a card, but I can now integrate the same functionality that I will expect from an ATM here as well. And as you can see here on the screen, I have something that is called cardless transaction. And if I tick here on cardless transaction, I could do either a withdrawal or deposit, as this is a recycling machine. And if I hit withdraw, you can see there is no prepared withdrawal right now in my wallet. In order to add one, I press the add button, and now I get into my ATM screen. This is my denomination screen for the selection of what is the amount that I would like to withdraw today. Let's say I would like to withdraw 150, and now using the capabilities that such a channel has, like biometrics, I need to authenticate myself, and this goes all the way back to the payment server for a consumer and transaction authorization. And with this, I use my smile. So I smile into the camera, and that smile has authenticated me as a consumer. We have done the authorization against the core banking system, and have now, as you see, both here on the screen and on my mobile, pre-authorized transaction of 150. If I now want to redeem this, and you can see here on the screen of the ATM, I have a QR code. This QR code basically defines the location of this particular machine. And if I swipe now this card upwards, it will open the camera of my mobile phone. And if I point now this camera to the QR code, I will get a message that says, are you in front of the machine that is blinking and beeping? And if I say yes, that transaction will be executed, and I will automatically now be able to retrieve the 150 from the pre-authorized transaction. This is a good example for how can I use the capabilities of a digital channel in combination with the delivery capabilities of a physical channel, really to drive smoothless transition from the physical world into the digital world. So hopefully you enjoyed those two little short demos that gave you a glimpse of how we can utilize really data and really flexible drive consumer experience, and how the digital experience from the mobile channel can enrich the overall self-service capabilities on the physical channel here at the ATM. So really in that area of self-service growth, we probably and hopefully have been able to show you how to drive synergy among those different channels and how to fulfill a transaction smoothly, and how that has become really a priority for financial service institutions across the globe, but also here in Pakistan. We at Diebold Nixdorf are always eager to have an open discussion with you, to engage in further conversation on the subject, and walk you through both the challenges of how to bridge the gap between physical and digital, but also the advantages, the business impacts, the revenues, and the better customer experience, and therefore stickiness to your customers can evolve in a step-by-step journey. So thank you very much for joining us here today. Here out of the Utrecht Experience Center in the Netherlands. We will love to see you here or to visit you in wonderful Pakistan. We say goodbye and hopefully see you soon.
Okay, and that was Michael Engel on branch transformation from the Netherlands. Just in case you do want to go and visit, as he invited you, it is minus 15 there today. I don't know if you want to go now. Okay, next up we have our leaders panel session. But before we go into the panel discussion, I would like to call upon our guest of honor and session chair, Mr. Sohail Javad, Executive Director, Digital Financial Services Group for the State Bank of Pakistan, who will be talking to us on the new challenges and the new opportunities in building Pakistan's digital payments ecosystem. Mr. Javad.
Thank you very much. Bismillahirrahmanirrahim. Assalamu alaikum. And a very good evening. I hope that you enjoyed your lunch. It's always an easy task to speak after lunches because people are usually either sleepy or not paying attention. So I'll try to be as brief as I can so that we can start the panel discussion as soon as possible. So I'll briefly speak about the policy roadmap that we are thinking of taking in the area of digital payments. And I'll also go through some of the measures that we've taken in the past 10 years or so. And I'll try to connect the dots for you. And I'll try to give you give you an idea of what State Bank is thinking about the growth of digital payment services in Pakistan. This slide shows the policy toolkit that we use for strategizing the development of digital payment systems in Pakistan. If you see on the left, you will see that we are building our entire digital payment space on two aspects. One is the digital ID. Pakistan is very lucky to have a digital ID program of itself, and that helps us in onboarding, that helps us in providing services. And we also have, I think our mobility is also good, our telecom penetration, our telecom density. And on these two strengths, we try to build our future. The second aspect, which is very important for us, is the availability of payment rails. And if you see what we have done during the past few years, you will see that we have been specially focusing on payment rails, starting with the implementation of RTGS, the real-time gross settlement system in 2007, in fact in 2008. And then moving on to the RAS instant payment rails right now, and a lot of initiatives in the middle. So you will see that we have been trying to ensure that participants, customers, businesses have access to good payment rails, because we believe that having good payment rails is as important as having a digital ID system, because payment rails enable faster transmission of money and fast payment processing capability for the businesses. The third and a very important area is continuously reviewing the laws, regulations, and the standards. I think a good regulator should be implementing standards, and that's what we do. So we have been implementing standards in the area of security, in the area of payments, in the area of other financial services. We are an EMV compliant jurisdiction for card payments. We have been using 3DS. We have been using, we encourage the use of other standards. In fact, our most latest system, which is the RAS instant payment system, is built on ISO 20022, which is again a state-of-the-art standard. Digital innovations is a new area, signifying that State Bank is continuously thinking about how to use the new technology for improving not just the service provision capability of the businesses, but also supporting customers. So we are looking at blockchain, we're looking at how we can use AI, how we can use subtech and regtech, both for supervisory capability and for compliance related aspects. And there is a division in our group which works on new technologies, and we think about how we can move forward with these and address issues, especially those relating to consumer protection, especially those relating to compliance. Now, and I'll talk about that as well. And of course, the most important part, one of the most important parts, is our oversight capability, which is very important for us, because we need to keep an eye on what's going on, and the eye, to keep an eye is not with the purpose of, just trying to know what's going on, but just to make sure that what is happening is in line with the policy objectives and in line with customer protection standards. And on the right, these are the factors that we keep in our mind whenever we design a new regulation. So we always keep on thinking about market structures. What do I mean by market structure? So if somebody gives me an example of a product in China, I would say, yes, I agree with this, but the market structure of Pakistan is very different than China. We are sort of a democratic financial system. There is no monopoly here. People can come and offer their services as per the rules and regulations. We cannot allocate. We do not allocate. And we try not to intervene in pricing, although there would be some, I know size on pricing also. But there are certain areas where we say we'll go and we'll not go. So market structures is one very important aspect for us. What level of SBP's intervention should be there and in what areas? That is the other thing that we continuously talk about. Pricing is very important. Pricing, I think pricing is a make or break for the industry. But to what extent we want to regulate pricing? To what extent we want to, what should be the policy principles for pricing? So for example, transparency is a good principle for pricing. But do we want to intervene or not? That depends on the sector. So you've seen that we have intervened in the IBFT, interbank fund transfers. RAST is free. But are we going to do the same for, say, merchant payments? That's a question mark. That will develop, that will, it depends on how the market develops in the merchant area. And of course, interoperability. And yesterday, I and Mudassar Saab, we were in a session on interoperability. And I think some good points were made there. So interoperability is again very important. It's a two-edged sword. It may, for example, timing of interoperability is very important. You do it too soon, you kill innovation. You do it too late, you have monopolies on your hand. What level of interoperability do you want? Technical interoperability, business interoperability, or governing interoperability? So these are the questions that we always keep in our mind whenever we decide on any policy issues. This is just a journey of what we have done during the past 10 years. And today I want to do a very quick comparison of what we were 10 years ago and where we are 10 years now. But if you look at the measures that we have taken, you'll appreciate that the toolkit that I showed you is reflecting here. So we are either implementing standards, or we are encouraging new payment providers or new service providers, or we are coming up with new regulations, or we are implementing infrastructure where required. Where we see that the market is not doing its due, then of course we will go and like we did for the faster payment system. This is, so imagine what it was like 10 years ago. So I'm talking about, let's say, 2012. What we had in 2012. And this is just a snapshot of what we had. Branchless banks were very new, I think, 2-3 years. RTGS, yes, we had an RTGS, and it was processing mostly interbank payments, both wholesale and we were thinking of opening it up for retail. The number of cards, ATM machines, you can see the number very low. And similarly, I think IBFT was emerging, very new. No EMIs, no PSPs, no PSOs, digital banks, just stuck. I don't think it was even a concept at that time. And we have, I think, traveled a lot in the last 10 years. And so we can see that we not only have relatively better numbers. I'm not saying that these are very good numbers. Of course, these are not, keeping in view the size and the size of the country that we are. But I think we made significant progress in terms of encouraging new service providers, in terms of encouraging new instruments, in terms of expanding our digital footprint. But a lot needs to be done. So let me briefly talk about the payments infrastructure that we are envisioning. And this snapshot that you see on the screen is something that we are planning to achieve. So of course, RTGS remains at the core as the wholesale payment processing system, as a system that almost processes on the average 1.87 or 1.8 billion rupees a day. So it's still there, yes. RTGS is for systemic stability. It's for financial stability. That's the objective. Connected to RTGS and an extension is RAST, which is the instant payment system with the objective of financial inclusion. So State Bank has two main goals. One is financial stability and the other is financial inclusion. So RAST is for financial inclusion. RAST is connected with RTGS in real time, which means participants have access to their liquidity with State Bank in real time. They are able to bring that liquidity into RAST and use it for their retail payments. It's got its own API gateway. It's got its own CAS, which is a directory whereby you can use your mobile numbers to send payments to each other. And by the mid of this year, we'll be having a request to pay module. which will give the capability to RAST of requesting where a person can request payment from the payer, either using their apps, either using their QR codes, or any other form of payment. So that's something that we have. We expect all our regulated entities to be connected to RAST for full interoperability. So universal interoperability is, I think, and State Bank think that now is the time to go for universal interoperability in Pakistan. 10 years ago, that may not have been the case. But today, this is something that we are aspiring for, and that we intend to do with RAST. We also have our private sector playing its full role. OneLink is a major player. VRG is another player. NIFT, Gateway. We also have Avanza Gateway. So these are private sector gateways, and we are working with them to bring them onto RAST as well. We are working with government entities to process their payments using RAST. For example, AGPR has started processing its salary payments on RAST for the federal government salaries, and very soon they'll be bringing in their other payments as well. We are also working with provincial revenue departments. We are also working with provincial IT boards, like Punjab IT board, to connect to RAST. On the left, we've got issuers, acquirers, banks, payment entities, EMIs, and we also foresee that with the introduction of the request to pay, we'll be seeing the emergence of payment aggregators, whether they are bill aggregators or merchant aggregators. And we expect these aggregators to collaborate and work with the regulated entities as well, especially in the area of payments. We are also initiating a new project, and we'll be upgrading our RTGS system to a new state-of-the-art auto transfer system, ATS+. And that system would be based on ISO 20022, and we are also aiming to replace our securities processing module, the full back-office functionality in that new system. We are initiating that project with the help of World Bank, and inshallah by 2025, mid of 2025, we'll be finishing that project as well. So I already spoke about RAST. So what is RAST going to do? Just to give you, I think RAST has been quite successful. We started P2P RAST payments in February last year. And as of today, we have processed about more than 1.1 trillion rupees on RAST, just for P2P. We have got about more than 27 million IDs on RAST. And to give you perspective, our app users are almost as many as the RAST IDs, maybe a little bit more or less. We also have, on the average, daily RAST processes about more than 10 billion. I think it's now started crossing 11 billion rupees. And the number of transactions remains at around 400,000 per day. So keeping in view that it's still work in progress, keeping in view that it is it's still being deployed, I think this is a big achievement for us. What we were, the scale that we were planning, looking at other countries, I think we have surpassed that scale in half the time that we were planning to do. And with next year, with the request to pay, we are encouraging not just banks, not just regulated entities, but third parties, especially merchant providers, to come and get connected to RAST. I think that payment services should be ubiquitous, and entities desiring of onboarding a payment system or a platform should be able to do that without any glitches. Unfortunately, right now we've got a lot of friction in this area. We get complaints from banks, from entities that banks are not helping them, or they are just making the process of onboarding as difficult as they can. So these are the issues that are there, and we are fully aware of that. But like I said, we have to keep the market structures in mind as well. We have to make sure that we don't take any such step that disrupts competition from the industry. So yes, we are looking at it, we are overseeing it, but we'll keep an eye on how the market develops. But I think the emergence of payment aggregators, the emergence of super aggregators, the adoption of the QR code standard that we issued last year on RAST is going to be very important for the development of the industry. So what are we planning to do as we go forward? And I'll just try to quickly wrap up my talk here. I think the first and very important thing for us going forward is data. We need to use data for a variety of purposes. Data for KYC, data for fraud prediction, and most importantly, access to good data for good policy making. Like I said, RAST is about financial inclusion, so we need to have access to good data. So we are working on open banking framework, for example. How can we facilitate the partnership between banks and between third parties to connect and share data among themselves? For that, we worked with IFC and we set up a technical sandbox I think in December last year or November last year. The sandbox ran for about 2 months. I'm glad to report that the sandbox completed its operations on 31st January this year. And out of we had 6 banks in that sandbox and 8 third-party fintechs. And out of those 8, I think 6 were able to develop products based on their learnings from that sandbox. So the next step would be going forward how we bring that sandbox into live production, how we can open it up. And the idea is to identify use cases that would foster with the use of this data. And second, to have an API repository with this API standard so that people know what to call, what to ask for, the security standards for that particular API. So that's what we are aiming for. The second thing just on which we are working, I'll not say a project, is the central bank digital currencies. And CBDC is, I think, like they say, it's a solution in search of a problem. I tend to agree with that. Yes, CBDC is a solution in search of a problem. It is a use case of distributed ledger technologies. But then we have looked at a number of design choices. We have spoken to almost all the jurisdictions who are working on CBDC. And we are trying to learn from their lessons from their experiences. The first is, what type of model are we going to adopt on CBDC if we decide to do it? And I have an extremist thought on that, which is CBDC can be tokenized, whereby a state bank can directly issue central bank currency to ordinary customers. Or it can be intermediated. So we issue the currency to the banks and the banks issue it to the customers. Now, if you want to issue it to the bank and the banks to issue to the customers, why have CBDC in the first place? RAST is a faster payment system. It's perfect. The only advantage is offline payments, P2P payments, that would be keeping in view the tele-density in our country, which in certain areas is not so good. That may help us do offline payments. But other than that, my thought is that if banks continue to do what they are doing right now, which is not to look at what their customers want, which is not to listen to the voice of their customers, which is treating customers with contempt. And I apologize if anybody doesn't like my words. But this is what we in State Bank feel. Right now, banks treat their customers with contempt unless it's a priority customer. Priority customer or elite customer, yes, welcome. But for an ordinary person, when they walk into a bank branch, they don't get the service that is expected. They get robbed, scammed, they lose their funds, they call the bank, and the bank says, you gave your own password. The liability is yours. Go home. Any other issue, you make a call to a call center and you have to wait for 1 hour and 2 hours to get the customer service representative to talk to you. And if they talk to you, rarely does a customer get what they want. And as a result, people don't want to bank. And I think that attitude is one of the leading causes of financial exclusion in Pakistan. So I always say this to banks. If you don't listen to the voice of the customer, if you don't improve your support to the customer, if you don't think about customer protection all the time. And if you don't respect your customer, then we are going to do CBDC. And I would like to do CBDC in a tokenized manner. I will not want banks to be part of that CBDC. And you will come and say, what will happen to intermediation? What will happen to credit intermediation? I'll say, leave credit intermediation. You don't have any right, banks don't have any right for customer deposits if you can't give products to customers, if you can't give them access to finance, if you can't give them access to their money cheaply. So why have banks in the first place? So CBDC is a technology that is disruptive, which means that it will disrupt the entire system. And disruption is different than, hugely different than innovation. I'm sure you all know about that. So that's our thinking on CBDC. We have looked at a number of service providers. We've talked to service providers internationally and in Pakistan as well. And we are pretty much clear on the design choices. Whenever we decide to do CBDC, we will think about those choices. But like I said, I'm an extremist person when it comes to custom. And I think regulators should be activists. Regulators should be extremists in this regard. So, yes. And finally, cross-border payments is very important. Cross-border, again, CBDC is a use case, cross-border is a use case for CBDCs that we are working on. Social disbursements is a use case for CBDCs that we are working on. And finally, I think one of the most important thing for us right now is frauds. Frauds is a menace in Pakistan. It's growing. And unfortunately, fraudsters are way ahead. I'm not saying banks are not doing anything in this regard, but they are coming up with new techniques all the time. And that's what I will request to all of you, especially the new digital banks, that please think about how you can handle frauds. What State Bank will not like to have is you saying that, telling the customer that since you gave your password, it's your liability. No, sir, this is not going to work. We need to find innovative solutions for that as well. So thank you. I'm sorry I took a lot more time than I was allocated, but thank you.
Sohail, you can take your seat at the panel, and we shall call upon our panelists for this leaders panel, an exploration of a new revenue engine and capabilities. All right, so the panelists, Mr. Irfan Lodi, CEO of Macroeconomic Bank, Pakistan. Welcome, Irfan. And Mr. Mudassar Akil, CEO of Easy Paisa DB, Telenor, Pakistan. Our moderator for this panel is Mir Najib Rahman, CEO of Expense Pakistan. Welcome back, Mir. So we are, yes, we will be a total of 4 on the panel, so you can center yourselves just underneath. Mr. Mir, please pay close attention to the timer as we are running late. Go ahead.
Thank you, gentlemen. So we have, of course, another illustrious panel with one international bank and with the regulator and, of course, with Telenor here. So I think this should be very, interesting dialogue we should have. So Bhai, I'll start with you. अभी आपने थोड़ी डिस्कशन भी की थी इसी चीज़ के ऊपर where you touched upon the security aspects as well. मैं ये पूछना चाह रहा हूँ कि जो ट्रस्ट एंड सिक्योरिटी का जो एलिमेंट है, I think it is the most critical in the financial inclusion process and in the overall digital landscape. And how is the regulator or the state bank dealing with these challenges, and how is it really helping the industry to overcome these challenges, especially on this front? Thank you.
Thank you, Mir Saab, and I'll speak in English because I can see a few foreigners here. So trust is very important, because if customers lose trust in digital payments, in the financial system as a whole, then everything is going to collapse. We have been implementing standards. That's, I think, the first thing that we need to do. Card payments, online payments, and we have been doing that. We have been working, we try to work very closely with other stakeholders in the industry. So the banks are there, payment institutions are there. We work very closely with PTA because a lot of things happen from the telco side as well. We also talk to NADRA as to how we can use their services for enhancing the security aspect in digital payments. We do that all the time. We also have discussions within the central bank as to what to do. And I think what the next thing that we are thinking about is the liability structure. So people, fraudsters call, unsuspecting people and suspecting women, senior citizens. They call them and they ask for, they tell them that your account is being, monitored, you have got AML issues, I'm calling from your bank, and so please give me your password and I'll reset everything. And they do so, and in the process they end up losing money. So what we are saying is that we are giving a comprehensive framework to the industry that prescribes controls, that asks the industry to do and implement new systems to what we think is important. But I think no matter what we do, the fraudster would always be ahead of the industry. So we are thinking of changing the liability structure. And we are saying that let's ask banks and everyone that in case of a fraud, you return the money in 3 days to the customer. You return the money. And if you don't want to do that, implement the controls. Enhance your monitoring. Because if you don't do that, don't penalize the customer for something. The one thing that I've come to hate is the word of awareness. Create awareness. Awareness, when you say awareness, you are actually saying that the customer is responsible. You see? So yes, awareness would be there. We work with industry and the PBA to run ads and all that. We'll continue to do that. But I think we need to work on the liability structures, especially for interbank transfers.
Thank you. My next panelist, Irfan Lodhi Saab, from CEO, he's the CEO of Mashreq Bank. Irfan, can you just give us a little brief about yourself and about Mashreq Bank? Thank you.
Bismillah ar-Rahman ar-Rahim. Thank you, Najib Saab. So, first of all, it's great to be back. Thank you for the warm welcome, everyone. 7 years in exile, back to where I started. So I've spent most of my life here, born in Karachi, Pakistan. I've worked across foreign banks over here in Pakistan, and then I moved to an international assignment in a foreign bank. Fortunately, unfortunately, 6 years back, I joined Mashreq Bank when Mashreq was embarking on a new journey. Normally what we get to hear about Mashreq, and that's what I heard about the bank as well, it's a traditional bank, it's the oldest bank in the UAE. The only reason why I left a regional role from my previous organization, which is actually a global organization, was based on what Mashreq was planning on doing at that time, which was effectively 3 things. The first thing was, in very simple words, on paper, we wanted to create a completely separate neobank. Now, not that exciting at that point in time, but the 2 things which really excited me were the approach. The first approach was that we were completely shifting away from your traditional tech stacks. The second big thing was we were completely reorganizing how banks work. And what do I mean by that? We're all familiar with agile way of software development nowadays. Believe it or not, 6 years back, Mashreq introduced agile work of business management. So just to give you an example, when I joined in and the stream which I was running, my team, my direct team had representation from tech, DevOps, business, product, collections, risk. That entire team directly reported to me, fully agile, while the governance and all was managed through the respective chapters. So I think the combination of these 3 things is what really excited me to join Mashreq. And yes, then there was no turning back. I actually feel like I just joined a few months back. It has been such a roller coaster.
Well, Mashreq, as we all know, is one of the receivers of the digital bank license in Pakistan. So what opportunities and challenges are you seeing? Because, I mean, what particular need will you be addressing that other banks are not addressing? So if you can just, give us some insights.
Sure. So I think it'll be a bit unfair, at this point to compare, in terms of what we can put on the table, because I think there's a lot of work which has been happening in the market. And of course, Pakistan being my own country, I've been keeping track of it. I actually even started a Facebook page some time back called FinTech Pakistan. It has 4 likes to be exact. So, in all honesty, it's a matter of perspective. So I'll share 3 challenges which we actually assessed when we were deciding if we want to apply for a license. And why I say perspective? Because these 3 challenges were actually viewed internally as opportunities, right? So the first one, the big challenge globally with digital or neobanks is trust. When I say trust, it's both in terms of keeping your money with a non-traditional financial institution. Second is trust in terms of cyber security. I'm not saying this because I'm seated next to Suhail Saab out of fear. I actually mean this. The second big thing which we considered was the regulatory environment, right? And the third thing was the state of datization in the country. Now, on the trust side, we started checking boxes. 55 years in the UAE. We have a very established tech stack. We run our own Cat A data center in the UAE, not just for Mashriq. We run almost 8 financial institutions through it across the GCC. So we thought that we can actually go in, provide that peace of mind and comfort which comes with a traditional banking organization, along with the safety, security, convenience and innovation which a digital bank can provide. On the regulatory side, globally we are a global clearing, USD clearing player as well. We are present across 13 odd jurisdictions, all the primary jurisdictions. I myself have been fortunately unfortunate to have interacted with 5 regulators across 5 markets. And without any bias, I actually mean this. I think the regulators and the regulatory environment in Pakistan is very conducive to an overall digital transformation of the economy. And this is just not words. A very good example are the CSP regulations which just came in. For a bank like Mashriq, it saves us huge replication costs. We can provide the same level of cyber security which we provide globally. Plus, we'll be able to leverage all our intelligent tech and innovation and bring it over to Pakistan.
This brings me to related area, which I think we have touched upon earlier today as well. But before we begin, our next panelist, Mr. Mudassir Aqil, needs no introduction, but for the sake of the audience, Mudassir, can you just give us a brief about yourself and Telenor?
Thank you, Jisab. I represent Telenor Microfinance Bank. We have been granted an NOC for the digital bank. We still have to earn it. I have to be very technically correct. We have a regulator present on the panel. So there are many steps in getting the license and conversion, and we are very proud that we are the only incumbent who has been selected from among a long list of applicants. EasyPaisa is our payment brand. It's a household name. EasyPaisa started mobile payments in Pakistan. Since inception, we have opened 33 million accounts. So we have 33 million registered users. That's almost 1 in 4 Pakistani adults. And 1/3 of them, a little over 1/3 of them are also monthly active users. So, this is, we are essentially a digital-first bank already for a long time. And this allows us the now regulatory space to actually improve our product menu and some of the services that we couldn't offer before due to various regulatory restrictions. But just to give you some more perspective, we process 4,000 transactions per second, and we are the bank of a common Pakistani. The long tail of those 70% people who are unbanked in the country are essentially the people we serve. Similarly, the small and micro enterprises who remain unbanked largely and credit starved, those are the people that we serve. So that's why we exist, and this is what we have done since inception. So we look forward to, I think there is now a convergence of multiple factors in the country, where, like Suhail Saab covered in his presentation, we have covered a long journey over the last many decades, but particularly in the last 1 decade, in terms of putting in place all of these essential building blocks. We have the benefit of having a digitally verifiable ID in the form of Nadra issued CNIC, and now on top of it, we have full digital onboarding, we have a fast payment system in RAST, and we have a very enabling regulatory environment with all different, a suite of different licenses, right? So now the onus is really on practitioners to actually connect the dots, create solutions, and actually build something that 70% of Pakistan can use, which remains unbanked. So that's what we very much look forward to continue to make a contribution in that space.
Great. So earlier we were discussing, and I think since morning, we've talked about, and I think in many other seminars about the data being the oil, for this industry. And of course, you've been in operation in Pakistan for quite some time. And I think banks and telcos sit on the largest pool of data, of customer data. So how does Telenor now see using this asset towards innovation and really to connect the dots, because the quality of data is the other important thing apart from just data itself. So how do you see that, using that to build up your revenues and adding new products and services using the data?
Yeah, just to clarify one point, that Telenor is one of the 2 shareholders in the bank. So Ant Group is our second shareholder, and we are completely telco agnostic. So we don't work just with Telenor. More than 50% of our user base is actually SIM holders of non-Telenor SIMs, right? So we work with actually all 4 telcos. And in terms of using the data, I think GSM data does provide a lot of value and promise, but we have actually moved beyond GSM data, and we are essentially more focused on the payment data. Because now payment data has gained enough scale in the country that we can actually use that. As you correctly pointed out, that data is the new oil. So just to give you one example, that we give now digital loans. These are without any human contact, completely digital loans, which are also called nano loans, very small amount, less than 10,000 rupees, almost all of them, which are disbursed in a matter of few seconds, and we are giving over 10,000 of these loans on a daily basis, which is purely using payment data, which is not really based on GSM data. So GSM data gave us in the first phase, based on which the initial algorithms were built, and then we trained our models using the payment data, and with now over 11 million monthly active users, and the ecosystem really has gained some scale. We think that we can continue to work with all the telcos, and more importantly, we are actually very keen on working with non-telco data also. So there's a lot of other data which is available in the ecosystem that can be utilized, that we look forward to working with.
Great. Suhail Saab, we've touched upon financial inclusion, earlier today as well. And with all the institutions, I think there are 11 microfinance, branchless banks operating apart from all other banks, microfinance banks, microfinance institutions, NBFIs. So there's a huge pool of financial sector trying to increase, the financial access. But how do you see the progress? Because, we've been at it for quite some time, and we are still at a very low level, I should say, of financial inclusion. So how do you see the progress, and what can you advise the financial institutions, especially the new digital retail banks coming in, to go about increasing this?
Ishrat, I think if you compare from the past 10 years, we've made significant progress. We move away from what 8%, 9% to now 24, 25% people who have bank accounts. But the main question is that to what extent they are able to use those accounts. So opening of accounts is just not, or of wallets, I think it's not sufficient. And I think a bigger problem is the prevalence of cash in the economy. And our cash to GDP ratio is really high. Currency in circulation is really, really high. And that shows the larger problem of people maybe not trying to be financially included. They don't want to be financially included despite all the work that we've done. And I would just like to ask this question, that why would a person in Pakistan want to be financially included? I mean, they're okay with the cash that they have. It's ubiquitous. It can be accepted everywhere. It's free. If they lose it, then they lose it, but they are their own kings and masters. They don't have to open an account to be financially included. They don't want to have to ensure that they have adequate KYC. And even if they open an account with a bank, they don't have to pay fees to use that money that is their own, to get a card, to do interbank fund transfers or whatever. And then on top of it, most of them don't have access to credit or other products which actually gives them a reason to be financially included. So, in our view and in my own view, I think everybody is to be blamed for this. But most importantly, we as an industry have not been able to adequately address the customers' needs. Now, what's our diagnosis for that? I think the first thing is that in Pakistan, the cost of acquiring a transaction is very high. It's very high. And imagine that cost, that a person who is transacting in cash is not documented, doesn't have to think about the tax guy all the time, and don't have to pay money and all that. So when you ask somebody to be onboarded, you are actually increasing his cost of transaction, and you are also incurring the cost of transaction on your own. I think that's one of the reasons that because of this high cost of transaction, we only see banks targeting high-value customers. You see, and the low-income people are mostly out of this. That's one thing. The second is, if we talk about our financial system in general, but digital systems in particular, they are absolutely not user-friendly. They're very difficult to operate. They're very difficult to understand. We start with the language, so most of them are English. And then you move on to the other parts of the country. Even the terms are difficult to understand. So our financial system is extremely, I must say not extremely, maybe somebody would be offended, but it's very difficult to use. Even educated people are scared. Something may happen to my money. And I think that's one of the expectations from the new digital banks, that they'll bring in a good interface, user interface. The third thing is, like I mentioned, liability structure. So we need to have standards, we need to have protocols in place that would enhance the trust of people in using the formal system. But they should not be penalized in case of a misuse by someone else. And that's what we are doing with the fraud situation right now. So we need to find a solution for that as well. So State Bank is also looking into it. We have started working on UI UX, for example, to see what works and what doesn't work. Opening of an account has to be easy. I think we need to look at KYC, and like I mentioned in the data part, we need to think what other parts of data we can bring in to strengthen the KYC and let people earn what have access to credit. So there's a lot of work that needs to be done, but that depends on our thinking, our customer orientation, our ability to hear the voice of customer, to see what they're saying and to address to their needs, and our ability and capability to use new technologies to find solutions to old problems. Thank you.
You talked about the digital lending part also, and now more and more, even fintechs especially, they are coming up with the behavioral scoring model as well, apart from your credit bureau and all that. So are you working with them and with the banks to maybe look at the behavioral scoring aspects as well to be used in conjunction with the normal credit review or underwriting process?
Yes, like I mentioned about the open banking and the technical sandbox that we're using. The idea is to give the capability to fintechs so that they can look at transactions that are being done and then come up with new solutions. But I would like to add to the earlier question that you asked to Mudassir was how they plan to use data. I think when we talk of data, and especially big data, we need to break silos. We need to find a way whereby people can collaborate, share their data. Silo-based data in small vacuums is of no use. It's of very little use. You can just use it for your own purpose. So how can we bring that data together? And I think that was one of the motivations for the CSP regulations that we issued. You can't have data repositories being built without having access to shared hosting arrangements. So I think that's one thing where the industry needs to work. And we need to see what new tools we can have. And again, that's an expectation from the new players as well, that they'll be able to bring in practices from other jurisdictions about data and how we can use that data to enhance the KYC and, like you mentioned, use it for the purpose.
Earlier, we were also discussing, the eKYC and having one pool of repository for eKYC. So each bank is not doing it again and again. So how is that coming along, and how are you supporting that initiative?
We are working with the Pakistan Bank Association to build a shared KYC functionality. But my view is that it has to go, especially for KYC, it has to go beyond banking and payments. There is a lot of non-financial data that could be of extreme importance for KYC. So for example, if a person goes to he works in a factory, blue-collar worker, she goes on time and come back on time. So that punctuality aspect, that aspect that she doesn't have anything against her with her employer, and she has an impeccable record, then should become part of the KYC as well. And I think that's where we need to work on the use of technologies. Distributed data is an emerging part whereby you can use blockchain for hosting individual data and then finding a way of collating and using it for collaborating.
Thank you. Irfan, now with the digital banks now coming into Pakistan, but globally we have seen that a majority of them are really not doing well in terms of profitability. How do you see that aspect when now, as you enter into the Pakistan market?
I think two things which I previously mentioned, right? Trust and the regulatory environment, which I've touched upon. Barring that, there are two specific areas which I feel the banks will really have to focus on. The first one is today, if you see, most of these banks are targeting the same products and same segments of a very certain retail profile. We've seen a lot of work happening in that retail individual space, and globally, you hardly see much work happening in any of the upper or higher tiers. I mean, there have been some examples, like Acorn and Stashaway. The blow-up which happened on Glint is an example on the wealth side. Barring that, that's where the work is concentrated, and that's the same segment traditional banks go after. The second is the focus on sustainable, long-term, alternate revenue streams, right? That is something which digital banks will have to focus on creating. I'll just take a few minutes on this. There's this, concept I abbreviated a few months back in another conference, which we call the next episode in banking, right? So episode being the abbreviation. And it's interesting that a lot of speeches we heard today from Nadeem Saab, from Sohail Saab, were actually around it. So I'll just use that for a quick summary. So the E in the episode, the embedded finance, is something which is very important, and we spoke about it. Banks can try and create some of those capabilities. What we have been focusing on globally, and it works, is to actually have a platform or banking as a service play, of course supported by the regulators, and that has to be a completely separate revenue stream for the banks. Next is purposeful. We don't think about it too much, but I think the shift from CSR to ESG is very much real now, and we all need to adopt to it. I'll give you a very simple example. During the pandemic, we gave hundreds of millions of dollars of waivers to our existing customers who are impacted. And we did it very simply through a very simple AI, which would read your open banking data for salary loss. That's it. So it was all real time. The benefit was real time. What was unbelievable was that we saw almost 50% increase in retention rates in the months to follow. Moving on to I. Not for innovation this time, but for intelligent, something we've been talking about. And intelligence is where data comes in. For us, this has three big elements. So first, plain and simple, we need to use our increase of data at least by 20x at a bare minimum. Second is what we have done over the past 4-5 years, where we have invested heavily in three specific areas. So data engineering, because at times it's easy to source data, but to have that data in a well-structured form is a big challenge. Cognitive analytics, so you're actually able to structure that data and start utilizing it. And intelligent infra, so you can continue to absorb and grow without incurring too much cost. Next is security. I won't spend too much time on it, hot subject, so definitely sustainable revenues have to be secure. Omni-channels. Now, very interesting, omni-channels can actually be a revenue stream. And again, in some form or the other, we have been touching upon this, right? When we look at omni-channels, what comes to mind is a full transaction suite on a laptop, tablet, cell phone. That's not what it's about. We have to focus on individual transaction, financial needs, which have to be engraved in customers' existing touch points, rather than, so more of like an invisible banking, if you may call it. Just to end this conversation, moving into the end of the episode, it's digitally driven ecosystems, which is the next big thing we've been talking about, and you'll get to hear this a lot from Mashriq, co-creation. We cannot do this alone. It's impossible. We have to co-create together. And to do that, we believe we have the right tech stack. We have a completely hollow core. We have a well orchestrated layer of microservices. We have a completely open banking API structure. We even have an API developers portal where even you can consume a lot of our innovative technologies and components. We have our own extensive library of components, which is 100% replicable. So I think once you're structured like this and you have the right regulation to support these integrations without getting into a licensing conversation again and again, I think you can actually create a very sustainable, profitable business.
Mr. Mir, we are all out of time.
Okay, can we take
Yes, we can have a question or two from the audience. Would anyone have a question for the leaders panel right over there at the end? someone can bring the microphone.
Assalamu alaikum. My name is S. Jabbar. Have a tech, F&B, and real estate background. I'm here specifically to see. I'm not a pure banking background, but I am since operating in tech, and I am passionate about tech growth in Pakistan. So my question to both the gentlemen over here from Telenor and Mashriq is, I've seen both of you doing really good marketing and capturing share. Once you come up with your product, which I believe you still haven't launched, at least Mashriq, how fast do you see a capturing market? What are your targets over the next 5 years? What are your expectations?
So since Mudassir already has a fully functional customer base and plans, I'll take that question first. So see, let's and I'll try to keep it short. Let's try and understand that for us, this is a marathon. This is not a sprint. That's the first thing. The intent is not how quickly to capture market share. For the digital bank, the intent is how deeply can we embed ourselves in Pakistan's ecosystem. That's what our tech is built for. Revenue share, these are outputs. And I think that's the big mindset change which we all need to think about. You know, you think revenue, you think market share when you go out with products and you try and sell them. And you do that because you have high cost structures. If you have a cost structure which allows you to centrally have a team of 50 developers churning out services and APIs every 2 weeks, that's our normal sprint, then you don't worry about this. You need to be in a state where you're able to test, learn, accelerate in a country like Pakistan and pull back if something does not work. So I think that's what we are looking at. Of course, we would want to be a profitable and significant player in the market, but I think from a priority perspective, our priority first is to contribute to digitization of the ecosystem and be a significant player in the market with the help of all our partners and partner banks.
Good afternoon. This is Usman Khan speaking. Was very pleased to hear from the regulator that we have an open AI framework where we have data collaboration and we had a sandbox created. Is that available presently to utilize, and can banks, telcos, and any other players connect into it so we can start utilizing it? Fintechs can start utilizing it, and other players within the Pakistani market can start utilizing it. India was quoted as an example earlier, as well as the United Kingdom has that as well. So it'll be very, very good to see State Bank leading on that front and making it available. Thank you.
Yes, I'll take it. Thank you. Yes, the first cohort for the technical sandbox finished on 31st January this year. So we are planning on the future cohorts as well, but the idea is to, this was just a sandbox of sandboxes to see how we can do it and what we can learn, but the results are very encouraging, and inshallah very soon. We are planning to put in place different sandboxes. One would definitely be for payments via RAST, and the other for other data sharing purposes. Hopefully we'll do it soon.
We're all out of time and all out of questions. Thank you very much for your contribution. Thank you. And please stay on stage. We have a little token of appreciation for you. So Mr. Sohail, if you can so kindly and graciously give out our first token to Mr. Irfan Lodi, CEO of Mashriq Bank, Pakistan. The rest of us gentlemen can... Oh, okay, fine. Okay. You can get in the picture too? Thank you, Irfan of Mashreq Bank, for your support. Next, token for Mr. Mudassar Akil, CEO of Easy Paisa, DB. Gentlemen, we have a photo to take. You. And last but not least, Mr. Hamza, if you can please hand the token to Mr. Sohail Javad, Executive Director, Digital Financial Services Group for State Bank of Pakistan. Yes, a group photographer. Everyone with their tokens in hand. Thank you very much, leaders panel, and Mr. Sohail Javad, our guest of honor and session chair. Thank you, sir. Thank you again. I think I'm calling you back. Just seconds, actually. Thank you. All right. Next up, we have an interactive CXO panel session. And this session will be exploiting capital in the new economy with next-gen technology transformation. So this session will be chaired by Mr. Fernando Morillo. Our panelists for this session, Mr. Zohair Saif, Head of Innovation for United Bank Limited. Come on up, Zohair. Next up, we have Rizwan Kazi, Growth Officer for Mercury Payments. Mr. Omar Khalid, Chief Operating Officer for Equitas Information Services Limited. Tasdeeq. And Mr. Imran Khan, founder and CEO of Raptor Games and co-founder and ex-MD of Rapid Compute. Our moderator, again, Mr. Mir Najib, CEO of Expense Pakistan. All right, gentlemen, please. Let's put the timer on. All right. Would you like to, yeah, the seating is centered. Very good.
Okay, so our next session includes one of the, I think the industry's, the backbone, the CXOs and the CTOs, who are the ones who are really driving the technology and driving it within their institutions and, of course, contributing to the ecosystem as well for the country. So before I start, if you can just have a quick round of brief introductions so then everyone knows who you all are. So Imran, just quickly, we start with you and then we just go down.
Thank you, Najib. So my name is Imran Khan and I've basically been involved in the tech side behind financial services for almost a decade now. I set up the first cloud computing company in Pakistan back in 2010 called Rapid Compute, which is still going long and strong, and it plays host to a lot of the banks, fintechs, EMIs. We've had a long, thriving relationship with the State Bank as well in trying to create local standards and local infrastructure for banks and fintechs. Yeah, so that's what I've been doing with most of the people in this room over the last decade, and it's pretty exciting to see that where things have come now, especially with the new digital banking licenses and things like that. I fully feel that now the role of CXOs, CTOs, and also infrastructure providers like Rapid is just going to keep growing more and more.
Assalamu alaikum, everyone. My name is Zohair, and I look after innovation at UBL. I'm a traditional banker. So for 15 years of my life, I've done M&A, corporate banking, retail, banker across Africa, Middle East. And then I got baptized into innovation and digital banking and transformation, right? So UBL pulled me back after I ran a Islamic digital bank based out of Abu Dhabi. And this is a big market, and UBL said, it's time to come to play with the big boys. So this is a huge market, very excited to create experiences and to nurture the talent that's available in Pakistan.
Assalamualaikum everyone, my name is Rizwan Qazi. 26 years of banking and financial services experience. Lived and worked in 8 different countries around the globe, starting with the US, the North Americas, then Central Eastern Europe, then Middle East. Born and raised, or born in Libya, but obviously a Pakistani. But kehte hain na, dil to Pakistani hai, phir bhi you can live wherever you are. So always been interested to know what this beautiful country has to offer in terms of payments and digital and innovation. I beg to differ that CXO and CTOs are the only ones responsible for digital transformation. I think Shahzad Dada put it together this morning. The whole organization has to be digitally brainwashed if you want to really make a difference. So very pleased to be here and looking forward to sharing the stage. And I'm excited to share the stage with Zuhair, who I've known for quite a few years. So I'm currently based in Dubai. I look after the growth initiatives of Mercury Payments, which is a very similar network of payment products like PayPak is in Pakistan. So we cater to the mass markets in the UAE, like Sahil Jawad Sahab was mentioning, the blue collars and the payroll processing companies and the customers, and trying to evolve it into a more digital nature of business to facilitate onboarding, helping the banks and the issuers become more nimble and grow revenues. Thank you.
Assalamu alaikum. My name is Umar Khalid. My background has been telecoms and real estate. I've never been a banker, but now I've ended up running a state bank licensed credit bureau. What we do is we collect data from all financial institutions in Pakistan. We've got data, we've got the borrowing data. We've got data for 21 million borrowers in Pakistan. Based on this data, we provide services to the financial institutions, to the NBFCs, to commercial banks, to microfinance providers, to everybody in Pakistan. And as everybody was saying that data is the new oil, so we basically are in the process of mining this new oil and using it for the benefit of others.
Great. So, Zuhair, we'll start with you. Since you look after innovation, at UBL, and we've had some, a discussion on that earlier as well. So my question is that, every large financial institution, generally speaking, it goes through 3 stages of innovation. So you have, what you have, and you convert that to digital, and then you, of course, innovate some, new products. And then they hit a dead wall that, okay, now where do we go from here? Yeah. So how is UBL addressing that? And, since you are involved in this and in your past life also, so if you want to just give us your insights into this, please.
Sure. So I think you start with, in my opinion, there are about 5 things, right? The very first one, fundamental. You've got to have clarity of purpose and vision throughout the organization. If from top to bottom, everybody's aligned with what you want to do, it will get done. So at UBL, we know we want to be a digitally enabled organization. We want to curate customer experiences, and that is our product, right? The second thing is, you've got to have culture. Culture eats strategy for breakfast, right? And it's very, very true. So the culture at UBL is this innovative challenger spirit that gnaws at you every single day and allows teams to collaborate and work together. So everything that we do is innovative. It's funded by all, supported by all. The third thing is technology. Technology has to be closely coupled up with business decisions. So our business leaders work very, very closely with technology leaders. Technology decisions are not taken in isolation. So it's actually businesses running technology functions, right? Irfan Saab mentioned this about Mashreq, and I'm an ex-Mashreq person. So we are running those agile squads across the organization. It's subject matter experts coming together to create and collaborate for a single goal. The fourth thing, and I think that's a competitive advantage, has been a design lab, and Shahzad has spoken about this morning. And it is that lab that keeps guiding us. Whenever we sway with a conventional banking, traditionalist mindset, conservatism sort of tries to gnaw and bring us down, this lab and its people basically say, focus on the North Star. The mantra is very simple for the lab. The lab says we do not create products. We create customer experiences, and customer experience is a product. So it's basically a loop, the innovation loop, as we call it. It starts with research, data, ideation, prototyping, and then you bring back, you commercialize, and then you retrospect, and then you get all the data back in. And it's a loop all over again. And that's along with the organization. And the last thing is, and I bet this is the most important thing, and this is not a Gayan, right? I've heard it, and everybody would hear this across. Digital transformation is gradual. It's a journey. You're never going to end it. You have to keep working towards it. You could do a rip out and put something in. But at UBL, we learned that you can't freeze creativity, innovation, and business features for 6 months, 8 months. It has to be an on-the-job sort of a thing. So that is what we have done quite credibly. So these are the 5 sort of our playbook.
And just relating to that, we've discussed about digital journey and all that. So, Rizwan, if I may ask you, so a lot of emphasis has been given on digital journeys and, of course, customer experience. Now, as we progress more towards the digital side, especially in the banking side, what, according to you, will happen with the face-to-face interface, with the customer, because that is still key and that still drives the primary business, right? So how do you see that happening?
So I'll relate to that with 2 sort of storylines for you. So can we purely go digital or physical? I think Shahzad put it perfectly. Phygital is the new way of doing business, right? But I want to relate it to the customers we are trying to address. I think we are still thinking about ourselves, our generation that needs that human interaction to do our banking services. Now, I have a 12-year-old son, and he corrected me the other day that I'm not part of Generation Z, I'm an alpha. And I said, what is an alpha? He said, alphas are born out of, in the year of 2010 and thereafter. Now, if you look at the people born in 2010 and afterwards, and they are going to be the largest customer base over the next 10 years. The estimate is they're going to be about 2.4 billion of them globally. They grew up in the digital zone and with the iPads in their hands. Parents would distract their kids if they're having a tantrum over dinner by just handing over their iPhones or their Android devices to them so they can eat in peace. Do you really think that our 12-year-olds today have the patience to go interact with banks in a brick-and-mortar situation? No. What are they doing with their Apple devices or their labs today? There's a reason Apple has a Genius Lab. So if you need something fixed, you come for a consultation. I'll help you with your problem and you walk away. I think the branches of the future, from a physical standpoint, like you asked, we have to look at the assisted model of supporting the customers in their digital adoption. No matter how much adoption or innovation we do in digital space, the adoption remains a challenge. Even in the mature markets, in the Middle East, I've got some of my Middle Eastern friends here. If you ask them what the digital app or their own banking mobile app penetration rate is, it is still less than 50%. So 50% of the customers are still relying on their other non-banking channels. Now, what Mashriq in the UAE has done fantastically is their ATMs are now fully automated with the video agent. So you're still having that human interaction, but through a digital channel or a form factor. You're not actually speaking to the customer. And now it's easier, because if I'm upset with the customer service at the branch, guess what? The other person can switch me off. If I'm face-to-face with you, I don't want to have that discussion with you. So I think it really depends. Najib, to your question, I think the response to that is that you have to have an assisted model. I wouldn't say it's a physical per se. You can do it cheaper by not having your brick and mortar expensive real estate, that it increases your cost structure, but make sure that you have mapped your processes from your physical environment into the digital so it replicates it. most often what I've seen along the journey from, and look, my digital transformation started in 2006, when we were finally over the fact that Y2K has happened and the computers are still alive and we are alive. That's where our digital transformation started, with loans on phones, etc. So I think what you need to look at is a balance. But I think assisted sort of way of helping people is probably better than just saying, we're going to be phygital.
Thank you for that. And talking of digital transformation, Imran, in your not too long ago life, in fact, you are one of the pioneers, I think, for the cloud services in the country with Raptor. Now, when we talk about cloud, of course, I mean, it has undeniable benefits, no doubt about that, in terms of agility, scalability, flexibility. But still, we see that the focus is still on on-premise as compared to off-premise. So how do you see that, and how do you see that changing, especially now as things are progressing a little faster pace?
Sure, thank you. So to answer the first part of the question. So traditionally, there's been more of a focus on on-prem rather than off-prem or cloud-based services. And since I've been seeing this journey from the very start, that's mostly because of lack of knowledge. So when I remember when we used to start selling cloud services back in early 2010, 2011, 2012, we used to refer to our meetings as Cloud 101 meetings, where I'd have to take my jacket off, hold a whiteboard marker, and go, this is what a cloud is, and it's not a Dropbox, it's not a Google Drive, and this is how it works. Thankfully, we're not there now. A lot of people are very aware of how it's done. So abhi bhi, in a very large part, and I mean no offense to anybody in the audience today, I can safely bet that 50% of the financial institutions even today in Pakistan are not really aware of how to utilize cloud. I still have a lot of meetings with a lot of fintechs, PSP, PSOs, banks, CTOs, CXOs, and they're still quite confused as to how they can get on that journey. So on-prem remains because it's convenient for now. But coming to the second part of your question, that won't stay the case for long at all. Why is that? When you talk about digitization or digital first or phygital or however you put it, one of the key components of that approach to customers is agility. How fast can you roll out a service? First of all, how fast can you think up a service to fill a gap? Then how fast can you roll out a service? How fast can you close the feedback loop that, oh, okay, this isn't working this way, we need to improve the service or the performance or the response times. We're talking about Gen Alpha right now. Now State Bank has reduced the digital onboarding age to 14. You can have a Guardian CNIC and get digitally onboarded. So when you talk about Gen Alpha, I don't know if you know the stats, they take 0.3 seconds to make a decision on the screen. So if you look at stats on Instagram, Snapchat, stories, even digital, how they perceive digital services, it's less than half a second for them to make that call on whether a service is good or bad. When you start designing your services around that kind of a philosophy, doing the standard brick and mortar hardware ordering, begging the IT department in the bank to give you some services on the server, and trying to prototype, it just doesn't work that way. So what we're seeing now is a lot of, so fintechs, obviously, because they've been smaller and leaner, have led that movement in Pakistan, but now it's coming up to the big banks as well, where the entire approach is being built in a very cloud-native way, where how can we take a service to market in the shortest span of time, in the most cost-effective manner, so that even if it doesn't work the first time around, the cost to turn it around and ship out a second iteration or a third iteration or a fourth iteration is marginalized as compared to doing the same thing on fixed hardware, right? Because it's a pay-as-you-grow, grow-as-you-scale kind of a model. So what we're seeing right now, and I'm working with a couple of the DRB applicants as well and a few fintechs as well right now. I haven't let go of that part of my life. And what we're seeing is from the get-go, their approach to whatever they're building is cloud-native, meaning it's agile. How can we get this done, and how can we give our customer the fastest response time, the best experience with the lowest amount of issues that are possible? अगर आप आज भी देखें, UBL हो गया, मिजान हो गया, 2-3 और बड़े अच्छे बैंक हैं जिन्होंने बहुत पहले डिजिटल फर्स्ट पॉलिसी की तरफ गए थे. you will see that their customer experience on their apps is a lot more different than a lot of the other ones who are doing it the traditional way. Similarly, मैं नाम नहीं लेना चाह रहा, लेकिन 2-3 digital wallets of fintechs हैं, they're extremely popular on social media because 2-4 feature sets हैं, work really well, work really fast. All of them are cloud native. A lot of them are Rapid customers. A lot of them, I brought them on board. A lot of them are on Amazon and other places. So I think just by the nature of the beast, which is to give that kind of a customer experience, doing things the conventional way, on-prem, buying servers, figuring out how to do things, just doesn't work. And cloud is not just on-prem versus cloud. Cloud is also the technologies that exist on the cloud that allow you to create those services. Everything from AI to machine learning to the UI, UX features built into databases to everything. And I think that's where we're going right now. There's no way to avoid it.
So this brings me to you, Umar Saab. You're obviously one of the critical parts of the ecosystem, and we were just talking about the agility and speed of decision making. And we have seen, and I think we still see to some extent, that the traditional banks leaned a lot on the credit bureau for credit underwriting process. And I think even now it may still take, I don't know, correct me if I'm wrong, 3 weeks to maybe get a credit card or a personal loan, or longer maybe. But obviously now, as the ecosystem is developing and as more and more fintechs and others are transforming to the digital lending landscape, so obviously your play in it becomes extremely, I think, critical, especially on the speed part. And earlier, we were discussing with Sohail Saab, also from the central bank, that other aspects of the scoring, model has to be looked into as well. Like behavioral analysis is also being considered. And the current situation, if you look at it, I mean, we still see hardly, I think, of the combined lending portfolio in the country of all the banks, the consumer part is still about $1 trillion as compared to $6 trillion for corporate and private business and so on and so forth. So how do you, will you be addressing or helping banks to not only speed up on the credit decisioning part, but how are you engaging with them in terms of giving them new avenues to consider? So if you can please give us some insights.
I'll start that we will not, but we are doing a lot of things. And not just the commercial banks, but the microfinance industry, the NBFCs and the fintechs which are coming in. We are providing them with a lot of services and a lot of models through which they can decrease their processing time, they can increase their attach, they can improve their credit underwriting processes. To start with, they use our conventional credit information report as part of their credit underwriting to take a decision or do a risk evaluation of a customer. But then over a period of time, as this is what commercial banks do. But with microfinance institutions and banks and new fintechs coming in, which already were relying on the digital services, we had to innovate our product line based on the database that we have. We've got a database of around 22 million borrowers in Pakistan, around 1.8 to 2 billion transactions. On an average, we've got a database on every borrower. We've got a 7-year average credit history available for each client. So based on this, we have developed 5 or 6 credit scoring models. It is based, one model is based on the commercial banking data, another is based on microfinancing banking data, and a model which is based on combined data of microfinance and commercial banks. Then because of a lot of nano lending that has happened in the market, around 3 to 4 million nano lenders are there. Based on the nano lending data, which is of lesser tenure, lower ticket size, there's a nano lending scoring model. And finally, to the new to bank customers, we talked about demographic and segment-based scoring models. That also we have available, which is based on age, behavior, the demographics, and the location. So these are for the new to banks. a lot of institutions, especially the new fintechs coming in, they are using these scoring models, incorporating them into their systems, and decreasing the turnaround times. Especially these nano lenders, their decisioning is instant based on these credit scoring models, which we are providing to them. Another thing that we are providing to commercial banks and to the institutions are the analytics that we do on our data. So if there is an expansion in a market, we have a lot of data, what kind of a behavior is there, what kind of customers are there, what kind of defaults are there. So based on that, informed decisions can be taken by the institutions based on the analytics that we provide. And finally, the last thing that we are doing is a lot of collaboration with telcos, with commercial banks, because they have a lot of other data. The deposit-based data is available. On telco side, the user behaviors are available. So there's a lot of collaboration being done with them, and we are developing models based on telco data, based on utilities data, based on the deposit-based data which is available with the banks.
Thank you. How are we doing on? Okay, so let me just pivot back to you, Zuhair. Mr. Naeem Zamindar earlier addressed, and talked about customer well-being. Now, in your, innovation lab and your design and thinking, can you just give us a bit insights about design and thinking, and how is that translating to, customer well-being in terms of, looking at from customer perspective, so if you can just give us an insight into that, please.
Very simply and very easily put, design thinking is nothing except the philosophy that the customer experience is what you need to curate. And it's not just the end product, but it's a continuation and an evolution of how do you start, how do you conceptualize, how do you ideate, what experiences and how do you judge every single thing as part of that journey. It's not just good PR or good customer service, it's everything. It's the insights that you need to develop, the data that you need to garner, how do you use that data to immediately evolve and pivot to what the customer wants. It's the agility that comes in. And it should not start with product first or Excel sheet financial model first, but it should start with user experience and what is the use case. Why do you need to do this? How might we build this? How might the customer do this? And that's how you start connecting the dots, right? So from what all the peer participants have been saying, how do you connect data? You want to be customer-centric, but you've got to be a data-hungry, data-driven organization. But the problem that most people have is you start from the top of the pyramid. Of the hierarchy of data sciences, right? You start with AI, machine learning, you put the tools in, the fancy tools in, nobody knows how to use them. So collaborate, partner with telcos, with retailers, with e-commerce, with anyone who is part and parcel of your customer's life cycle, okay? And once you start doing that, you graduate from being transactional to relational. It's the relationship that you've got to curate and you've got to garner, and that's what design thinking sort of materializes into.
Okay. Great. So we have a couple of minutes. Maybe we can take a question, perhaps?
But first, adding on to this interactive panel on CXO, I would like to call upon our session chair, Mr. Fernando Morillo, Senior Executive VP and Global Head of Retail Banking at Macroeconomic, to share a few words. Please, Mr. Morillo. No, that's fine.
I think I'm the last one to say some words here today. There are more. Then I'm humbled by not being the last one to say the last words here. What else can you, I was thinking before coming here, what else can you add to what I've heard today? The first thing I'd like to do is to really thank and appreciate the extraordinary effort in the organization of the event. I'm really liking, I'm really learning a lot. I'm really listening to all the breadth and depth of discussions that are taking place here. So first off, my deep appreciation to invite us here. Second, I'd like to perhaps make a correction in something that has been said or hinted with regards to Macroeconomic being the oldest. It is true, it's the oldest private bank in the UAE. But I want to correct that. Oldest doesn't mean old. Macroeconomic and I are exactly the same age. So Macroeconomic is a young bank that is coming to Pakistan. And let me even correct myself. We're not coming to Pakistan. We are already in Pakistan. We've been here for the last 20 years. It's been a very deep relationship. We have over 200 people here working already in Pakistan. And frankly, for us, it's more of a really integration with the country. The moment that we learned that there would be a licensing process in Pakistan, we didn't hesitate it for a bit. And why is that? I've been asked several times before coming here, and even once we came here, why Pakistan? And I always answer with a question. Where else on earth can you find a country with almost a 250 million population, of which 70 million are active on mobile and don't have a bank account? And if you really think about it, there's no other place on planet Earth that has this big opportunity for someone like us who are in the business of digital banking. So it's an obvious question for us to come here, and we come in a very humble way. We want to contribute to the mammoth task of changing the habits of a whole country with regards to moving from cash to digital. But in the end, this is not a task of one digital bank or 5 digital banks or even the task of fintechs. It's a collective, colossal task of all of us to change the habits which are entrenched and have been there for such a long time of a big section of the population whom we need to convince about a new way of running their lives, a new way of doing something as simple as managing their money. So cash is the common enemy, and only we join forces will be able to defeat cash, in the sense that we'll be able to move all this economy forward and all this system forward. And that way create more wealth for the economy, more wealth for our clients, and a better and sounder financial system. So we are coming here, and we are really humble players, but we believe that we can contribute to that for 2 simple reasons. One, we are a bank. We're a bank, we're a young bank, as I was saying earlier. We know what it is dealing with all the challenges and problems that is doing banking with our clients in terms of compliance, in terms of the commercial relationships with them, managing costs. It's a complex business. We know this business, and we want to humbly contribute to the digitization from that angle, but also we are a digital bank. Macroeconomic 5 years ago made a very bold decision. We decided to reduce our branch network by 85%. For whoever in the room who's been in banking or related to banking, I think you can understand what that entails. In a matter of months, getting rid of 85% of your physical presence. And we did that by, at the same time, launching 3 digital banks. We launched Macroeconomic Neo for the individuals, Macroeconomic Neo Biz for SMEs, and NeoPay for the merchant acquiring. All 3 are nowadays in our home market the digital bank leaders in their respective categories. So we want to bring that here. We will have to learn a lot from all you, from all our clients here in the future. But we expect to be able to provide some solutions that will help in this colossal, mammoth task, as I was saying earlier, of changing the habits of nearly 100 million people in this country. So we are for this task, and perhaps my final word on that is, we come with an open hand and with open arms. With that I mean that we are willing and happy to collaborate with all of you in the room, with all the fintech community, with the digital ecosystems in Pakistan, with other banks in Pakistan, with our digital frenemies, with our digital people that will be working with our digital banks, we'll be working with them, and we will collectively be succeeding, as I said, in this huge task. And we come with these open arms, we come with this open mindset. And we come also, we believe, ready, as Irfan has highlighted earlier, with the right technical stack to connect. Because, you know, there are always good words about the mindset, about being able to collaborate, but in the end, this is a technical challenge as well. So we expect to bring also here fantastic technical capabilities that we've been curating in our home market, and also in other markets with similar challenges like Egypt, where we also operate. So we're going to be bringing technical people, and we are also hiring. So like we would say in LinkedIn, we are hiring, and we are open for collaboration even in a deeper sense. Okay. So again, thanks a lot for welcoming us, and a big hello from Mashrek from now onwards, because this is the beginning of a very long journey that we are taking with all the enthusiasm and energy in the world. Thank you.
Thank you very much, Fernando. Welcome to Pakistan from Mashrek, our gold partners. Mr. Morillo, if you could please stay on stage with me, because you are the designated memento giver for our panelists right here. So if you can please stand in the center of the stage. Panelists, fantastic. However, we do not have time for questions. All out of time. We still have 2 speakers coming up. All right, so our first token of appreciation goes to Mr. Zohair Saif, Head of Innovation at UBL. Congratulations. Perhaps the rest of us can come a bit to the right to not be in the photo. Yeah. Right, next up we have Rizwan Kazi, Growth Officer for Mercury Payments. Thank you. Mr. Omar Khalid, Chief Operating Officer for Equitas Information Services Limited. Thank you. And Mr. Imran Khan, Founder and CEO of Raptor Games. And last but not least, Mr. Fernando Morillo, Senior Executive VP and Global Head of Retail Banking at Mashrek. Mr. Hamza is going to be presenting you with this token of appreciation and for all your support throughout this event, making it possible. Thank you. All right, a group photo, everyone. Oh, the photographers are just loving this. Which camera do we look at first? That's the one I want to know. Everyone, okay. And one last round of applause for this last panel discussion of the day. Thank you, gentlemen. Thank you. Thank you. Thank you, Mr. Moderator, for the 3rd time. All right, we now move on to a session on CX and marketing. This presentation is a CS success story from number 23 to number 1 bank in customer experience. Wow, from number 23 to number 1. Let's welcome Farhan Niaz, former global head customer experience for Abu Dhabi Islamic Bank. Farhan, where are you? There you are.
Good evening, everyone. Good to see you. Thank you very much, TerraBiz, for inviting me. Hamza, thank you very much. We're going to talk about something very interesting today. I've heard a lot of presentations since morning, and it makes my heart very, it becomes bigger because I've been hearing the word customer experience constantly. being the champion of customer experience that I've been with for the last 25 years, we're going to talk about customer experience, specifically only about customer experience, a little bit related to digital as well, in a little more detail. Okay, let's get it. Sure. Perfect. All right, we're good. So I absolutely love what Steve Jobs has done to the world in terms of customer experience as well. Get closer than ever to your customers, so close that you tell them before they know what they want. This is the level of experience that you want to reach, where you know what your customer requires before you actually anticipate it. I'm Farhan Niaz, listed amongst the top 100 global CX thought leaders of the world. I have also previous experience with Mashreq Bank. I've been head of customer experience for Citibank as well, and director of customer experience for Abu Dhabi Islamic Bank. About a year ago, I've started my own consultancy, CX Future. I am listed and a part of some of the top global customer experience organizations in the world, some as a patron there. Recently, I've also amongst, with a collaboration of 18 top global customer experience leaders in the world, we have written a book. It's already a bestseller on Amazon. I would encourage all of you to, get this book. You will find an amazing articles inside. Also, my podcast for 2022, out of all the podcasts in the world, as the most downloaded podcast and watched podcast in the world. And you can see some of the top names over there. Ron Kaufman is there. A lot of other my colleagues who I personally meet, and I'm a very big admirer of all of them. These podcasts are available. I'm a storyteller. You would find some amazing customer experience stories in these podcasts. One more, I'm also awarded as the most experienced judge in the world. I've done over 30 to 35 events globally in every part of the world. Wherever there is a customer experience competition, I'm invited as a chair judge. I'm not sharing these things to boost myself, but I'm sharing these things because I'm a very proud Pakistani. There is a very few Pakistanis who have these kind of in customer experience. So I feel so proud presenting and telling them I'm from Pakistan, and globally I represent myself in these events. Now, we've been talking about customer experience. Do we really understand it? Does everybody really know what customer experience really stands for? And I always ask this question: what is the difference between customer experience and customer service? I'm not going to embarrass anyone here, but trust me, ask yourself, you would not be able to answer. It's a very simple thing, but very few people know the difference between customer experience and customer service. I'll put it very simply. Customer service is purely transactional. Customer experience is the entire journey. I checked into the hotel yesterday, went through many different layers of experiences. Those are my moments of truth. There was service in between where I asked for something and I got it. And then there were things that inspired me or impacted me. That was part of my experience. Before I go into that experience, because I've taken a few notes, let me just quickly tell you what customer experience is. It'll give you an idea. Simply going from a 4-star to a 5-star. Somebody asked me this question: what is the difference between great customer experience and exceptional customer experience? And I said, whatever you're doing today, improve it by 10%. A little bit of improvement is not a rocket science. A little bit of improvement from a customer point of view brings it to the next level. This is me Yesterday, when I checked in, do you know what this is? This is the check-in counter at this hotel. By the way, lovely hotel. Beautiful place, great experience, the room is amazing, everything. But that's my view. I see the back of a computer, and there is an empty bowl here, which I have no idea what that is for. And these are the things from a customer experience perspective. Everywhere around the world, when I go, you see the computers are not at the eye level of the people who are serving you, but they are at the ground level, so that there is a direct interaction between the people and the customer who's standing there. Plus, I saw some amazing, beautiful bouquets of flowers, and when I closely looked, they were fake flowers. And I said, how difficult is it for them to every day put real flowers? This country has amazing flowers here. I was pleasantly surprised when I walked into the elevator lobby. Wow, beautiful, real flowers over there. When I walked into the room, the door was locked and the window is locked, and it says, sorry, due to security reasons, the windows cannot be opened. And I thought, great, okay, but why can't the window be cleaned from the outside? I could not see anything because window was not clean. And also, this is the lock. I'm sure all of you must have. It could have been closed, but in a different way. Idea is not to pinpoint anything. The only point I'm making, this is customer experience. And on top of that, the lady who served me was unbelievable. She upgraded my room. Not only that, she offered me the membership of Accor. I said, I don't have any things with me. She said, no problem, I'll find you with your email address. So as a customer, do I remember this lady who was so good with me, or do I remember these things? Customer experience is all of this. So whatever you are doing in digital and everything, please make sure that from a customer perspective, look at the entire journey. It has multiple moments. Each moment needs to be a winner. One moment failure, the entire journey will fail. When 100 organizations were asked recently, 91% of them believe that they're customer-centric. You go to an organization and say, do you do a great job in customer experience? Yes, we are very good. When you go to the customers of the same organization, only 10% of them agreed. Do you know your customers? Do you think that you're doing a great job? And have you ever gone to your customers and asked them, we think we're doing a great job, we are offering you everything, what do you think about us? You'll be very surprised that the customer, and today the disconnect with the customer and the organization, the way they feel about each other is humongous. Ron Kaufman came up with this amazing, excellent hierarchy of experience. You need to identify where you are. Are you at the level of criminal, which is below minimum? Are you giving the basics, and the basic is bare minimum? Then there is an expected. For the customer, when customer wants something, that's expected. If you're doing that, you're at the stage of expected only. Desired. Customer wants something else. There is something that customer prefers. Next stage is the surprising. This is where it starts turning service into experience, when you start surprising them. Here, sir, you had a standard room. I have upgraded you. Now you are in upgraded room. Wow, thank you so much. I'm pleased. That's a surprise. And unbelievable is where the customer is not expecting, and that's what you do. And I would give an example of Ritz-Carlton, which is known as the North Star of customer experience. They know you really. If today you order something, next time when you stay with them, that thing is already in your room. Every staff member, every month, is given a stipend of $2,000 each. They have hundreds of staff members all over the world. Everyone has $2,000 to their disposable, no question asked. They can spend it on the customers. And you know what their tagline is? We are ladies and gentlemen serving ladies and gentlemen. That's how North Star becomes. That's the level of unbelievable where you need to reach. I have heard a lot of notions today. Generation Z, Generation Y, Generation X. Rizwan talked about Generation Alpha. Let me tell you what really is the generation which is coming. And we all need to align to that. And that's called this. Find it, yeah.
Did you hear that? That's the balance of power changing. We are your neighbors, your brothers and sisters, co-workers, kids, your grandmothers. We're the driver sitting at the red light next to you, the other passengers on the plane. And now we have the power. It used to be Madison Avenue, census data, focus groups, secret shoppers. It used to be jingles, endorsements, infomercials, coupons. It used to be, the customer is always right, said those who didn't listen. But that was yesterday. Today we found our voice. We are strangers, but we are organized. We won't wait for your big data. We want whatever, whenever, wherever. 9 to 5. We live 24 hours a day. We are a moving target. We move fast. We are a movement. We are cutting cords, changing the way things work. Status quo, status no. We brought down the taxi industry, but we are not the enemy. We are your opportunity. We are growing, getting better at getting better. We are your path to success, if you can keep up with us. We'll be on the winning team because we'll pick the winners. We are not millennials. We are families with more Facebook followers than you. We are not baby boomers. We are grandmothers who order Christmas gifts from a touchscreen. Gen X. Gen Y? No. We are Generation CX. And you can be too, if you listen to us. Create for us. Join us. Generation CX.
That's the new generation. It includes everyone.
Did you hear that?
It includes everyone. And a very simple message here. What are they saying? Used to be customer is always right, which is today is always right, but still it means that you need to listen to the customer. Whatever, whenever, wherever, we are not 9 to 5, we are 24 hours. We choose. We are the power. We are your path to success if you can keep with us. There's a lot more detail which are available on Generation X, so if anybody is interested, I can share that later on. But to me, this is the future, and this is where organizations need to move towards. Golden Circle, if some of you, any one of you who have not heard Simon Sinek, my humble advice, please register to Simon Sinek. He probably is the best person in terms of giving advices in customer experience so he came up with this golden circle. He said organizations are always thinking from outside to inside. It's always what we do, how we do it, and why we do it. I am a trainer. I train, I have a gym. Please come and train with me. That's what normally a trainer probably would be saying. Simon Sinek said, no, it needs to start from the center. You need to first identify why you're doing it. And then you need to define how you do it, and then what. Like, for example, we believe that people live with their best life when they begin to a community. The way we create a community is by connecting our members. We just happen to be here at the best yoga session in town. Want to join us? The same trainer is actually saying why we're doing it, what we can do for you, how we do it. Now come and join us. As a customer, I'd be more intrigued because now I know that there is a purpose, there is a mission, there is a value behind it. I'll go to this organization rather than somebody saying, oh, come to me, I have these features. Oh, by the way, this is how I do it. So this, Simon Sinek, this model has really caught up, and most of the organizations globally, including Amazon and everyone, are utilizing this particular one. We've been talking about customer centricity. Do we really know what customer centricity really is? Are we designing our entire journeys based on customer comes first? Digital comes first, everything comes first, but actually customer comes first. I've specifically or deliberately picked up some examples from top organizations. Let's look at Toyota. It's not about the car. It's about making customers fans for life. Let me pick up a couple of more. Like Ritz-Carlton says, ladies and gentlemen, serving ladies and gentlemen. Virgin Group, there's always another way to satisfy customers. These are their taglines. Every organization's tagline or a vision is purely defined around the customer. Go back. I am sure all of your organizations have a vision and a mission. Do you have a separate mission and vision for customer experience? Please ask your organization, where is my customer experience vision? Does my front-end staff and everybody in the organization know the vision of my customer experience? Coca-Cola did a survey. They went to an organization. Randomly, the CEO went into the organization. Back-end operations say, please, gentlemen, what do you do here? I'm just an entry data person. What's your role in customer experience? He said, I have nothing to do with customer experience. I don't touch customers. And he came back and he said, we failed as an organization because my people do not know their role in customer experience. Everyone plays a part. And those are the organizations which are truly customer-centric, where everyone understands their role in customer centricity. I gave you the example of Ritz-Carlton, and there is a reason why Ritz-Carlton is called the North Star of customer experience. These are all digital-driven organizations. But look at what's happening here. Zappos, if you ask me, yesterday I was in the plane, I was coming in, and I just wanted to play with ChatGPT. And I said, give me the list of top best customer experience organizations in the world. And I was not surprised when Zappos' name comes first. It's Zappos, it's Amazon, those are, and McDonald's, these are the names that come up. Zappos, I had the privilege of going there. I had the privilege of meeting the CEO, Tony, in Zappos as well. So Zappos, we respond to every single inquiry, whether it's via phone, email, live chat, Twitter, Zappos blog or Facebook. Every single, they respond. They're talking about thousands of them. 1,100, they have people in the call center. They take more than 15,000 calls a day. That's the number we're talking about. CEO Tim Cook reads and sometimes responds up to 100 customer emails every day. Their entire TMQVC, Denim & Co. proprietary fashion line was built on suggestions and comments from the customer. Entire lineup from the comments of the customer. Comments, not CEO Jeff Bezos forwards emails from unsatisfied customers to his team and demands a fix within hours. These are the people who've done it. And this is the reason why they've done it, because they're still involved. From top step to the bottom step. 100% of the customers are people, 100% of the employees are people. If you do not understand people, you do not understand your business. This is Simon Sinek. I was supposed to talk about how I took the bank from 23rd to 1, which is a very big discussion. But I just wanted to tell you that there are certain pillars. And if you fulfill those pillars, and you follow those pillars and make sure that customer experience, all aspects of customer experience are taken care of, you will have a very successful. So this is so you start with a customer experience strategy. You design your experience. Employee engagement is number 3. It's right on the top. Voice of the customer, this is where you get the feedback of the customer. Metrics that matter. And organization alignment, which is the customer culture. This whole, it's simple. These are the pillars. Make sure that each of these pillars, and we can separately talk about pillars, whoever is interested, I'm available. This was my module. I made sure that all of these pillars, I created my own framework and followed these. And I will share this presentation with you, so because I've been told that time is short, so I probably would not be able to go into details. I want to cover a few more interesting areas. If you can't measure it, you can't manage it. What's measured is improved. How many of you do voice of customer, NPS? How many of you know NPS? How many of you know NPS? Privilege of being in conversation with Fred Reichel as well, who's the founder of NPS. And NPS, unfortunately, has now become the pinnacle for all organizations, especially in the West and in UAE. But that's not the only indicator. Organizations forgot that there are other very, very important indicators. I just wanted to ask you, before I move into the indicators, so when we talk about matrices and voice of the customer, I call it voice of the business is part of multiple voices. What is it? The first one is voice of the customer. That's what you do. NPS, voice of the customer. And I'll talk about some other matrices as well. Then it's voice of the employee. Do you ever go back to your employees and ask them, how do they feel about the organization? How do they feel about the product? Will they become the ambassadors of that product? Probably, as per survey, only 7 to 10% of the organization do voice of the employees. Then there is voice of the process. Do you understand each process? So when somebody comes and does a specific, somebody comes to the teller, I want cash. The moment this person goes back, a survey needs to go and say, how was the transaction? How were you served? That's the process. So you need to measure process at each stage. That's when you understand if your systems and your productivity is working or not. And last of one is very important, which is voice of action. Does anybody know what voice of action is? When we go back to the customer and ask for voice of the customer, we have thousands and millions of customers. Some organizations have more than 1 million customers. Do we go to everybody and ask them? No, there is a very small percentage of sample size that we do. What about the other customers? Their voice is important as well. That's where you need to go and listen to them and see what they're doing, their action. People are going and writing on your social media. You need to do the sentiment analysis and see what kind of sentiments are coming in. Somebody used to use your credit card frequently, but over the last 3 months, the transactions have declined and the balance is going down. That's an action that the customer has taken silently. Good organizations are studying the patterns of their customers, and that becomes the voice of action, where you understand, and this whole becomes the voice of the business. I was talking about the probably would not have time to go through all these indicators, but there is Net Promoter Score, their customer effort score. Wrong to ask NPS at every stage. NPS is loyalty index. Loyalty comes after you've been with the organization for some time. The question is, how loyal are you? Would you recommend me to your friends, and will you continue doing business with me? But imagine somebody has just joined your organization. The first time I'm checking into a hotel, are you going to do an NPS with me? No, you are going to do a CES, that's called Customer Effort Score. How easy or difficult was it to do business with me? And somebody comes to your branch and you say, you do a transaction, you don't do NPS, you don't do CES, you do CSS, Customer Satisfaction Survey. Are you satisfied with the service you got? Satisfied, dissatisfied, very dissatisfied, very satisfied. It's a scale of 5 to 7 scale. There are different ways and different indicators for different purposes. Good organizations know where to do which kind of a... And on the right-hand side are the new set of metrics, which probably only 1% of the organizations in the world are doing. Fred Reichert has just written his book, Moments. In his book, he's written a new indicator. It's called Earned Growth Rate. There are Zappos has come up with another one which is called Net Trust Rate. Please, anyone who's interested in this, I can give you the formulas and details of these new indicators. Organizations have started utilizing, moving from the traditional indicators to the new indicators as well. Tony Heist, I told you about Zappos, listed amongst the top 100 thought Fortune 500 leaders. Let's make most of the money we would spend on paid advertising and paid marketing and instead spend it on that investment in customer experience. And then let our customers do the marketing for us through the word of mouth. That's what they do. I'll give you one example. How much time do I have? Because I have so many stories to tell. I was in Zappos. I was in Zappos, and I said, why you guys are so good? And the call center head told me, he said, listen, I'll give you one example. 2 days ago, veteran, who's an old army guy, he called us, and this is an organization that sells shoes and stuff online. And he said, I want a pair of shoes. While he was selling the pair of shoes, he just started customer talk. So he said, oh, my Christmas is coming, my son is not very happy, he wants a PlayStation, I can't afford it. And in 2 days, his doorbell rings and the PlayStation is there. It's not about PlayStation getting there. It's about them listening to the customer. 10, 15,000 calls a day. 350 call center members. They all listen to the customer. The moment customer says something, one customer called, wanted to order something. They did not have it in stock. The agent said, hold on, sir, wait for a minute. The agent called another company. They said, I just checked online, you have the product that they want, I don't have. I'm transferring my customer to you. The customer was shocked. He said, who gives their business to somebody else? The agent said, you came to me for customer satisfaction. My job is to satisfy you. It doesn't matter, I do it or through you. Did you get what you want? He said, yes, I got what I wanted. I remember when in my bank, when somebody would say, oh, our loan rates are very high, go to another bank, we would probably fire them. That's what customer centricity is. When customer comes to you, your passion is to serve the customer. That's why these organizations are so amazing. For digital, Again, Steve Jobs, you've got to start with the customer experience and work backwards towards technology. In our organizations, we're looking at our technology, our technology capabilities and trying to, let me just leave you with one very nice video. And I had some very good stuff, a lot of stories.
Please, Jazz.
This is the reason why I'm showing you this video is because please understand that technology needs to be done correctly. And we talked about phygital and a lot of stuff, and technology goes wrong. It's a humor way of seeing how technology needs to be done correctly.
Please, Jazz.
Playing jazz.
Smoothie.
Making smoothie.
Calendar.
No meetings today. Remember, tandleke at 9:30.
Fire off.
Fire off.
Open door.
Door open.
Sånn, så skal vi sette en til.
Fire. Open door.
Wrong voice command.
Open door.
Wrong voice command.
Open. Open door.
Repeat that.
Open door.
I didn't understand that.
Hey, open door.
Play on the floor.
Get on the floor. Open the door.
Wrong
Open the door.
Error.
Hey, there. With a rock. Open door. Open door. Open door. Open door. Higher.
Higher volume.
Higher.
Higher.
Sometimes the traditional key is the right way to go. I wanted to talk about phygital, but okay, I know my time is done. Please, I'll leave you with one last, with Disney. Disney is mine. You go to Disney, they make every person feel like a king and a princess. But whatever you do, do it well. Do it so well that when people see you do it, they will want to come back and see you do it again and again, and they will want to bring others and show them how well you do it, what you do. This is me. This is what I wrote, this is my saying, and customer experience is about promises made and promises delivered. Experiences become exceptional when promises are consistently delivered above expectations. And you can connect with me. So, thank you. Oh, thanks.
Testing. Thank you, Farhan Niaz. That was incredible. I can hear the passion in his voice, right? You know that he's in the right place. All right, ladies and gentlemen, we have a presentation on what retail business owners and their customers want from banks. So please put your hands together for Asfandyar Farooq, co-founder, Chain Store Association of Pakistan and CEO of Hub Urban Brands. Welcome, sir.
Assalamu alaikum and good evening. Thank you. And thank you, Farhan Niaz. I think that was a very energetic talk. It sort of helped the energy come up a bit. I'll try not to bring it back down. Keep things a bit simple and not too long as well. And I think what you referred to in terms of the customer, and I think that's why I think it's also good that what I want to talk about is the demand side of banking services and products. And one of the sectors that is obviously involved in availing banking services is the retail sector in Pakistan. And just to give you a short introduction about myself, so in my day job, I manage Urban Brands, which is about a 22-year-old Pakistani multi-channel retail business that owns and operates 3 diverse retail brands with a presence in major cities and as well nationwide through e-commerce. I'm also a founding member of the Chain Store Association of Pakistan, which is the official trade body for the organized retail sector in Pakistan. And it's a fast-growing community of 200 of the most prominent brands, retail brands in Pakistan. And there are different various sizes. It's not just about the biggest brands. We have SMEs, we have large enterprises, we have in this community, we have businesses that have a turnover of a few hundred million rupees to tens of billions of rupees. So it's quite a variety of businesses and diverse group that we have. And interestingly, on the whole, the organized retail trade now contributes approximately 3% of the GDP of Pakistan. So the purpose of my talk today, as I was talking about, was to attempt to give you a first-hand perspective on behalf of this sort of segment of the economy, and also from my personal experiences as well as a retail business owner, especially from a sort of banking and payments perspective. But before I sort of get into, and I want to talk about the retail sector as well a bit, but I want to sort of ask you all if, have any of you experienced something like this recently or at all? Please raise your hand if you have. Right? Surcharges or some kind of, cash-only situation. So interestingly, this is definitely prevalent, it's common, but when you look at the organized retail trade in Pakistan, this is less common. From the customers, there's quite a reasonable amount of digital payments being received and accepted from the consumer. But when we go to the sort of the end-to-end and the value chain, when you go upstream, that's where sort of we see that there's actually some work to be done. Although there's, but in the sort of micro and small retailers, you'll see this more often. And that's definitely an important area where we need to crack, I think, as stakeholders of this entire economy. So, but before I sort of delve into this space, I want to sort of take a step back and talk about sort of retail in Pakistan, because this is a sector that's sort of, there are a lot of sort of perceptions about where retail is in Pakistan, what it looks like, and it's mostly very, very small. So I wanted to sort of just give you a brief about the landscape at the moment. So here we have, it's basically divided into, and I think this is a global phenomenon. There's unorganized retail and then there's organized retail. So on the left, you'll see the unorganized, and on the right, you'll see the organized. I mean, this is just a picture to sort of show you what kind of, so you'll have in the unorganized space, you'll have smaller stores, single stores, mom and pop, traditional stores, Kiryana stores, as a lot of people call them, selling a variety of goods, normally a lot of fast-moving goods, consumables, edible items, and so on. When you go into the organized sector, you'll see larger format stores, or you'll see retail chains, right? Which I think, as you know, globally, that's also the phenomenon. But when you look at this overall size of retail in Pakistan, it's about $12.7 trillion. Dollars is rupees. 12.7 trillion rupees, which is approximately 18% of the GDP, which is also actually quite large in terms of, it's the largest service sector sort of in the country. And it's still quite fragmented, right? Where you, if I'm talking about, as I mentioned, smaller stores. So, but interestingly, over the last decade, organized retail, whether it's, and I'll come to sort of the product segments, but organized retail is approximately 15% now of retail trade in Pakistan, which is actually a reasonable size compared to where it was a decade ago, which is why some perceptions still exist in that regard. And 50% of the organized trade means the size is around over 2 trillion rupees, right? So some of you might be, wondering again, what is organized retail? So organized retail is usually, as I mentioned, medium-sized stores, chain of stores. They usually range from a couple of stores or one larger store, an online store if they have them, and a lot of them do now, to several hundred stores in a retail chain. And in the case of large format, big box retailers, there are tens of thousands of square feet in one store. You'll see them in the bigger malls, you'll see them in hypermarkets, department stores, and big fashion brands as well now in Pakistan. So that's, and they're mostly in the urban and semi-urban areas, and either on the high streets or in large shopping malls. Now, now this applies both in the unorganized and organized space, but you'll have product segments which are most prevalent in Pakistan are apparel, clothing, footwear, retailers of beauty products, electronics, household goods, hypermarkets, supermarkets, and departmental stores, as well as pharmacies, bookstores, jewelers, bakeries, and the like. So, you will see many more of these sort of products being sold in organized stores, but unorganized as well. And interestingly, as you all could have made out, the organized retailers are operating in the formal space. So they're documented, they're digitalized, and they are also have sort of card machines, POS machines, and are using banking services quite widely. And I think in a way you could consider them to be the early adopters and the power users within the sort of retail space, especially considering the depth and breadth of their operations. And as I was talking about in terms of where Pakistan is in comparison to in the Asia-Pacific region, in terms of organized retail. So organized retail, as I mentioned, was around 15%. In India, it's around 19%, 20%. In Indonesia, it's 24%. Vietnam is around 20%. So we're not so far behind now when we look at in comparison to other peer economies. And here you can see that where we are. We're in the space where we are fast modernizing. Not a very mature market, but quickly digitalizing, whether it's payments or the entire end-to-end business. Now, what I wanted to also now come to is one of the benefits of being the official trade body is that we at the Chain Store Association of Pakistan have been able to tap into our community of retail businesses and collect first-hand input from them. And that's what I would want to share with you today, is sort of the insights from retailers themselves. And specifically here, organized retailers. Of course, as we mentioned, the smaller and the 4 million odd retail shops in Pakistan, they are the real, I mean, when you look at the biggest part of the 85% of the retail trade, but 15% are the organized retailers which are growing fast. And actually, interestingly, growing 20% CAGR approximately, for the last few years. Whereas retail in Pakistan has been growing about 8 to 10%. So double the pace of retail is how fast organized retail is growing. Now, so as I was mentioning, we did was we sort of wanted to get a good idea of where retailers and brands stand as far as their their perceptions are and how they're operating in terms of, especially in terms of banking and digital payments. I'd like to share those findings with you. But and along with that is basically what are the retailers looking for, and in this current at this point in time. I think a lot of people have talked about sort of the customers and them being tech savvy, digital savvy, and then being more convenience oriented. So that's true for whether it's banking services on the retail side, or whether it's goods and services in other segments of the economy. Retailers are looking for higher productivity of their people and resources across the value chain. So that means that whatever an enabler or a partner does with them, this have to achieve sort of these business goals. Decision making better and faster using big data and all the data in different places within retail. And we're talking about interoperability when it comes to banking products and services. Similarly, retailers have a lot of operations. They have a lot of times they have sourcing, production, operations, large network of stores, e-commerce, different touch points for the customer. So everywhere we want to be able to integrate all this. And same thing goes for payments. If you have online payments, you have retail payments, you have payments coming from through different channels. So that's also important. And of course, mitigate the business risks as they grow. So basically theft, fraud, these kind of issues, data security, these are also issues as any business grows, especially retail. So now jumping to sort of the insights we've been able to get, and I wanted to start with the customer side, because we were talking about retailers and their customers. So customers, if you can see here that in the organized segment, 3 out of 4 organized retailers have 2 or more POS machines, or specifically card machines, per till. So every time wherever a customer comes, they have 2 or more machines. So they don't have 1 machine, they have 2 machines. I mean, they're dealing with 2 banks here, right? 2 banks or 2 POS machine providers. And interestingly, so the majority of the organized retailers are accepting approximately, or their customers are paying by 30 to 60% are paying by cards. And that's quite reasonable when you look at it, when you look at things compared to what this first slide that I showed you, where people are saying cash only, we'll charge you more, all that. So interestingly, organized retailers or brands or larger retailers or even small or medium, but the organized segment are still receiving a decent amount of card payments. And then 40% of the organized retailers accept other forms of digital payment, which means be it a mobile wallet, be an online transfer, or even mobile banking. So in addition to accepting card payments by POS machines, they're also receiving digital payments in other modes as well. It's still a small proportion of their customer payments, but they're still accepting them, and there's still some segment of customers who wish to do that. But I would like to add here, when we're talking about 30 to 60% payments, interestingly, and this is, I think I'll come to that a bit later as well, is women's wear brands and supermarkets still report digital payments or card payments on the lower side. So 20 to 30% are card payments. And there's a reason for that. One of the reasons is that less females have cards, and I think it was being talked about earlier as well, as a reality we've seen it. Less females have cards in Pakistan, are not issued cards. So, and a lot of them are carrying cash or given budgeted cash. I'll move quickly so that we can discuss this as well later, one-to-one. So but at the same time, a lot of customers are paying in cash, and that's because they don't have access to cards, especially women. They don't want their spending to be recorded, and they're afraid of fraud or errors. And why do retailers prefer cash payment? This is an important point. We were talking about taxation earlier. That's a reality. I mean, if you still have 20-30% of your customers who are coming to pay you in digital payments, a lot of retailers still prefer to receive cash payments because they have to make expenses and purchase and their payments in cash down the line. And they don't want to wait for funds also to be received. 1 to 2 days it takes normally. This is an important, I just want to talk about this a bit. So, as I was talking about earlier, on the left side you see the sales coming in through card machines, you'll see cash coming in, and you will see no checks. So a lot of digitalization in terms of payments is happening on the sales front. But when you go down, their payouts are mainly by check. And what is the reason for that? And digital payments are relatively very low, and cash is also there. Why do retailers prefer check payments? They give them more controls from their perception, from a retailer's perception. They give them more control because they have signatures and other controls in place, but also post-dated checks are a big sort of use for retailers. It's like a promissory note. It's like a guaranteed deferred payment. We don't have, I don't think, a digital solution for this moment, but this is a reality for a lot of businesses in Pakistan. And secondly, a lack of trust in digital payments being processed accurately and having issues there. Yeah, just 2 more minutes, please. So we talked about cash, tax issues. Online banking usage is increasing, but it's not at the level where it needs to be. And what was talked about earlier as well, I think Dr. Ishrat talked about this, was financing. Now, retailers are mostly out of the financing space, especially when it comes to collateralized financing or secured financing. This is a big opportunity, and where we are seeing a lot of informal lenders in the space, and of course, a lot of people are using their own equity. Now, just 1 more minute. These are the top banking products and services being used by retailers. The POS machine, as I mentioned, internet payment gateway, IBFT, RTS transfers, corporate credit cards, international remittances, and auto financing. So I wanted to share this with all of you and those who are left. Then we are always winners in this space. So based on the feedback we've gotten, these are top 4 banks that retailers are working with. This could give you a clue as to which ones are actually working hard in this space. I'm sure other banks are doing well in other spaces as well. But interestingly, these are the 4 banks that are doing very well here. And there's no real issue in terms of conventional Islamic, which is what we talked about earlier in one of the panels. That's not an issue either. So I won't get into this too much, but simply speaking, there are many opportunities when it comes to non-card payments, because there are a lot more accounts, mobile accounts, and so on. Taxation is an issue, especially on the MDR side, and the rate is an issue. And integration is needed. Post-dated checks, as I talked about. Collateralized lending against stock and finished goods is a need from the banks. Online banking needs to be better. And branches don't promote banks' digital offerings a lot of the time. And generally, there should be digital submission of documents and simplification of procedures. So thanks a lot. My time is up. Thank you very much.
Thank you, Asfandyar, for giving us an outlook on the retail industry and what they expect of banks. And now for our final presentation of the day, Gen Z in banking, social media preference and usage in financial institutions. So we will now call upon our moderator of the day, who is now the main speaker for this discussion, Mr. Mir Najib Rahman, CEO of Expense Pakistan. Welcome back on stage, Mr. Mir. In the meantime, if you haven't done so already, please do fill out your feedback forms. It will be very helpful for the organizers in improving for the next edition. Who has not filled out their forms? Oh. Okay.
Thank you. I think we have a fraction of the crowd that was present earlier today. So I'll try to make it as quick as possible and hopefully retain your attention to this presentation. I'll try to make it as quick as possible. So it's not more about Gen Z, but general, how social media is impacting, especially in the digital landscape of the country, how it is being used. So this is, obviously I have some global statistics which I will kind of pass through. I would be more interested in showing you the local Pakistan perspective because, the data is a bit sketchy, but we have tried to get it as, much as possible. Before we start, just to grab your attention, there's a little exercise I want to do. It won't take more than a minute. When you read this, tell me how many A's you see in it, the letter A. I'll give you 30 seconds. There's a prize for the right answer. Letter A in this slide. Okay. Who said 12? Said 15? 15 is the right answer. I said on the screen, not on the not the text that I wrote, but I said on the screen. Anyway, so good. Anyways, quickly moving on. I'll jump into analytics. I've tried to cut the presentation short. So in terms of regional preferences, blue is Facebook. Clearly across Pakistan, India, Bangladesh, Sri Lanka, larger percentage of the population is more inclined towards Facebook as compared to Twitter or some of the other media. Obviously, in some markets, YouTube is higher and so on and so forth. But largely, if you look at it, Facebook is the main driver. Also, based on the device usage, desktop versus tablet or mobile, I think, hands down again, mobile is the largest, has the largest market share for social media viewing. And I think that's pretty much prevalent in using, banking as well, mobile banking and all. So, Pakistan Advertisers Society just ran a poll. It may still be running, but I pulled up the figures from there. which platform does your organization mainly use to promote their product and service? So this is purely Pakistan. Again, more than 76% of the respondents went for Facebook, and then so on and so forth. Surprisingly, TikTok is hardly, no one uses TikTok for some reason. As far as the people who are, the organizations are really not marketing on TikTok, which is quite surprising. When we talk about Gen Z and the younger lot, I think TikTok is now really gathering steam. And what is your organization's main goal for digital marketing? Majority are going for brand awareness, then product purchase, lead generation, and then web traffic. Total number of mobile devices is still, we don't really have an exact figure, but based on the data that I have tried to gather, whatever it is, 56% that is clear is the other smartphones, and 44% are still feature phones. So 44% is a huge number, and the estimated number of smartphones are now 57 million in Pakistan. It's anywhere from 46 to 57 million, depending on what data you look at. So per 100 adults, there are approximately 120 million adults in this country, age 18 years and above. So there are 47 smartphones per 100 adults in the country. And when it comes to number of mobile banking users, per 100 personal banking accounts. So there are close to 60 million banking accounts in Pakistan. And so there are 21 out of 100 personal banking accounts are, using mobile banking. 60 million. Now, this is according to the Pakistan Telecom Authority, their figures, that social media, the top 10 social media and video protocols by bandwidth. So that means that 56% of social media, bandwidth is being used by Facebook, followed by WhatsApp, Snapchat, and so on and so forth. And in terms of video protocol by use of bandwidth, obviously, because it's all video, so YouTube and then the others, and TikTok is now 16% and so on and so forth. Now, I did a quick survey of what is being really spent on, in terms of the revenue that a bank earns in Pakistan, what percentage of that goes to marketing. We don't have any distinction between digital marketing and normal marketing. That's, they don't report that. But just to give you a figure, for instance, the highest, and it's the last column, marketing spend as a percent of income. So 2.7%. HBL spends the highest in terms of marketing, in terms of income. So 2.7% of the marketing budget of revenue is their marketing budget. So you can clearly say the average that these main banks spend is 1.14%, which is, in my view, very, very low. If you look at what's going on in the world, the red line shows you the North American and European perspective, which is over 10% of revenue is allocated to marketing, and in our country, right now, the banks are, hovering below 3%. So that clearly shows that, there's a lot of, room for improvement or looking at digital marketing to really, capture the new segments and so on and so forth. So I mentioned that as per State Bank, there are 60 million personal accounts as of December 2022. And social media subscribers or followers are approximately 22 million. So that still shows that even though there are 60 million personal accounts, this is, you can, there is duplication and triplication because one person can have 2 or 3 accounts. But if just assuming that one person, one account, so there's a huge gap in terms of social media subscribers. Now, these are the subscribers who are subscribed to the bank's Facebook page, Twitter account, Instagram, page, and so on and so forth. So this is that number. So all commercial banks, microfinance banks, electronic money institutions, mobile wallet, Telenor, Jazz, and so on and so forth. 75% usage is again on Facebook, and followed by LinkedIn, surprisingly, and then the other media. Mizan Bank, as collectively with all social media like YouTube, LinkedIn, Twitter, Facebook, Instagram, has the highest number of subscriber base, close to 3 million. So they are doing something very well with their digital marketing and using the social media effectively as compared to some of the other banks. And so there's just a list of other banks going all the way down. So clearly, I mean, we can see a lot of banks are not really utilizing the social media because I'm not sure why, but there's really a lot of room to do that, depending on their client segments and so on and so forth. So again, Facebook is again over 13 million subscribers or likes, for the banks. So this is microfinance. Now, interestingly, microfinance banks, I took all of them, all 11 of them. Here, for some reason, LinkedIn seems to be the preferred choice for some reason, as compared to Facebook. So this is an interesting phenomena, and that too for a microfinance bank. So that was very interesting. Like, look at Telenor and Khushali and Finca, and even Jazz. It's very, very high. And then similarly with if I just look at the telco banks, EasyPaisa, JazzCash, and UPaisa, EasyPaisa has the highest in terms of subscriber base, close to 2 million, followed by Jazz and UPaisa. Even though they have millions of customers, so it's still a very, very small percentage or small number that is using these social media platforms. If you look at EMIs, which is SadaPay, NeaPay, and Finja, again, surprisingly, LinkedIn seems to be the more used one, or where they have more subscribers, followed by Facebook and Instagram. Quickly, this is the YouTube following. So these are the number of actual subscribers based on the data I collected on 25th of October. So almost 40 million views per day for HBL, followed by JazzCash and EasyPaisa and so on and so forth. And the list goes all the way down to some which are almost negligible. So obviously these banks are utilizing YouTube very well to engage with their customers and highlighting whatever the products and services that they wish to do. So in the end, so I've cut it very short, but I just thought I'd share those statistics. These are all the banks that we took the data from, from the social media platforms. So almost 43 banks and EMIs and microfinance and so on and so forth. So it's obviously a good representation of the entire banking sector and the EMIs, how they're using social media. So that's it. So I won't take any more of your time, and thank you very much.
Thank you, Mr. Mir Najib Rahman, who has been an incredible support for us today, moderating 3 panels and his own presentation. Thank you very much. And now, Mr. Hamza, if you can please join me to give out the last tokens of appreciation to Mr. Farhan Niaz. Come on up, sir. A fantastic presentation on CX. Generation CX, is that something or? Congratulations, Farhan. All right, and next up we have Mr. Asfandiar Farouk. Thank you very much, gentlemen, for your support. Group picture? Everyone? Mr. Steve. Mir Najib? You are requested for a photo, sir. All right.
Take it over from you. So, folks, we have come to an end to this conference, and while the formal announcement will be made by our ace moderator, Alexandra, I would like to take this opportunity to express my profound gratitude to the one and only Alexandra for being here or for keeping us, engaged and energized throughout the day. Yeah. She very well deserves this big round of applause. Thank you. And so I now would like to give away a token of appreciation from our side, from TerraBiz, and we hope that our foreign speakers, Alexandra, even Nyuki, Farhan is here after 25 years. They will be coming back to Pakistan more often. Thank you. So I give this memento to Alexandra. Thank you.
Thank you very much, TerraBiz, for putting this wonderful platform together, a fourth edition of the Digital Banking and Payments Summit and Expo 2023. We shall see you again tomorrow. And thank you, UBL, for supporting such constructive conferences and activities. And of course, Mashreq Bank, Euronet, BPC, Innovative, TPS, KPMG, and all of the other incredible partners. I hope there's still ice cream outside. I'm not sure, but there is. All right, ladies and gentlemen, thank you very much. Good night.
The speakers who are left in this room are kindly requested to come up on stage, and the team TerraBiz would like to have a picture with you. So Evans, Farhan, and Ubaid, could you please quickly gather our team members? Naeem bhai, thank you, but I will see you at the tea. You are not leaving.